All right, check. We are live. It is 7:30 a.m. Eastern on Friday, January 12th, 2024. It is PPI day, Producer Price Index at 8:30 a.m. So we will prepare and get ready for that. It'll be a banger just like yesterday's CPI. Yesterday was a wild day. Ended up taking one trade for essentially break even. It was the Russell 2000, went short, didn't like what I was seeing once I was short, closed the trade out, lost $30 plus, a few dollars in commission, basically a break-even trade. And when I look back at it later, I made the right call closing that trade. Well, I made the right call regardless because I traded the system, but it ended up going higher. So that's the way I like to trade and manage my losses is if I'm in a trade and I don't see it cooperating, I close the trade and I move on to the next one and I don't force the issue. Now, do I sometimes overtrade, make mistakes? Of course, we all do that. I'm just saying, generally speaking, I try to follow my plan as objectively as possible and trade the charts objectively that are staring me in the face instead of trade what I'm feeling. So yesterday I was feeling and I wanted the Russell 2000 to drop and I picked a pretty good temporary entry zone. But the Russell wasn't dropping. So I had to accept that reality, look at the charts objectively, and I decided based on my OMA methodology, the 15-minute chart was not behaving as it should have. So I closed the trade, and I'm happy with that. So that was sort of the summary from yesterday. And heading into today, it's going to be another wild day. And the reason for this, and the reason that I haven't really taken any trades this week, except for that trade yesterday, and of course, there would have been a nice trade on Monday with Platinum. But those really would have been my only couple of trades this week. As it is, I've only taken one trade, that Russell trade I just described. And the reason for that is if you look at the weekly chart here on the S&P 500, right here, do you see how this is the weekly chart, right? I just want to bring something to your attention. And I think I went over this a little bit yesterday, but let's go over it again. The weekly, here when you're in congestion, it's not so bad. Here, you're kind of trending down, an orderly pullback, trend continuation. That's not so bad. Here you have a really nice trend run to the upside that we got heading into the end of last year. The most challenging times are going to be when you get these violent congestion entrance moves and then they don't follow through. Instead, they reverse back the other way. These are very, very challenging weeks. And I'm aware of that because I used to lose a lot of money during these weeks. And when I was reviewing my trades, I realized over time, hey, it's better to exercise extreme caution during these weeks. Don't worry about all the trades you might be missing. Instead, focus on the money you're saving by not getting sucked into, poor quality trades. So it's really important to be able to recognize what type of market we're in. And this has been the type of market, not only for the indices this week, very, very choppy, very messy, but also if you look at the bonds, gold, silver, the dollar, all the major markets right now are looking for the next clue on where to go. And I prefer to just let them make their decision and then start taking trades when there's low-hanging fruit. So that's why I'm being patient and I will continue to be patient. Let's go ahead now and jump on over to the NASDAQ. Before we do that real quick, you can see here on the ES, again, where we're closing right now, we do have the daily chart here, losing a little bit of steam to the upside. So if I had to pick a direction today, I would pick down, especially if PPI producer prices come in hotter than expected. But look, with this market, we really just don't know. There's a lot of support here still. And there's a lot of resistance. We're stuck between these two support and resistance levels. Again, you've got all this resistance on the weekly. You've got a lot of support right now on the daily. They're fighting with each other. That means dangerous conditions. So today is going to be another tough one. I can already see it. So it's good to remind us that we take, work patiently, don't force the issue, and just let the market come to us. So that's the way I'm going to play it today. It's not an aggressive day for me today, but we will be here to see if anything sets up nonetheless. And, we'll see. I have a feeling it's going to break one way or the other. So if we start to get into a bit of a move up above 48, 40, and it looks like we're going to squeeze higher, sure, we could take advantage of that. If it looks like it's falling out of bed again, we can try and take advantage of that. But I really just don't want to, get stuck trying to trade in this range here. You can see this is the fat part of the composite volume profile here. So this is where you get chewed up and spit out. So got to be very careful. So no clear pattern really on ES. And with that said, let's just go over to the NASDAQ, because we will put together all the charts and get a bit of a sense of what's going on by looking at bonds, rates, the dollar, gold, silver, all these different markets and connecting the pieces. So here's the NASDAQ, just to quickly, reiterate. You've also got, even though you've got strong yearly and quarterly resistance patterns on the ES, the NASDAQ, the monthly, it's not really clear. You have some resistance here for sure, but, right now you've got a lot of support at the near low. So you're wrestling here between monthly resistance and support. Same thing on the weekly, same thing on the daily, and that's why you're seeing this big mess. Overall, though, I'm going to remain bearish overall until, we'd have to firmly break through these highs at 17.2 and stay above there for me to, turn bullish. It doesn't mean that I won't change my mind day by day as we see the market unfolding. But for now, with this current weekly setup, if we close anywhere up in here, that's going to continue to confirm strong resistance into 17,000. But we don't know what's going to happen until we get the close today. So let's see what the price action today gives us. This is a little bit of a tricky pattern here on the daily. You're still trending up on the NASDAQ. But this could be one of these sneaky patterns that closes near the high and then flushes back to the downside. Kind of looks to me like that's what we're going to see. But we won't know until things kick off. Important to note, outside bar here on the NASDAQ. So, that's why I knew yesterday to be careful, because we were trading an outside day right after the CPI. And now today you can already see, we're just kind of stuck in this tight range awaiting PPI. So again, same as the ES, I expect a wild and challenging day on NQ. And we just need to be aware of that. And this is really important, because if we know that we expect a wild and challenging day, before the session even begins, that's a big advantage we have. We get a good sense of when are the right days to really push it, use bigger size on our trades, be more aggressive when we're thinking about getting into trades or not. Those days do come. And when they come, they're a lot of fun. But, in order to have your capital, your powder dry for those days, you need to not get killed during these types of days. So it's really important. It's not about the money you make. It's about the money you don't lose. Thanks to Larry Pesavento, or whoever said that way back when. It's a great, great quote. And I'm always going to remind us of that quote every single day. Super important. All right, so let's go ahead now and look at the Dow. So the Dow is the same thing. I want to just bring this to your attention, you guys. Here's the daily chart on the Dow. I mean, look at this, right? I mean, you got daily resistance here. You got daily support down here. You're just trapped in this range. And this is just a wild shit show on the Dow. And you can see that here on the weekly Dow. I mean, this thing is a mess. So I'm going to be staying away from the Dow today. And again, I have to continually reiterate, if something crazy happens with PPI and we're off to the races one way or the other, obviously we're going to join the party if we get some clarity. But right now, as long as we stay in this range, safety is the main priority here for me. And you can see on the volume profile, I mean, we're right in the fattest part of the composite. And this is not a good place to trade. That reminds me, that trade we took yesterday on the Russell as well, when I was reviewing it after the day it closed. Another thing I didn't mention, one reason I didn't like that trade, once, we were in it for about 20 minutes. We gave it a chance to develop, maybe 15 minutes, something like that, the first 15-minute bar. And it was because I was really shorting against that low volume area on the daily profile. And if it's going to remain a true low volume area, it needs to reject price quickly, right? And it didn't. You could see price pushing higher, and you could see more volume filling into that area. And that gave another clue that that low volume area that we were betting on for rejection was not going to end up staying a low volume area as the volume profile was developing. It was filling out as price was being supported. So the volume that was coming in was buy volume. So we could see that when we looked at ES and NQ, we saw them heading higher. We didn't want to hang on to the Russell, but there were a lot of warning signs flashing to get out of that trade at break even, which is fantastic because it's just a good example of how you can manage your risk using the warning signs that are flashing if you're able to stay objective while you're in the trade and not trade your feelings. Instead, trade the charts in front of you. And the volume profile gives a good clue of that, in addition to everything else that we talked about with that trade. So that was really important. Volume profile is helpful. And especially, I talk about this in the volume profile series on the channel. You've got to use the volume profile live as it's changing. You can't, everything in trading is fluid, right? So you can't just say, oh, there's a low volume node there, I'm going to just go short and, you know, walk away and everything will be good. Because you need to watch and see if that low volume area stays low volume, right? The same thing with all the other parts of the volume profile. You'll constantly see the point of control shifting back and forth. You'll see the value area highs and lows shifting back and forth. And you'll see that on the weekly charts as well. So these are really important things to look out for throughout the day. And these are the things I'm trying to bring to your guys' attention as we're trading here together. All right, let's look at the Russell here as we finish off with the indices. Remember, we go through the indices, we go through bonds, we go through the metals, we go through the FX market. We want to get an overall idea based on the inter-market correlation of what we expect, because everything's being driven by a combination of factors. There's no one size fits all. So here's the Russell 2000. As I keep mentioning, and I'm going to continue to mention, I'm the bearish on the Russell out of all the four of the major indices. So we don't need to rehash it here. We talked a lot about this yesterday, but there's a lot of monthly resistance. You got a really clear pattern coming in here on the monthly. I do expect us to be cycling back down here to about the 1800 level this month, which means the weekly would have to reverse to the downside, which we're in the process of doing. And if you notice, it's the only weekly chart here that hasn't been able to get back up anywhere near last week's high. And there's a reason for that. It's the weakest of the four indices. So with that said, what do we expect for today? Well, it's another, it's not a clear day. You've got, until this weekly decides to really get going to the downside, I'm going to wait. So yesterday, one of the reasons I went short the Russell is because just before that, we were breaking lower. And I thought, all right, this could be the break we're expecting to the downside. Let's try and short a retest of resistance. We had a lot of reasons for why we went short where we did. So we were definitely giving ourselves a good chance in the event the Russell was ready to roll over and start breaking to new weekly lows. It didn't do that, but you've got to put yourself in a position to be in that trade in those moments when you think, you're going to expand the weekly range. And those are, generally speaking, the types of trades I'm looking for. I'm not interested, in being in a trade, let's say on ES, where I can get, 5 points. You have to take way too much risk, in my view, to try and go for 5 points or 10 points. I like to try and go for more than that when I can, because you almost always have to put the same amount of risk on when you're day trading, right? You've got to put your stop behind a pretty important level, which on ES or NQ, it's going to be a ways back. So you've got to accept that initial risk on the trade. So you might as well wait patiently for setups that are going to give you a multiple on the payout in terms of the risk that you're taking. So that's why I'm not a big proponent of scalping or just taking trades that don't look like they have a big payout. I know there are periods where that'll work, but you want to get something that's going to work year after year and pay dividends in the long run. It's better to be patient and wait for your setups. All right, so the Russell, we can see here just dailies in congestion action, not a lot going on. We'll see what happens. It's going to be a messy day. So the indices, what's our summary today? After going through ES, NQ, YM, and the Russell here, all four indices continue to look messy. So we're just going to start the day relaxed. We're not in a rush to jump in on any of the indices. Okay. So now let's turn our attention to bonds. Maybe bonds are tipping us off to something. We'll start with the 10-year. And the 10-year has a pretty nice, I'm liking what I'm seeing here, popping up on the daily into this resistance level here, right on the weekly. So the 10-year here looks weak to me. If the 10-year looks weak, what does that mean? Rates, should continue to head a little bit higher. So this should probably weigh on the stock market, but the stock market does look messy. So I'm probably going to, stay away from the stock market mostly unless something sets up. But here on the bonds, we've got a very clear pattern to look for shorts today, at least on the 10-year. And I haven't looked at the 30-year, the ultra bonds yet, but we'll check on those here in just a moment. And I'm guessing they're going to be the same. So the bonds are looking today like it'll probably be a good trade to look for shorts in the Treasury complex. And this is why it's important to cover all the major futures markets, because, just because it's a shit show over on the indices, doesn't mean that you don't have clarity on bonds or metals, right? So you want to try and find the market that has the most clarity and then take advantage of that market. So yeah, the 30-year Treasury bonds here are looking really nice to me. Coming out of this, we finally tested up to that daily resistance zone And all of the things being equal, I do think that today we should cycle back down to the low here of the range. So bonds are going to be really, a point of focus for today from the short side. Let's look at the ultra bond. That'll be similar. So looking at the ultra bond here, this is also the same thing with the ultra bond. What we can see is that we're probably going to be cycling to the downside as well. I'm liking bonds today a lot. Let's look at gold. Gold is looking, continuing to look messy here with gold. It's probably, this is why bonds are dropping. Gold should be following, and I'm thinking immediately, why is gold not following? Of course, the US and the UK are dropping bombs on Yemen. So, obviously there's a little bit of a flight to safety here into gold. This usually happens when a new war is, breaking out. So gold's catching a little bit of a bid on that war. But remember, it's cross currents, because with bonds dropping, rates rising, that's going to be putting downward pressure on gold. And now you've got the war in the Middle East breaking out. So gold's catching a bid. You got cross currents in gold. What does that mean? It means stay away from it, because there's no clarity right now. So gold will probably not be a market that I'm going to focus on today, but we will check the hourlies, just to keep apprised of what's going on. Let's look at silver. So far bonds are looking like the clearest market. Silver, I'm definitely probably going to stay away from today as well. You can see it's kind of similar to the Russell, where you had that breaking down yesterday, but it just got picked back up, and now we're pushing a little bit higher. And you're stuck in this super tight range with silver. So you don't want to trade silver when it's like this. You want to trade silver when it's like this. It's moving. This is when you're going to get the best opportunities on the intraday charts, is when the daily is giving you clear directional signals and you've got a good read on the weekly, the monthly charts, etc. So gold, silver today, not clear. Let's look at copper. Copper is, I'm guessing, not going to be super clear either. Yeah, we got a little bit more of a downtrend going here on the daily for copper, and the weekly chart, is quite weak on copper. I'm not as against shorting copper. It just looks a little weaker than gold and silver at this time. So if I was to see a good pop on copper up into these highs up here, I'd be game for shorting it. So we'll keep a little bit of an eye on copper. Let's look at platinum. Yeah, platinum, I've been watching platinum pretty closely throughout the day. This week, some of the good shorts on platinum have been during the London session. I don't trade the London session because I've got to keep my energy ready to go all day in New York if necessary, and I've got to pick one or the other. I can't do it all, so I don't do London. And this week, it just so happens that platinum has given a couple of good trades during the London session. Kind of started the trend we're seeing in New York, and it's not been pulling back really. But today, maybe it will. We'll keep an eye on it. The weekly is. You see, platinum here on the monthly is already leading to the downside. This is where I think gold and silver are likely to follow. I think you're going to see the Russell look like this by the end of the month. So I think platinum's leading the charge to the downside right now. If we were to get a big pop on platinum, anywhere up into that resistance level up here, 940, 945, I think platinum is definitely okay to look for from the short side. Let's look at crude oil. Now, we stayed out of, crude has been incredibly volatile. It's finally starting to break out now after the US and the UK have committed to, joining this conflict in the Middle East. They're going after the Houthis in Yemen now. So crude is catching a bit on that. And what we can see is, given what's going on in the Middle East and crude finally starting to, sustain prices above 73, dare I say it's a bit safer today to look from the long side for crude. So that's what I'm going to be doing. Yesterday, I don't need to rehash it, but we avoided, just by patiently waiting. I was open to longing crude yesterday because, again, we have a good monthly pattern on crude. It looks bullish. It should be bullish. It just hasn't been reacting to news the way we've been, thinking it should, which has kind of been giving a little bit of warning signals. But today it is heading higher, and we'll keep a good eye on it. But yesterday, the key level that I was looking for, if I remember correctly, I think was it 72.50, something like that, 72.80, I think. And that was the level. I thought, okay, well, 72.80, 72.70, if that level closes, because you had the weekly point of control there. I'm just thinking you had a lot of OMA support there on the hourly chart. You had a lot of stuff there. So I thought if crude pulls back, gives us a good OMA pattern, I'm definitely open to longing there. And then we just watched and we waited, and we could clearly see the signals that that support was not going to hold, and crude ended up going down and through it before ultimately coming back above it. But I think stayed out of a good trade there with crude. But today we will look at crude from the long side. Let's go ahead and look at natural gas. And nat gas, you've got yeah, I keep talking about this. This weekly bar here on nat gas is just a little strange looking. Still looks bullish to me on the daily. So I think this daily trend run looks now pretty consistent, and it looks like we're probably going to push higher. So I would be open to longing natural gas today. Yesterday I was a little uncertain on natural gas because I wasn't sure if the daily was going to try and enter congestion or not. Turns out it didn't. And not only that, but now we appear to be, pushing higher, not really in a hurry to enter congestion down. So I think natural gas at this exact moment, if I see anything really good down into support, I'd be interested. Not really a market I trade very often, but it's one that we'll keep an eye on. All right, so let's just quickly look at the euro, the pound. Don't spend too much time with all the FX because I don't trade them that often, but I want to know what the dollar is doing. That's really the primary importance. So here on the, it's good. You can see on the daily, really similar pattern here on the euro that we're seeing on the stock indices. So I want you to imprint this right now. Imprint that, the way that looks right there. And now just remember what, let's say the S&P. Let's go to ES. Load. You see? Almost an identical pattern, right? So if the dollar is going to get strong against the euro here, right? Meaning this is going to head down, which right now it looks like it probably is going to cycle back down to these lows, meaning a stronger dollar. What does that mean? Maybe PPI will come in hotter than we expect, right? Just like CPI came in hotter than we were expecting yesterday. So if we see a 1-2 punch, hot CPI, hot PPI, it's looking today like bonds are going to, go down, rates go up, strong dollar, pressure on the stock market, and then gold and silver just kind of in between because they're getting a little bit of, especially gold, getting those war safe haven flows, but they're also getting the high interest rate, strong dollar down flows. So that's why I don't want to trade gold today. So it looks like a strong dollar here so far against the euro. Let's look at the pound. And looking at the pound, what we can see here, oh, very nice. I like this resistance pattern on the pound. I like what I'm seeing on the daily. You can see that on the composite here. That low volume area is rejecting price nicely. Probably headed back down to the lower end of these lows here. This low volume area on the composite. So the pound looks like it also wants to be weak against the dollar. Let's just quickly, we don't check in on the, let's look at the Canadian dollar so we can get a little bit of a better sense of oil. That's important, the correlation there between the loonie and crude oil. And then we'll also look at the Australian dollar just because sometimes we get a little bit of a correlation there with the stock market. So today we'll look at a couple extra symbols. Let's go look at the loonie. This is the Canadian dollar. But yeah, you can see it's a little bit more supported, right? It's because it's, it can be connected to oil. If oil gets a big lift, the CAD sometimes can benefit from that. But I'll tell you, the monthly chart here on the CAD does not look good for the CAD. It looks like the dollar is going to get stronger. Yeah, so I think the CAD's going to be also stuck between, probably be getting a little bit of positive flows from if oil continues to stay elevated, but it's going to get weighed on because of a stronger overall dollar today. We're not going to trade the CAD, but sometimes it's good just to check to see if it's tipping us off at all. Let's go ahead and look at the odd. Our friendly neighbors to the south, the way south. All right, here's the odd. Look, just a messy day. So I think this is also just telling you, the stock market's also very messy. This could go either way for the odd. Very messy. All right, let's go ahead and just kind of let's look at Bitcoin. Always curious. I don't trade Bitcoin really, so I have to I'm open to it, but I got to get more in the flow of checking in on it every day. I kind of don't care about Bitcoin, and I'm going to try to start caring about Bitcoin because I know people like it, and I think it will be around to stay. We got the ETF getting approval. Yeah, we checked this yesterday. The yearly, the quarterly chart's looking pretty bullish for Bitcoin right now. Monthly is certainly in a strong trend run to the upside. Looks like the weekly's trying to break out of this congestion zone. We'll see. Yesterday, that's not a good sign. just got smoked at 49,000 on big volume. So again, just back into this range. Not really seeing a lot of clarity today on Bitcoin. Not a big deal. We don't trade it anyway. So what does all this mean? You know, we just went through all these charts. We spent about 25 minutes doing it. Why do we do this? Because I'm trying to, number one, get a sense of what the overall market looks like heading into the day. And number two, is there any potential lower hanging fruit? Well, the answer today is that I think so with bonds. They look like they're going to be a good market to focus on from the short side, because we have some, you know, really good levels there on the weekly, good resistance levels that the daily has now popped into and is coming down out of, confirming, yes, that strong weekly resistance level that we came into the week thinking would be strong. It is strong. Daily's now confirming it. These are the moves we want to take. You want to catch those trades that are coming out of key daily, weekly levels that are in agreement. You don't want the weekly and the daily levels fighting with one another. That means lack of clarity, and that's where you're going to get, you know, chopped up, which is what we're seeing on the stock indices right now. So, and gold and silver. So we got bonds. Bonds are what I like. Let's go ahead. We'll quickly do the 8 a.m. check, even though, you know, really I'm interested in what the 8 a.m. bar looks like, because it'll be the most recent hourly bar heading into PPI at 8:30, right? Because we don't get the next hourly bar till 9 a.m. So bonds, again, are the ones that I'm interested in. So that's what we'll keep an eye on when PPI comes out. And because I like the short side a lot on bonds, if I see a good, you know, level up above price on bonds heading into CPI using the hourly chart, the daily chart, etc., then I might throw an order in at that level on the off chance that it punches up, fills the order, and then gets slammed down during PPI. I will do that sometimes at the stock market open and on news releases if I have a very clear read on the day. Today I do with bonds. So we'll see what we've got shaking. I think that's going to be exciting. Guys, I'm looking for a trade. I would love to have a trade today, right? This week has just been, you know, not much going on. I'm very happy to not have lost any money on the week, but, you know, I don't get paid by sitting here flat all week either, right? So, you know, when you do this for your livelihood, that's also another, you can't get too, you know, you got to remember that the money you make is not, it's not like a linear paycheck where like, okay, I'm going to make, you know, here, like all these things you see out there on YouTube, I'm going to make $300 a day. It's like, no, you're not, because trading doesn't work that way. You have to wait for the days where the market is bringing you the money on a silver platter and making good offers that you can take advantage of. And some weeks are a lot more opportune than other weeks. So I say all that because I would love to have a fantastic trade on the bond today and the week on a positive note. But then again, we're not going to force the issue. We'll see what trading gods want to give us when PPI comes out. So that is the forecast for the day, you guys. Let's go ahead and turn our attention over to the hourly charts. We'll start with ES, and we're going to roll like this. Let me just go like this here. We'll have the hourly chart up here, and then if and when we need the 15-minute, we'll just kind of bring it over and have a look at it. Otherwise, we'll just put it back. But I like this. We started playing around with this format yesterday. We just went over all the daily charts. I've got them on my other screens. I'll keep track of what's going on there. We want to focus on the hourly. And I think this, you know, a lot of people are really interested in volume profile. And this view of the hourly just gives us a much better overall view of the volume profile that we can keep an eye on while it's developing throughout the day. We can watch the point of control shifting. We can look at the high value areas, the low value areas. And again, I use the volume profile. It's important. When I see everything else that I like, according to my methodology, setting up for a trade, then yeah, I look at the volume profile and say, okay, you know, what's the volume profile telling me about this area where I'm, you know, thinking about taking a trade? And like yesterday in the Russell, we can quickly look at that since we, you know, we're waiting for PPI anyways. But here on the Russell, this was, so here, right here, what we can see is I wanted to get short. So when the Russell was, remember guys, we're trading the hard right edge. That means, you know, we're not hindsight traders. We don't know what's going to happen next. You know, my crystal ball is not here in the office, unfortunately. So we've just got to make, you know, logical decisions and, you know, pick good areas. And so yesterday, looking at the Russell, you know, based on everything we're seeing, you know, when we were firing to the downside here on the hourly chart for the Russell 2000, and bonds looked like they were trying to head lower, right? Rising rates. Gold and silver looked pretty weak at that time. They kind of wanted to head lower. So everything was kind of looking like, all right, we could really start. This could be the break that I'm waiting for, and I'm pretty sure it's going to happen. It just, you know, didn't happen yesterday, but I didn't know that at the time, right? So I've got to trade what I see in front of me. So when the Russell was firing to the downside here, you know, you guys heard me yesterday. I said, I'm not chasing, because I don't chase, because what happens when you chase, you end up going short at the bottom and then you get killed on these types of pullbacks. So I've learned over time, if I miss a trade, I miss a trade. But if I want to go short in a trend run, I wait for a pullback. I try and find a good area. And if the market comes to my level, I'll take the trade if I like what I see. If I miss the trade, I'm okay with that, because there are enough that do pull back that you don't need to chase. And because when you chase, you're just not in a good position risk-wise. You know, where do you put your stop? You know, it's just not a good risk-reward profile, in my opinion. So that's why I don't chase. So with all that said, with the Russell, we wanted to get short right here. I think I called out the level 1963.5. And actually, in the moment, that level did pretty much hold price to the tick for about, I don't know, 15, 20 minutes or something. So I rushed the entry a little bit, got in, you know, and then when I could see the 15-minute chart, right, because we were using the 15-minute at that point, it just, the selling pressure wasn't coming in as I, you know, thought it should have, if that level that I identified as being strong was going to be strong and hold. And at the time, sorry, I feel a sneeze coming on, guys. So if I do sneeze, I'll try and mute the mic quickly here for you. At the time here, let's see, right? If we draw this over to the volume profile, this is really interesting. Yeah, look at this right there. Can you guys see that? The volume profile, this is from yesterday, right? Remember, this is how it ended the day. But when we were going to short here, you can go back and look at the video. It's really interesting. This volume section was like this, meaning none of this volume here was actually there. This was a low volume area, right? So it should have rejected price if our trade was correct and price was going to head back down. It didn't. As I could see that I didn't like what was happening while I was short, now you can see in that moment, all that volume was filling in and it was no longer a low volume node. So really important. That's why I like the hourly chart like this, so we can, you know, pay close attention to the volume profile here during the day. A lot of people are interested in it, and I love the volume profile. It's becoming one of my favorite sort of confirmation tools, and especially on the weekly chart as well. You got to use the daily and the weekly volume profiles together. They are absolutely amazing. So we're going to look at the hourly charts here for the 8 a.m. check for the major markets. If anybody has any questions, let me know. Let's go ahead. Again, stocks. We think it's going to be messy for the day. So let's look at the hourly chart here just for ES. We're not going to beat a dead horse with a stick here. But you can, I mean, you can already see this is ES. I mean, this is just nasty. Don't want to get caught in any of this. You know. Okay, here's a good thing, guys. Not only are we not interested in ES right now, today, it's fine. We got bonds, right? No big deal. But heading into PPI, you know, you've got a really nice inside bar here on the hourly. I mean, this is, God only knows what's going to happen on the back of PPI. I mean, we may see another one of these, you know, spikes up, spikes down, you know, closes like this. It's looking to me like, based on the charts and that on the hourly, that you're going to see something like that. So exercise caution when this announcement comes out. You know, unless you want to go to Vegas and gamble, then knock yourself out and put a trade on heading into CPI. I won't be doing that. All right, let's just quickly look at the NASDAQ. Probably going to be the same. And I'm doing these as well because I've got to load the current hourly data. Yeah, not much there on the NASDAQ. Just load the data here for the Dow. Much. The Russ. So see, we've already done our higher time period analysis. So we're not coming to the hourly chart, you know, looking for trade on you know, these indices, because we can already see that the probability of a really good clean trade setup on the hourly today on all the indices is not high, because the higher time period is not clear. So that's a great way, you know, to stay out of subpar trades and save some money, so you've got your capital ready for the good trades. All right, so now let's look at the bonds, which we are interested in. Look at the 10-year. All right, so here's the 10-year. So this is where we think we've got a lot of daily. This is the hourly chart. We got a lot of resistance here, daily and weekly resistance on the 10-year. So we'll look for some shorts. Let's look at the 30-year. Again, I prefer to trade the ultra bonds because they move the most. You kind of get the most bang for the buck. If you're going to pick it right, you might as well pick it right and be on the ultra bonds that can give you a 20-tick winner, as opposed to being the 10-year that'll give you a, you know, 10-tick winner at half the value per tick, right? That's why I like the ultra bonds. They can be a little bit more volatile, but still a thick market, and they move a lot more when you get them right. And obviously, 99.9% correlated to the 10-year right now anyways. So what I would do, this is how I would structure the PPI trade, right? We're bearish, right? Heading into CPI bonds. So I would just look at the, hourly chart here, and I'd say to myself, okay, first of all, on the daily, if I look back at the daily, I would say to myself, if I shorted the daily, at 123.3 on the daily pattern overnight, would I be happy right now? And the answer is absolutely, I would be happy. I didn't do that, but I would be happy. So if price was to go back up to that area, 123.3, where we currently have a high of the day, would I welcome the opportunity to get short at that area? Yes, I would. Okay, so if we look at our hourly chart, then what we can see is we've got a high of the day here. You can see that's the value area high, right up there at 123 even. We can see on the weekly, we want to look at the weekly volume profile, super important. Again, only when we're getting ready to look at a trade that we actually want to take. I can't process 25 weekly volume profiles, daily volume profiles, and all this stuff for all these different markets at once, which is why just kind of do an overview like we're doing, and then narrow it down to the market that's clean and makes the most sense, which for us right now is the bonds. So looking at the, this is the 30-year. We'll look at the ultras in a second. So we said 123. So you can see here, this is the 30-year treasury bond. This is the weekly volume profile. So, you can see that price has been rejected up here all week in the weekly value area high. What does that tell us? It tells us that we're probably cycling back down below the weekly value area low today, which is also what we're seeing on our weekly and daily charts. So, any type of pop on PPI back up into this resistance level above the weekly value area high, would be a nice place to potentially look to get short. So I might set an order up there before the announcement, and I will let you guys know, because we're going to track every single trade that we take together here while we live stream. All right, let's look at the ultra bonds, because these are the ones where I would actually do it. Sometimes I'll set an order on both, because you never know, one might get up to our exact level and one might not. But looking at the ultra bonds, same situation, heading lower. And I want to show you what can happen. You see, this is a similar situation from yesterday. So imagine yesterday, we had the same idea heading into CPI, right? Let's just say we wanted to get short bonds yesterday. I was still waiting for, I'm bearish bonds overall because I'm bullish rates, right? But yesterday I didn't really have a clear pattern on the daily. So that's why I didn't set an order heading into CPI. But you can see what happens. If you wanted to get short yesterday, this one happened to have an hourly extension right there, which is beautiful. But this is before this even happens, you would just throw your order up here, and this is what the bonds can do sometimes. And if you've got a good read on the daily, the weekly, and you can find a good place to put that order, sure, there's some risk because there's the news, but at least you're putting your order way outside the market, right? So at least has to go there and tag you. And if it does and reverses, in this case on bonds, you get an you get a 2.25 point reversal here on the bonds. That's $1,000 a contract per point. That's a nice move if you can catch it. They don't come along that often. But here, this would be something similar, right? So if we got to push back up above these highs, on the back of PPI, you could see this hourly bar here, right? Because this is the 8 a.m. close. You could see this go way up here. All the selling comes in, it closes back down here, and then, it goes. You can see that. You just kind of have to, use your imagination in terms of what could happen, and do you have a good read on, the overall higher time period charts, which today we do, right? So I may set an order to short ultra bonds up here above these highs heading into PPI. I'll let you know if we do that, because it moves so fast. If you guys saw it yesterday, I mean, it's just bang, bang. That's it, right? So then you got to decide what kind of risk you want to take on those types of trades. So not a good idea to go in and set those orders without stops, not on a news announcement, but you got to be careful because there's no liquidity, right? So, you can have your stop maybe a little bit too close and you get taken out on a winning trade. That's not fun. I'll let you know what I'm going to do. So that's the bonds. And really, we've got about 20 minutes now until PPI. We can look at, even though we're not trading gold and silver today, we'll just, look at, gold's got a pretty bearish hourly pattern here heading into PPI. That's interesting. We'll see how that pans out. Silver. Silver's, not really clear, catching a bid right now. Let's look at crude. Crude didn't move much yesterday on the back of CPI, which is strange. I mean, it should, but it's not really reacting to much right now. Maybe this war will get crude going. Let's see. That's not a pattern I want to take there. So bonds will be the focus for PPI, and then we'll just resume with our hourly checks at 9 a.m. But let's see if we can get some good levels on bonds. On the ultra bonds, to be above that high. On the 10-year, 10-year, I don't trade the 10-year as I mentioned, but sometimes on a news announcement, I have mentioned this before, that can sometimes be the one that I put in because it's just such a thick market. If you pick the level right, it runs into a wall, right? So even a lack of liquidity on the 10-year, it's still loaded with liquidity. So sometimes on the news announcements, the 10-year is not bad. So you can see here, this was yesterday on the 10-year here. Like when it goes through, if you pick the resistance level right on the 10-year here, you can just see that even though it went through 112.10, we pushed up to 112.16. That's a pretty big move even for the 10-year. Yeah, yesterday was big for the 10-year. But normally the 10-year is a little more stable on news overall. That's what I'm trying to say. And the 10-year here is a little closer to the highs of the day. So, yeah, I mean, certainly I really love the pattern here on the daily here. I mean, there's a lot of resistance up in here, and we're right at a ton of weekly resistance. So you can see on the 10-year here, weekly volume profile, right? Just a pretty nice balanced distribution. So now we're kind of getting back down inside the value area high. So let's say, if we were to have one of these, see, this is from yesterday, CPI. Well, let's just imagine that today, it spikes back up just above that high and then, slams back down and closes down there. That's a nice move. That's something that I might be looking for because that's also just above. You can see that daily high from today, which is coming in right here. Because oftentimes the market will want to go sniff out those stops, that are all hiding up there before it gets to liquidity. It needs to reverse the other way, right? Because the way that works, a lot of people wonder, is stop hunting a real thing? Yeah, it's a real thing because there's no, I'll move the daily back. It's not a conspiracy that the bigger players go after stops. Of course they go after stops, and they should go after stops because that's what makes the market move, right? So think about it. On the 10-year here, let's say the big boys, to think that these guys don't have a little bit of, advanced knowledge on what's coming out, I think is a bit naive. Obviously, they probably have a pretty good sense of what's going on, either through their own research resources or just direct connections to some mouthpieces that are kind of hinting to them, hey, it's going to be a hot CPI today. So, wink, wink, get ready for that. I'll see you at the boys club. We'll have our cigar and our brandy later. I'm guessing they get tips like that, right? But I still don't call it a conspiracy. That's just the way the world works. We have to accept it and we got to work with it, right? So if the big boys know that it's going to be a little bit of a hotter CPI number, and they also know because they can really look at the book and see that, a lot of people are short and they've got their stops up here. When this announcement's going to come out, there's almost no liquidity, right? Liquidity evaporates because nobody wants to trade during the news. All the bots get shut off. So if you're a big guy and you know that this is going to happen, you can throw in a ton of orders at the market and smash this market straight up, take those stops, and then meanwhile you can take the other side of the position and reverse it straight back down. It's a great way to clean out the inventory and accelerate the move to the downside. So this happens all the time, and that's why when you trade around the news, if you are going to put an order somewhere, try and think like one of these bigger players might think. Where are the stops going to be? Because that's your best likely for an entry. I hope that makes sense. And Dr. David Paul, who's one of my favorites, God rest his soul, he died recently. Great trader, just great, just all around good guy. He talked about this too. It's something that I've been aware of for a while anyways, but hearing him talk about it as well, I thought, okay, yeah, that makes a lot of sense. And he talks about it as well. Where do you want to enter? Think about where all the stops are. It's a good place in terms of your entry. So that's my rant, you guys. Any questions? I'm gonna have a drink of lemon water. Got 15 minutes until PPI. You want a weather report? It is actually blue sky for once in Sweden during the winter, which is extremely rare. About -3 degrees Celsius, so I don't know, 25, 26 degrees Fahrenheit. Not bad. Snow on the ground. Oil paint. A vlog of. So I think we've got a pretty good lay of the land here coming into the day. Hey, Steven, how's it going? Hope you slept well. It's early there. Any trades for you yesterday, Steven, or did you end up getting through the day unscathed? Well, you let us know how that went yesterday for you. I'm just looking at the charts here. We got about 15 minutes till PPI. This is the 10-year. I like the idea of throwing a stop, a short order up where I think the stops are going to be. So just trying to think about where I want to do that. Do I want to do it on the 10-year? It always is safer to do it on the news on the 10-year just because of the liquidity. You know, like up here, for example, let's say, because I'm a very risk-averse trader. You know, I'll take bigger risks when I feel it's warranted, but generally speaking, I'm a conservative trader, right? Which I think you have to be if you want to be in the game for any length of time. You know, being a cowboy is going to be very, very cool on YouTube for a while, but then you're just going to blow up. I mean, it's just the way trading works, right? You don't see a lot of cowboys in trading. At least you don't see a lot of old cowboys in trading. People who've been around the block a while. So if I want to get short up in here at this resistance level on the 10-year, for example, you know, even though I trade the ultra bond if I'm taking a regular trade, but for the news trade, probably the 10-year, you know, where would I want to get short? You know, probably up near that spike high from yesterday, 112. You got that high there, that high there. If you look at it on the weekly, you can see it a lot better. These are just the naked hourly bars on the weekly volume profile. So there's the CPI spike. There you have that. So let's see, how's the volume looking up there? Okay. I mean, obviously you've got the lower. This is where the volume's been very low here. You can see the profile kind of creeping out, and then it starts to get thicker. There's our point of control here, right? And then it starts to go back down like that. So thickest part here. I like setting an order. Just dare it to get up there through 116. Probably going to set an order up there, but I'll let you guys know. I got a few more minutes to think about it. Just because the daily and the weekly look very bearish. I'm willing to take a bet here on the daily. This is the daily 10-year chart, right? I'm willing to take a bet that this bar that's currently unfolding is not going to end the day up here. Now, could it? Of course, I always have to say that anything can happen, and it truly can. I mean, I really mean that. I'm not just saying that. Anything can happen. So, but you have to play the probabilities, and looking at the daily and the weekly here. This is the weekly chart. This is where you have all your resistance up in here. So I like the idea of trying to short this. And just to limit my risk a little bit, I'll put it on the thickest market, which will be the 10-year. And I'll probably just do one contract. And if it got filled and then I saw that I was right and it started dropping, for sure I would throw on another couple of contracts. But to start that initial order, I would just put one in case it blew through and gave me a 20-tick loss, you know, on the 10-year. I probably wouldn't do that much, but maybe a 10-tick loss is more. On the ultra bonds, it could fire through you and give you a 20-tick loss. I mean, on any of these, it can. But on the 10-year, if you put your order in a good spot, typically, you know, maybe the damage won't be more than 10 ticks. So on the 10-year, that's what is that? That's about $350 on one contract, right? So it's not the end of the world if the news comes out and it blows straight through it. So I'll probably do that. I'll probably set an order up there at those highs with like a 10-tick stop, maybe 12-tick stop, something like that. Again, I will let you know Still have a little bit of time to think about it. All right. Reorganizing our charts. Green. Anybody have any questions as we await CPI about any other markets you're curious about? Yeah, Steven, I don't know what time you joined us, but I talked a lot about the Russell this morning when I started the stream. So if you get a chance, maybe even right now, you got 10 minutes until PPI. Go back to the beginning of the stream if you missed it and just, play it forward at 2 times speed. And you'll hear I talk about the Russell a lot. I'm happy to talk about it, but I already talked about it, so I just don't want to, go off on that tangent again. If you got any other markets or any other questions, let me know. Anybody else has any questions, let me know. Yep, so here's the 10-year. As we get closer, guys, I'll let you know. But right now I'm looking at putting my order, up around, I don't know, probably here like 14.5. Because, we may not get up above 16, right? I mean, we may. And again, I have to always reiterate this. Please see the risk disclaimer, educational purposes. If you do anything, you're responsible. I'm simply trading here, showing you guys what I'm doing. So keep that in mind. I'm gonna set my order probably, and I will confirm just before the announcement, depending on where we are, at 112.14.5, and I'll probably give myself about 10 ticks up to 24.5. So I'll risk probably $350 on that on one contract. And like I said, you never know what's going to happen on these announcements, right? Like it could just go straight down. We don't get filled. It could go up, but not high enough, not fill us. I'm just putting it in an area saying, hey, there's a 5% chance it gets up there. And if it does, I like that area overall, all other things being equal. And the news has a chance to make it go there. So that's where, and there could be some stops up there. So I'm comfortable to take a little bit of risk up there on this announcement. So that's probably what I'm going to do. And then, like I said, I'll probably just use a 10 tick stop. And then if it got filled and started to collapse and head back our direction, for sure, I would add on to it. But again, I will let you know as I'm doing that in real time. But the 10, on these big announcements, the bonds are a much better market to trade, in my opinion, than the indices, because they're a little bit, thicker and more. Well, the 10-year is thicker and just a bit cleaner on these announcements. You can get some good plays if you line up your levels heading into the news. I don't recommend, holding a position just, right into the news. Sometimes it'll work, but then you're just right in the middle of the range. And I like to only put an order way outside where I think it can go from that news volatility, catch me, fill me, and then go the other direction. That's the only way that I'll trade the news. I do not hold positions going into the news ever, because it is gambling. I mean, all the liquidity dries up, and you could be spot on about your daily direction, everything else. You're in a position, you're feeling good, and like all these people that were holding bonds yesterday heading into CPI, they thought, okay, bonds are going to go down. They're short from here. Everybody's feeling good. They're holding their shorts heading into this announcement. They've got their stops way out here, and they think, I'm safe. No, you're not. Sometimes you are, but a lot of times this type of thing happens. And today, even by us putting our order way up here, I shouldn't say us, me putting my order way up here, it still could fly way up and go through and take the stop out. That's the fun thing about trading. Anything can happen. And I do think you'll find a level of peace with your own trading when you do realize that anything can happen. You can kind of breathe a little bit easier, because it's like, yeah, anything can happen. I'm here to just put on the trades according to my system, let the probabilities play out over time. And, that's really all I can do, right? You never know exactly what's going to happen. So it's really important. All right, 5 minutes until PPI. Stretching. Okay, you'll run it back. Cool, Steven. Let's check, see what Zero Hedge has to say heading into the news. Interesting. Now we got protests at Libyan refineries. I mean, if crude can't put on a big move today with war breaking out in the Middle East, you know, even beyond Israel now, we're now in Yemen dropping bombs and they're attacking ships. And now there's, you know, massive protests at refineries in Libya. If crude can't sustain a rally on the back of all this geopolitical tension, then there's something wrong with crude. And that tells you if a market is unable to rally on news that should make it rally, that's a big tip off. So I'm not saying crude's not going to rally, but we need to keep an eye on it because so far it's pretty interesting that it hasn't rallied more than it has. Oh, we've got bank earnings today as well. There's going to be a lot of volatility today. I feel good. We've got a good forecast coming into the day. We've got our feet planted firmly on the ground. We know what we're ready to do. Checking on the Zero Hedge news feed here. In terms of actual market news, I believe I checked, there's only PPI, and there might be something else at 10. PPI is at 8:30. We've got Kashkari, the Fed, is speaking at 10. You know, that'll move some stuff around. Oh, we've got a big, you guys, if we're still around at noon, please don't let me be in a corn, soybean, or wheat trade. There's a big grain report coming out at noon. So keep that in mind for the grains. Yeah, no, so it really is just PPI at 8:30. You got Kashkari at 10 and the grains at 12. That's a big one you want to know about because otherwise you can just be sitting here minding your own business. You see a nice pattern set up on corn, you know, you go short and then a grains report comes out and, you know, you lose $2,000 because you didn't check the calendar. So, I mean, that happens to you once or twice. You tend to, you know, learn to check the calendar, which is why I check the calendar before we start, and then I'm constantly checking it throughout the day just to make sure I didn't miss anything. You know, because you don't want to get burned being in a trade when a huge crop report or something similar is coming out that you could have known about, but you didn't. It's important. All right, we got 3 minutes here, actually about 2.5 minutes till PPI. Let's get ready. I'm going to go ahead and get my depth of market ready for the 10-year. All right. What did I say? I said 14.5. I'm going to set my order at 14.5. And I'm not using a stop. I don't recommend it. I have my mental stop. If I was going to put a stop, it would be 10 ticks at like 24.5. 10-year, I mean, rarely are you going to see the 10-year. Just, we'll see. It's probably right when I put the order live on stream, the 10-year will make an unprecedented move to the upside. But hey, I got to play the probabilities. All right, so I have an order to get short at 14.5. It's a good order, regardless of what happens for me, just because of what I'm seeing across the board here. And we've got 30 seconds till the news comes out. Take a deep breath. I always like to stretch and breathe deeply. Crack the neck a bit. We got 10 seconds. This is going to happen in the blink of an eye. Whatever happens. 2 seconds. There's the news. Orders in. Still haven't gotten filled. Order still in. Not getting filled yet, but order is in. Have not gotten filled. I'm pulling the order. I'll tell you why in a moment. I haven't gotten filled. No trade. Order is pulled. We still haven't traded at 14.5, so I'm flat, no orders. And I'll explain in a minute. I'm still watching. There's a very important reason why I pulled my order. I'll explain while we're waiting. The reason I pulled my order there is because I'm looking for something similar to what happened yesterday. Just a violent spike up, fill the order, and there's so much selling there. You just boom, boom. You get the selling coming in. There still might be some selling coming in here, but the fact now that we're over a minute after the news and the 10 years just sitting, pushing up there, I don't want to have my order sitting there. Let's see now. We got the volume profile here. This is going to be really interesting. See the volume coming in here? We see all this volume coming in, prices dropping, so there is some selling coming in here. Keep our eye on this. So here you can see the volume coming in. Now when that volume comes in, you want to see, where do we go? Do we go up or down? Is this buying or selling volume? According to my analysis, there should be a lot of resistance up here, so let's see. But the fact that it hasn't dropped yet is interesting. That's why I pulled the order. I'm still very interested overall in shorting up here. I'm just, my news trade, I took that off for that particular reason. Let's see what the ultra bonds and the 30-year, here's the 30-year. So 30-year is not quite pushing as high. Ultra is not pushing as high either. The question here is the 10-year leading, or is it going to revert back down to the ultra bond and the 30-year? We're going to have to wait and see. And I'm kind of curious to see the news as well. Let's go ahead and check that. We've got here at the so PPI came in at -0.1 and it was forecast at 0.1, so it dropped. So that's probably stock market positive and bond market positive, but we'll see. It's not a hot, it's more of a deflationary number rather than inflationary. So rates could come down, bonds could push higher, stocks could push higher. We'll see. It's not a huge change, but it's still good to be aware of. I always like to read the Zero Hedge summary when they come out with that. If you guys don't read those summaries on Zero Hedge, you should. You'll learn a lot, and they're also really they really get under the hood with the numbers. You can see a hot CPI yesterday, a little weaker than expected PPI today. There's no clarity. I still like this overall level up here, but I want to see now, how the market responds. We've got about 25 minutes until the 9 a.m. check, which is when we'll put on our trade, if there is a trade, based on the hourly closes. So we'll just have to see where things are at 9 a.m. Let's go ahead and look at the when Zero Hedge posts their summary. I will let you guys know. Let's go ahead and look at ES. Does that make sense, you guys, what I'm talking about when I'm looking for a news trade? And I'll do the same thing at the stock market open some days. I'll put that order, but I'm putting it in very strategic positions. And then I'm watching, I'm not just saying, all right, the order's in, hey, whatever happens, happens. No, it's, you're looking for very specific things to happen. I don't know if that makes sense or requires more clarity. But here's ES. Pushing higher, to be expected on the back of that news. But that doesn't change the charts that I'm expecting. Pretty choppy day. But lately, the market has been, when you got bad news like yesterday, CPI was bad news for the market. And even though the market originally dumped, it recovered pretty nicely. And now today you've got good news. It'll probably rally because this market right now is rallying, on bad news. And then when it's good news, it's like, all right, this is good news. Let's rally. So it's not really going down on bad news. That also tells you something. It's kind of the reverse of crude oil, right? Crude oil is not able to rally on news that should help it. And the stock market so far is not really able to fall on news that should be hurting it. That's just for now. The charts are the most important thing. And now with that PPI announcement in context, I'm looking at the E-mini S&P 500 daily chart over here. We'll see what's going to happen. But with that PPI, with the reaction of bonds, right? So if bonds continue to head higher, which they might, after that number, that means rates could be softening a bit. If rates are coming down a little bit because bonds are pushing up because it's softer, PPI, less inflationary, stocks, may get a boost out of that today. And if we start to see, stocks really ripping to the upside, maybe we'll participate at some point, right? So I'm just coming into the day with the forecast telling you what I'm looking for. But the whole point of watching this all day together is that we see how the market, reacts to news. And we're trading the market that we have in front of us as it's unfolding. So I'm not married to, I just lay my groundwork in my pre-market prep before we get started. So I know what I'm seeing, I know what I'm expecting, and then I come in with, a grounded view of what I want to do, but I trade the market in front of me as it's unfolding. If stocks, and I'm certainly not going to get involved in any of this here, but if we were really to start to rip to the upside and it looked like we were going to just, close up at say 48, we could, if we rip today, we'll see. Here's the weekly chart. We could rip up to 48.60. Definitely possible. You got that OMA extension right up there. So, and if this is what I like to wait for, because if the market's going to be strong, let's say, and it's going to rip up to 48.60, I have no idea, but let's just say that's going to happen, right? Well, 48.15 to 48.60 is a long way, right? So you have plenty of opportunities to take a nice little chunk out of that, but you don't need to try and get in anticipation of it happening. You can just let the market show you, oh, this is happening. Okay, now I want to jump in and take advantage of this. But I like to let the market, show its cards before I step in and take risk, if that makes sense to you guys. All right, let's look at so this is the ES, just pushing higher for now, but still stuck in the zone. Not really rallying in a crazy way yet. But again, off the pre-market forecast, as long as we're in this zone, I'm not interested in doing anything. You guys are free to scalp your hearts out. Good luck. The NASDAQ here, same as ES, but I do think there's a possibility that we could exit congestion through that resistance level and push higher. See? The Dow and the Russell are just the ultimate mess. That's the Dow we're looking at now. Let's look at the Russell. Yeah, the Russell's pushing higher. I do think the indices are going to push higher on the back of that news. And, could be one of these trending Fridays. And if it is, I will definitely look to wait and buy a pullback on the hourly if we get one. If the indices rally, there's a better chance crude will rally. So we might get a pullback on crude. So hopefully there'll be, a good trade today. Good trade or two or three. I'm not going to force the issue. Right now, we just got to see, are they going to break out, right? We're not in a rush. We're going to let the market tell us what it's doing. Let's look, check. So that was the indices. We know what we're looking for now. Here's the 10-year. You can see it's still sitting here. So far, just kind of see, there's still a lot of resistance here, you know? I want to see what happens. It's just, does that make sense to you, Stephen? Where, you know, I'm trying to explain, because this is something I think it's just so important, and it makes so much sense to me, which is why I trade this way, obviously, but I don't hear a lot of other people talking about it or thinking about it. Like, you know, let the market show you what it's doing, and then when it becomes clear, take your trade, right? There's no need to just jump in just because the market is open and moving, right? And I used to make that mistake a lot. Like, I thought, well, because I'm standing at the computer, I have a standing desk, but if I'm sitting at the computer or standing at the computer, I should always, you know, be in the market. Otherwise, I'm not like being productive. And it's actually the opposite. You are the most productive when you're using your brain, which is analyzing these intermarket correlations, what's going on, and then let the market show its colors to you, let it show its cards, and then partake when you think you really have an edge. And again, it still doesn't mean you're going to be right when you wait, but at least you're putting yourself in a good position. It helps to maintain the discipline, the patience. You're not over trading. You're not making emotionally driven decisions, because imagine how many traders have a tough time just because of all the emotionally driven decisions, right? The FOMO, the over trading, just the revenge trading, the greed, the fear, all these things, right? Those all stem from, you know, a powerful emotional state. So how do you counteract that powerful emotional state? Well, you get unemotional. How do you get unemotional? You breathe, you relax, you're not in a hurry, take in what the market is doing, and just let the market come to you instead of you pursuing. You know, I think, to me, it makes a lot of sense, but let me know if it makes sense to you guys. And I think that's going to be one of the, you know, ultimate values that I'm trying to provide here for you guys, because I do this all day, every day for myself. I do think it's fun to interact with the community. And if it helps you, if anything else, just to be patient and learn about the intermarket correlations, you know, that's great. You're going to have a huge advantage over, you know, people who are still trading emotionally. And, you know, a lot of people who trade emotionally don't ever get over that hump. And that ultimately ends up becoming the reason that they fail or stop trading, because it's just too much emotional pressure. It's too much stress. It's too much, you know, it can be. I'm at a point in my career where I really enjoy this every day. It's fun. Even if I lose, I mean, it's not fun to lose, but when you come into each day, you prepare, you know, you can trust yourself. I think it's personal trust. You know that you're not going to sabotage your own trading. You're not going to make emotionally fueled decisions. That's when trading actually becomes very rewarding, because it's more of you're conquering, you know, the battle against yourself and your inner demons and all those psychological traps, you know, that you can fall into while trading. When you conquer those, it's a nice feeling. They're never fully conquered, but they're kind of like, you know, I think the Buddhists have a saying, right, where you tie an ox around a post or something. That's kind of what you're doing when you're exercising patience with your trading, right? You have emotional discipline. You're just, it doesn't mean you don't have emotions. It doesn't mean you don't want to win. Obviously, you want to win, all that good stuff. It doesn't mean that losses don't sting. They sting, but you just have it under control, which is important. So I hope that helps, because I think that's super important. Let's see. I'm just going to read a comment here from Steven. Oh, yeah, it's totally not sexy at all to, I mean, what we're doing right now is the antithesis of sexy. You know, this is not exciting. I mean, I love it. I'm excited about it because I love looking at the intermarket correlations. But, you know, the average person it's like, hey, I want some excitement. Tell me where to buy. Tell me where to sell. I mean, I'm telling you where I'm buying and selling, but I'm also showing you how I get there. And yeah, the intermarket correlations are freaking key, because those are the days when it's all lining up and you take those trades where it's so clear. It's just incredible to be in that type of a trade, to be in that type of a situation. And believe me, we're going to be here doing this every day. So there will be days like that. And I look forward to, you know, showing you guys and experiencing those with you guys, because it's a lot of fun. And you see how the intermarket correlations, it's not that they just help you on good days, you know, that end up giving a lot of opportunities and there's a lot of clarity and you're able to really make some good money on those days, they also really help you to stay out of the shit days, right? So like, look at what's going on this week. The market is just, there's not a lot. There's a lot of chop out there. And I'm not saying that you can't gamble and get lucky and make some money. That's fine. That's possible. But I'm saying if you trade this type of market, the way we've seen this week, you trade this, you know, 50 times over 5 years, you're going to end up losing on the majority of those weeks. I can pretty confidently say, because you can just see that the correlations are telling you that the market is searching. The market doesn't know what it wants to do. If it doesn't know what it wants to do, it's going to be erratically volatile. We want volatility, but we want clean volatility. I think it's just super important. Yeah, exactly. There you go. I'm glad you're finding it eye-opening. Exactly. So when you're in a trade, for example, like, you want to give me an example of one of your trades, you know, previously, Steven, that you were in and you were kind of wondering why it wasn't going somewhere? I mean, I can give you plenty of examples, but it's fun to talk about one of your examples. If anybody else has any examples, let's talk about them, because we're waiting for the 9 a.m. hourly close. Let's look at CL real quick. Yeah, I mean, crude is just, it's trying to rally on all this geopolitical risk. I mean, the daily looks pretty strong today. We're breaking through those highs, trying to break through those highs at 74. So I think, you know, with everything that's going on in the Middle East right now, if crude can't put on a big, strong Friday today, I mean, we had a gap open. Did you notice that, Steven? Here's the daily crude. That's the close from yesterday. And then the US and the UK start dropping bombs on Yemen. We had a gap of 70. We had about $1 gap on the open. So far, this is kind of a gap and go, right? So, I mean, I think there's going to be a lot of support down in here. So I am looking to get long crude if we get a nice pullback. So on the hourly here, right now, we're just experiencing, like, if you look at trending up here into the close yesterday, right? So there was that big sell-off yesterday. This was the support level I was kind of interested in, but then I didn't take anything because it broke through it. Sure, it ended up coming back later, but I was interested in that support level at that moment in time. Anyway, so if you look at that move up heading into the close, I think somebody had some advance notice on the US airstrikes. So we close, yeah. So, and then now we got that pullback here, 74 down to 73.20. That's 80 cents. Right now we're pulling back from 75.20 to 74.20, about $1. So this is looking like a pretty similar pullback here. I mean, I would be looking more for, see, this is where the point of control is important right now on the daily, because if crude's going to stay bullish, this is where all the institutions are transacting this major area. So when it gets down there, I mean, they should be buying crude, and you should see this point of control thicken up even more, and price should stabilize. That'll be a good clue to us that crude is going to stay bullish today. You've also got the weekly value area high there at 73.60 as well here, reinforcing that daily point of control. So you can see right there, and that's an important level. You see here on the weekly volume profile, you know, crude is searching for balance higher, and we're breaking out of the zone. So that value area high, you know, this should be a good support level here on the weekly if crude's going to keep running, and it happens to be just kind of down in this area by the volume point of control. So I'm going to keep an eye on crude. I use very specific setups that I'm waiting for. So, you know, on the hourly close here, if this closed right there like that, I wouldn't buy it. I have my reasons why. Might go up, might go down. I don't know. I just look for very specific, you know, setups with my methodology, and when they come, they're clear. So crude, we're definitely watching. We're interested. You said, where is support on crude right now? Yeah, I mean, the volume point of control, certainly 73.85, and then the weekly value area high that got broken It's coming in at 73.50. So say that zone in there, 73.50 to 73.80. That's the area I'm watching. So down in here. So if this just fell out of bed in the next 10 minutes and exhausted down into this zone, you know, then I'd be interested in buying it, but I don't think that's going to happen. Let's see. That's kind of my overall zone, Steven, for crude. Let's go ahead. So stocks, we got 10 minutes here. We're looking at ES again. That's what we do. We're always cycling through. I mean, interesting. It's not rallying. See, it's a shite show. That was my attempt at a Scottish accent. Right shit. That's when we know we're having a lot of fun. We're speaking in different accents. All right, so yeah, the indices are just, I don't want to do anything here on the indices. Steven, if I try and do anything with the indices right now, can you please scream at me through the chat? I'm just kidding, I won't do anything, but it's good that we have a team effort. Because it is a team effort. I mean, I actually think that overall it's going to be, I'm really excited. It adds, I told you guys yesterday, it adds an element of pressure to trade publicly, of course, but I'm ready for the challenge, which is why I'm taking it on right now, obviously. And I'm excited about it. But I think there's also, you know, great benefits to be had from trading together. You know, I'm showing you what I'm looking for in trading and all that good stuff. But, you know, when it comes to news announcements and when I'm calling out what I'm looking for, I'm like, all right, I'm going to, you know, go long the ES. And Steven's in the chat. He's like, didn't you say you didn't want to do that today? I'm like, you know what? You're right. I did say that. So it's kind of like just having a good, you know, live real-time feedback system, which is great. All right. So that is the, we're looking at the 10-year now. Well, it's still fun to see, right, Steven? Look at the high of the 10-year. We said 114.5. Sorry, we said 14.5. And the high was like 15.5. So that was at least a decent little read. Now, the question is, do I want to short up here for the 9 o'clock close? Ugh. It's tempting. We're in my overall resistance level. I don't like that PPI number, but I don't think that matters too much. Let's look at the 30-year. Yeah. I might have to short bonds. Let's look at the ultra bonds. Hey, look, the ultras are selling off already. I think I have to short bonds. At least the 30-year up here, maybe. I'll let you guys know. I got to be honest. You see, this is just the way this week has been. You see this outside bar here? I don't trade outside bars. I just don't, because they're just not. Statistically over time, it's just, the outside bars aren't good. But the 10-year doesn't have an outside bar. The 10-year might have. We'll see. I will let you know. Gold is pushing higher. That's on the back of that PPI and the war. So at least that should benefit our crude, you know, looking for crude, right? But no trade here for gold, but we are pushing higher. And this, you got to be careful, right? Like right now, speaking the intermarket correlations, do I want to take a shot shorting bonds when gold is ripping to the upside? No, because, you know, the good trades, they'll be correlated because gold is, you know, rate sensitive at the moment. So if I'm going to short bonds, you know, I want to see gold and silver heading down, or, you know, or at least not, you know, going through the roof right here, right? And I know this gold trade is based more on, you know, the war trade right now, but still, you know, bonds can also get safe haven flows from the war, right? So that's I think that's the most important thing, is just filtering out the bad trades. The good trades come. And, you know, if you're super realistic and honest with yourself, if you get 5 outstanding trades a month, which you get a lot more than that, but let's say you get 5 a month or 10 a month. I mean, if you just go bigger size, it's not about the quantity of the trades, it's the quality of the trades. If they're good, you can increase size, right? I'm not telling you to increase size, but you know what I mean. So it's really not about quantity, it's about quality. So that's how I'm using the intermarket correlation. So right now, even though, hey, I'm in resistance here on the 10-year and you know, there is resistance up here. Yeah, but look at gold. It's just, you know, when we talked about bonds before, you know, gold was sitting here. I said, hey, maybe it has a short pattern heading into PPI. Yeah, it could have reversed. It didn't. You know, so we're getting a message. The market is speaking to us, right? This is what's really important, is to let the market speak to us and then take what the market offers. Yeah, we can talk about the flows here in a sec, Stephen. I'll get to that. Just let me quickly. So gold's heading up. Firing up. I mean, look at silver, you guys, really reacting to that low PPI. So that is very, very interesting. What a day. I mean, what a week. Just super volatility coming out of nowhere. All right, so not longing or shorting that. Copper stock. Platinum. Yeah. Before the report and before seeing what PPI, before the market told me how it wanted to respond to PPI, I was interested in shorting platinum, but now we're seeing gold and silver. You don't want to be aggressively shorting platinum if gold and silver are putting on huge gains, right? It just doesn't make sense. Then you say, well, why don't we get long all these right now if they're going up? Because we don't know how high they're going to go up or how long they're going to go up. We want to let the market continue to tell us, and things are going to keep going up. Then we're going to get a pullback on one of them. That's where we'll take our high probability trade for the day. Probably it'll be on crude, I hope. Because if crude doesn't fill that gap, I mean, it should be bullish today. Here's our 9 a.m. close for crude. It would have to get further down here, so not interested in that. Let's check the dollar. I want to see how the dollar is responding. So the euro got a little bit of a pop on the back of that news. Now just kind of closing in the middle of a big outside bar. The pound probably going to reverse higher. So I think even though the dollar was strong against the pound to start the day, it's looking like pound wants to claw some back. So yeah, I think we're getting a clear picture for today. We'll see how this unfolds, but this is how we do it. So we come into the day with our forecast, what we think is going to happen based on the charts at that exact moment in time. And now we have PPI. It was a bit weaker than expected, a bit dovish. We'll see. Stocks aren't really responding to it so far. You know, they're up a little bit after the news, but we'll have to wait till the stock market open at 9:30 to really see what indices want to do. And we're not going to trade them now, but if they were to really start flying to the upside, sure, you could have a Friday squeeze and we'll take advantage of that, right? Or I will. And you guys, you know, are free to follow along. But I'm going to wait for clarity here. So, and then bonds, I'm really curious to see 10-year. I mean, sure, there's some resistance here, but I don't have the same kind of confidence shorting based on what we're seeing across. I mean, gold is just ripping. Now you say, well, why don't we get long gold? Well, we're not going to get long here because who knows? You know, gold could come back here, but I'll tell you what, you know, if gold continues to rip and then we get a nice pullback in our trend, yeah, we might buy gold. I mean, we don't know where gold's going today on this war in the Middle East. You know, gold could go to 2080, 2085, 2090. You can see a monster move on gold, especially if there's a lot of people caught short that have to cover. So we want to keep a close eye today on, you know, what's the narrative of the market? What's the theme? Well, we've got the US and UK dropping bombs on Yemen, which, you know, sucks, but it's going to move the market. So, you know, crude oil to watch, gold to watch, even bonds. I mean, I think on a day like today, crude oil and gold will be better. Bonds, it's telling us, hey, don't be too excited about those shorts because, bonds can catch a bid from the weaker than expected PPI, which is, pushing rates a little bit lower. And also bonds will get the safety flow, right? So we could also see this, keep this in mind too, the correlations. You can see the dollar sometimes, like we could see bonds going up, right? Which means, oh, rates are going down. Oh, that should be a weaker dollar. But then you'll see the dollar getting stronger while bonds are getting stronger. And normally that doesn't happen. But if it happens today, it's because it's a safe haven flows on the war. You get a stronger dollar while you get increasing bond lowering rates. But then you'll also have to see gold, heading higher as well. So that's what we're seeing today. Maybe today is going to be a safe haven day. And it would make sense, right? When was the last time the US and the UK actually officially basically declared war on a Middle Eastern country? It's been a while now, right? We haven't attacked a Middle Eastern country in, I don't know, whatever it's been, 20 years since the last Iraq war or something like that. So, this could be a shift of narrative. This is just kind of how we do it, just being aware of everything. Okay, so there's the 9 a.m. close. We're going to see what we've got shaken at the stock market open at 9:30. Continue to see, what's going on for the day, but we're laying some good groundwork now. You got a question. So who comes into the market at 8 and 9? Yeah, I mean, basically it's just the old, well, first of all, a lot of the major news announcements at 8:30, but you've got the old floor hours, right? So the old pit, when it was the pit, it wasn't electronic, on the Globex exchange, 23 hours a day. It used to run in a pit, right? So the old pit trading hours for bonds, bonds used to open at 8:20 Eastern. I think crude used to open in the pit like around that same time, like 8 or 8:10 or 8:15 or something. Gold opened at like 8:20. Silver opened at 8:25, I believe. And that's just a lot of the banks start transacting. And that's also because, that's the pre-market is getting going in the stock market so they can start hedging things. So 8 o'clock, I like to start at 8 because if you do this consistently every single day, some days there are some really good trades at 8. And if you start at 9, you miss them. So that's why I like to watch it at starting. And I like to start at 7:30 so I really prepare for the day as we do, as you see. We know what we're expecting coming into each hourly close because the market's dynamic. It's just changing. So we want to be ready every single hour at these. And that's why I trade hourly charts and very rarely use the 15-minute. I'll use it like today. If I think if gold's just going to go up all day, which it might, I don't know. But if that's going to happen and we're less likely to get a pullback on the hourly, that's when I'll go to the 15 and try and catch a micro pullback because sometimes if you're waiting on the hourly, you won't get that pullback and you got to go to a lower time frame. But that's when I use the 15. Otherwise, I don't use it because it can be very dangerous. It can suck you into a lot of bad trades and it's not worth it. But we'll see if gold starts to push higher. I mean, you get a really good sense of where we are with gold here. Let's go ahead and look at. Here's the weekly volume profile. You can see we're searching. We're now at 2063. That's an old value area. Let's see what it was. No, that's this week's value area high. No, that was last week's value area high from that high there. So that's a key high. It's important to know where these levels are. The party in gold is not going to really get started until we get above that high. Right up in here. And if we do start to break through that, you can see you had a lot of value. Let's look at the old volume point of control for gold back here. You see down in here, all that volume. That was a happy price for gold at 2075. You can also see a lot of volume from last week up there as well, 2075. So that's a good idea on where we could be headed in the short term here for gold. 2075 up in here. So gold looks strong. Stocks will have to wait to find out at the open what they want to do, but they could be strong, especially on the war is a big announcement for stocks as well, right? Because then companies, the war machine goes into production mode, and we got to build bombs and planes and stuff like that. So stock market can definitely rally on that. If we go to war, the Fed says, "Oh, we're going to war now. We got to cut." I mean, you can see everything go up, even though we're going to war, and it feels negative. It could be like another COVID situation where everything just, even though COVID crashed and then went up, The prospect of war could make everything go up. Here's the NASDAQ. So stocks, we're just waiting to see if they, if everything else keeps pushing higher, if bonds keep pushing higher, if the dollar keeps, we'll see what the dollar's doing. I think, we'll have to wait and see if stocks can break out and get going. But certainly, see, the 10-year is just sitting here now. This will give us a clue. We're at this key level with the 10-year. So even though I didn't want to short it because of all the reasons I already gave, I want to see now how how the 10-year is important, right? This is determining interest rate. So if we start to really push up and through this level on the 10-year, that's important information because that's telling us rates are really coming down, right? That means the 10-year rate is really getting below 4%, and that's a key level overall for the stock market, right? So if that's happening, and if this starts pushing up, then stocks, could be in a position to rally today. If I see bonds pushing up like this, I would be more apt to take part in a trend run on stocks, or even if the stocks, like here, we're going to load the ES. If we stay in congestion here, but we retest the lower end of the range, right, I'd be more confident in this overall support level down here if bonds started pushing higher, because that means rates are going down. And if bonds are pushing higher while the dollar is getting weak, that's not pure safe haven. That's just more lower rates, weaker dollar. That's even more beneficial for the stock market. So I'd be more interested in, playing the long side. So even though I said I'm not going to trade stocks, I'm not under those previous circumstances. But as the day evolves, we see, what bonds are doing, what the dollar is doing, what are all the markets telling us. It's just so important. So that's what we're looking for. Let's I rarely trade the ags, as you guys know, and today certainly not. They're going to probably be doing nothing, waiting till that grain report. But I do have a commitment to myself this weekend. I'm going to spend more time reviewing all the agriculturals, so that next week I come in a bit more comfortable, prepared, and ready to trade them for whatever opportunities they provide. Because this week, there haven't been any trades, and I think if I would have come into the week, I don't really trade the ags that much, but I want to get more. I need to be more prepared with the agriculturals so that, hey, on a week like this where there's not much going on, because usually there's enough in the major futures markets, but this week has just been slow. So unless you're losing money hand over fist, then it hasn't been slow. But for me, waiting, it's been slow. And there could have been some good plays on the ags this week that I missed. So next week, I want to come in just a bit better prepared across the ags. And also Bitcoin and Ethereum, I'm more open now to start trading. I want to broaden the brush a little bit. Let's see. Oh, sorry. I'm just getting your comments now. So copper is leading. Yeah. Copper seems to be, for sure. I mean, that's why they call it Dr. Copper. That tends to lead the recession. And I think that's why it's getting hammered. Got the lemon water. So copper is a leading indicator. But again, it's not, and this is the point I'm trying to get across, it's not any one thing, right? It's all these markets together. It can mean different things at different times, right? Depending on what's doing what in various combinations. I suppose what I'll do too is I'll start making, I'll at some point I'll try and make some sort of a list of all these things to put a link below the channel so you guys, but I think just by watching and following along, you'll learn. And it's really hard to put in. This is why it can give you a good edge with your trading, because it's not really, it's hard to quantify, right? So I think you just kind of learn by doing and understanding. So for example, copper, I bring up copper here. You can see on the weekly chart here, copper is rolling over, right? And yeah, I mean, this could be, telling us, hey, that we're on the verge of a recession. But then, then you want to ask yourself other questions. Are you on the verge of a recession? Well, typically the We know that the yield curve will invert long before the recession, but then when the curve starts to uninvert, that's usually when the recession is about to start. Right now, we're happening to see, we saw the yield curve invert steeper than it ever has in history, really. I think maybe one other time in the 80s it was as steep. But now it's uninverting, right? You're seeing, like you can see that now with the long end is outperforming. So with this uninversion happening, that could be a sign of recession. You got copper heading down. That could be signaling a sign of a recession. Personally, it looks to me like we're heading into recession. And yeah, I do think that will weigh on the stock market. But it really just depends on the response from the Fed. But then there's also a lot of people think that the Fed, it's just going to lower interest rates. Yeah, well, maybe the Fed will lower, but maybe the open market, the holders of these treasuries are at some point won't be happy and will start dumping them. That's going to drive yields up. There's really not a whole lot the Fed can do about that except buy up that debt, which would torch the dollar, right? So it's like you just have to look at all these things happening. And for me, that's what's so fun about this is it's all changing every single day. I mean, the big narratives are still in place, right? Like when we were in, the COVID and then, the QE and, now it's all about, the Fed hiked rates faster than they ever hiked before. We went from 0% to 5% in about a year. I mean, I don't think that's ever happened before. So how's the economy going to take that? And now the market is front running. If, are we heading into recession? So the Fed's going to ease. So, but is the market too far ahead? I mean, these are fun things to know, but I like to look at the charts. They kind of tell me, plug in the narrative. And when you just get things matching up, those are the moments where, in my view, in my experience, those are the moments you have the edge to take the trade. And that also applies to what we're seeing on a micro basis every day when we're trading. So these are macro themes, but during the day, we're looking at these sort of micro themes unfolding, right? When I'm talking about, oh, look, bonds, like the 10-year is up here at this resistance level. And, the micro theme for today, I want to see how do bonds respond? There should be resistance here, right? Right now the 10-year is responding. Let's see. This will tell us a lot. The 30-year certainly is responding. The 30-year pulled right back to the point of control here. So, because if bonds start to head lower here, then that's going to change how we feel about stocks for the day. I hope that kind of answers your question, Stephen. That's the long and short of it. All right, let's look at, I got to keep remembering to look at Ethereum and Bitcoin because I am going to start trading these when I see good setups. Here's Ethereum. Very bullish after the ETF. So yeah, if Ethereum, we can keep an eye on Ethereum because it's looking quite solidly bullish. So if we got a, these markets can get volatile. If you get a big pullback into support, on Ethereum later today, might buy that. So we'll keep an eye on Ethereum. Let's look at Bitcoin. Bitcoin, we said was a mess. That's why I didn't look at Bitcoin because remember the pre-market, I thought Bitcoin's a mess, and it is a mess. It's just sitting here doing nothing. But Ethereum's, for whatever reason, taken off and looks quite bullish. So we can keep an eye on Ethereum. The grains, no need to look at. Let's look at the euro. Pull back. Now we can see that post PPI, how is the market responding here? Well, the euro popped and now the dollar is recovering. So interesting. Dollar recovering. We've got the bonds are trying to drop. We'll see if they can. So if the dollar continues to strengthen, meaning that euro futures chart drops, and if bonds, go down, then that's, rates getting stronger again. That's going to weigh on the stock market. That ultimately is probably going to weigh on gold and silver. Let's take a look. We've got the stock market opening in 15 minutes. Probably not going to be a day that I put on a opening trade on the indices, but I might. We'll see. Regardless of what happens today, guys, I just want you to be aware of the fact, it just what I reiterated at the beginning of the broadcast was, this is just a fantastic week to be flat. It's just a great week to be flat, because once these markets pick their direction, sometimes there's 5 trades in a day and they're all great trades. And you want to have emotional mental capital is more important. I guess you got to have a trading account, but emotional capital is perhaps more important than even trading capital. Because if you've got the emotional mental capital, you're going to make better decisions. So if you get through weeks like this without losing money, without blowing your confidence, your emotional capital, the good weeks come. And yeah, so I just want to point that out, because a lot of people, they think that they have to trade all the time. Don't have to trade all the time. And look at some of the most successful hedge fund managers in the world, right? They go through periods of time where they'll have like a 20-year really good track record, and they'll have like a whole year of drawdown where just every month they just lose. Right? That even happens to the best. Thankfully, we don't have to move around, billions and billions of dollars. So we as retail traders, we actually have an advantage, because we don't have to move around huge positions. We can just, and we also don't have clients to answer to, right? So we can just sit around and wait for the perfect setups and then put them on. We're really lucky. People say that retail traders are not lucky. I think we're super lucky. You just have to, really stay out of the traps that most of the retail fall into. That's another thing, that if you have a question, Steven, or anybody else, let me know. Otherwise, I'll just rant. But, that statistic that, 95% of traders fail, that's true, right? But, do those 95%, do they have a good system? Do they have good guidance? Do they know what they're doing, right? So it's not really a valid statistic. It's like, okay, sure, 95% of people that gamble and don't know what they're doing fail. That's true. But if you actually have a good system, you got good guidance, you know what you're doing, well, then you're probably not going to fail. And then you're not going to be in that statistic. So I think that that's really interesting. My point with all that, back to the hedge fund managers, is that, and I'm saying all this to you guys because I remind myself, believe me, after a week of like no trading, I go into the weekend, I'm like, is that a good week of no trading? And then I have to look at the markets, and I'm looking at the markets going, yeah, that was a good week of no trading. And we'll see. Today might just give us some great opportunities, but we need to see what these markets want to do. I think the most important thing is that it's a marathon, right? It's not a sprint. So you got to pace yourself. You got to drink your fluids. You got to make sure you stretch. When you get a little tired, take a break, relax. Like it's not about what do you do one day to the next or 1 week to the next. It's month to month, quarter to quarter, year to year. That's what it's all about. That's super important. All right. Stock market going to open in 12 minutes. Let me know if there's any questions. Here's ES that we're looking at here. You can see just much ado about nothing. I think I got to give Shakespeare credit for that quote. Here's the NASDAQ. Just not a lot shaken. Dow, S, Russell. I have a feeling things are gonna push higher probably. I think that the bonds are gonna stabilize and not go down. Yep, that's kind of my feeling. So this is really fun and interesting. So here's the 10-year Treasury note, and you can see how if this was valid resistance here, which I thought coming into the day, that should be resistance, right? But you can just see that. You guys notice? Okay, trivia question. If you get it, I will, well, at some point we'll do some fun trivia and some prizes. But can anybody tell me what has happened here? What do we notice about the 10-year in here? What has happened? and I'll narrow it down. What happened to the volume profile? You guys even have the advantage. You can rewind the live stream and go look. But I'll tell you. So do you remember when the volume profile had the volume point of control here? This is why you should really watch the volume profile series. There's a playlist on the channel, and I go into some really, detailed examples on all this. But this is what's so cool. You can see how this works live in real time, right? Because it's of no use unless we can use it practically to help our trading. You see how the volume point of control was down here, and now as price has moved higher, we've shifted the volume point of control up here to the value area high. And now you'd ask yourself, all this volume, the most heavily traded price of the day, is shifting from here to up here. Are these buyers or sellers? Well, which direction is price moving? Up. These are buyers. The buyers are getting more aggressive. They're shifting the volume point of control higher, 10 years pushing higher. This is why we're not going to short it. You say, well, Andy, well, then why don't we go long? Because we're in resistance, and I don't know how far it's going to go. And I have, the daily, potential short pattern. It just means that I'm not going to short. Right. And I used to think like this when I was starting out. It's like, okay, well, if I don't want to short, then I must want to be long, right? It's like, no, that'll get you into a huge amount of trouble. And I know because I used to do it. So try not to do that. So here, that's really important. Did that make sense to you guys? The volume point of control is important. Volume profile is important. So let's look at, yep, there goes the 30-year, trying to push higher too. You see, just choppy mess. You see, you could be short here. Imagine now that you guys understand how we use all these markets together. Like, yeah, it's not sexy. It's more boring because we're patiently waiting for things to click. It's like the gears in a clock, right? In a watch. It's like, how if you open up a watch, you've got all those gears that are kind of like intricately connected, and they're all kind of spinning. Well, that's what we're looking for with the markets, right? So this answers your question. How many trades have you been in? Like, if you shorted, bonds here, you're like, oh, well, I'm in resistance and I'm shorting bonds. And as it's dropping and you're up, a few ticks, you're like, all right, we're off to the race. And then it hits support and rebounds. And it's like, what we're doing makes not only getting into trades, I don't want to say easier, nothing's easy, and I don't want to, give a false sense of reality, but it helps us to be selective. And then once we're in a trade, we have a really good conviction of why we're in that trade. See how that can, help the psychological aspect of trading. And this is why I think if you have a good system, if you know these intermarket correlations, it's going to reduce the psychological anguish that affects most traders. Guys, I know all this stuff just from a lot of experience, time, trial, error. Believe me, in trading, you don't get to a level of knowledge until you go through the ringer, for yourself. It happens. It's like a rite of passage. It's like, how many times can you get punched in the face before you finally stop making the mistakes, learn from what's going wrong, and that's what will ultimately get you towards consistency. But it doesn't come right away. That's what's so cool about, things like YouTube and resources like this. I mean, back in the day, you couldn't get any, instruction like this, and now you can. And not just from me. There's other good people out there too that talk about different things that, I'm not really. My stuff is Owings market analysis, volume profile, intermarket correlations. You can go learn, super duper scalping from somebody else, right? So that's I think YouTube's awesome when you use it the right way. So you said, so Steven said, if bonds are in a mess, then everything is messy today. I mean, no, not really, because it just depends kind of what they're all doing together. Like, let's say bonds just stay right here and stabilize and don't go anywhere. Well, that tells us that rates aren't rising, right? So then, that can benefit, gold, silver, the indices. So it's not so cut and dry that if this, then that. It's more just like the whole package. Yeah, you said I've gotten out of good trades too early because I was relying too much on indicators. Yeah, that's analysis paralysis. I mean, it's easy to do when you have too many indicators on the screen. But like what I'm using here is more like, I guess you could call it a form of price action, but it's just it might look complicated to, you know, if you haven't seen it that much, but it's actually very, very straightforward. And then of course, just matching it all up to the volume profile on the weekly, the daily, the different intermarket correlations. I mean, it seems a bit daunting. I can understand that. Like if it's something that you're just kind of wrapping your mind around, but once you get to really understand it, and the brain learns to process that information in that way, it's kind of like speaking a language. You'll just speak it and then you know. Like you don't have to think when you're speaking English, right? It kind of becomes like that with all this stuff. Doesn't mean that you don't make mistakes. You do sometimes. You just make fewer of them. And when you make a mistake, you cut it faster. And when you make a mistake, you don't get angry and compound it, and that leads to 5 more mistakes. And so it's all these like little things that can, just the smallest thing can throw off your trading and, you know, send you in the, you know, unhealthy territory mentally and on the account balance. So it's really important to think about that. Yeah, like if bonds are breaking out to the upside, then gold should follow. Well, right now, I mean, gold is, yeah, because, you know, if bonds are breaking out to the upside, then rates are coming down, and, you know, gold is pretty sensitive to rates right now, right? But you'd also want to look at the dollar and see what the dollar is doing. You know, right now, I think that gold and the bonds are benefiting from what we're seeing in Yemen with these airstrikes. I think there's a little bit of a flight to safety, because if gold and bonds are pushing higher and the dollar is getting stronger, which it was last time I checked 5 minutes ago, that's more of a safety trade. Because otherwise, if it's not a safety trade, then you'll see bonds going higher, you know, yields going lower, gold can go higher, but the dollar will be getting weaker, right? So that strong or weak dollar also tells us something. So let's look at the dollar. Okay, so now we have the dollar trying to, you know, the euro trying to push higher against the dollar. So dollar is trying to get weaker now. So if dollar is getting weaker, bonds are getting stronger, lower rates, gold continues to push higher, that should really benefit the stock market, crude oil, and gold and silver today. So if this trend now that we're seeing, right, but in 10 minutes it could be different, everything's switching. But if this theme continues, then we're going to be positioned and really looking for pullbacks on crude if it keeps heading higher, on gold if it keeps heading higher, right? On bonds, but crude and gold I think will be better because they're already breaking out. So that's how I like to use it. I think you're getting it, Steven. I mean, right? It's you guys probably, you know, you cover this in one way or another in grad school. Just now we're relating it specifically to how we use it to, you know, make hopefully better trading decisions. Oh, stock market, 3 minutes. Let's see what we got shaking. So now I feel pretty confident in the long side for stocks today, even though I said I wasn't going to trade them, but I think we're going up. So if we're going up, I might want to trade. And now this gives me more confidence. This is the E-mini S&P 500 daily chart. This gives me more confidence. Now I look at this chart differently based on what's happening. Okay, daily's heading up. You know, we pulled back yesterday, got bought up. Now all this support, we're pushing higher out of it. It's more valid. So you know, right now, as long as bonds continue stabilizing higher, dollar weaker, I think ES is going to gun, you know, up here for at least 48.50. That's what I think. We'll see. So right now I'm bullish heading into the open. Oh, we got Kashkari speaking at 10 too. Let's remember that. So if we're bullish heading into the open, let's go ahead and look at ES here. You know, 4,800 is probably going to be a lot of, I think there's going to be a lot of support down in here. So I think this would be a gift. See, I try and look for gifts, right? So if ES would try and get smashed down here, you know, below 4,800 at the open, I think that'd be a good spot to try and buy it. And I'm going to bring up, you know, I can only watch one, right, during the open, right? I can't like try and trade the NAT. So I'll look at the thicker one in this case. I'll look at the ES. switching the DOM here. And I'm interested, bullish, right? So it's looking bullish. We put together a bullish picture. So just imagine all this ranting and raving and looking at all these charts. Now we're heading into the open, you know, with some clarity. That's nice. That's what we want. I got to reiterate, anything can happen, blah, blah, blah. But it helps to shape the trading, right? So let's go ahead. I'll just, here's the 15-minute chart. I mean, let's see what happens at the open. We just opened right now. I'm looking for, you know, if we were to pull back down into support on ES and get a gift, I'd definitely be interested in there. It might just go up here at the open, and you know, gamblers can buy it and, you know, take a chance on that. Let's look at the NASDAQ. Also could be bullish. So, you know, on the NASDAQ, we want to keep an eye on 16,920 down in here. So low 4,800s for ES, 16,920-ish for the NASDAQ. The Russell and the Dow are 2 weak overall, even though they're probably going to head higher. But I'm more concerned about those on the short side, especially the Russell. But on the long side, ES and Q. Yeah, the 10-year right now, I'm just looking at the scoreboard. I call it, you know, I call the scoreboard what you guys see with all the symbols. 10 years pushing higher, bonds are pushing higher, gold's at 2063 pushing higher. Yeah. So silver's at 70, crude's at 74.30. So I'm excited we might have some clarity today for some trades. Great. So yeah, I know. I said I wouldn't trade the indices, right? But we have a lot more clarity now because we look to be breaking out of this range. Not only are we breaking out of that range, we're doing so while the dollar is weakening and bonds are strengthening, meaning yields are coming down and gold is rallying and crude is rallying. That's a recipe for bullishness for the stocks. But thank you for reminding me, Stephen. I appreciate that. It's good. It helps. Like, but you said you see, if I said I wouldn't trade stocks and then you bring it up, if I can't defend my position, right? Like in debate class, I got to defend my position, or then I shouldn't be taking the trade, right? So I like ES better than the NASDAQ. This is just for today, guys. You see, every single day is different. Today I'm bullish. We'll see what happens. You know, Monday, everything's going to be different. So this is what I like about this. It's dynamic. It's flowing. We're adapting as we go. See, this is like CNN, except useful. Like all the crap that's out there on the mainstream news media. It's unbelievable. Oh, and we got the Martin Luther King Day on Monday. Important, right? Holiday. Won't be trading Monday. That's good. I can go out in the forest or something, take a walk around the lake, get some fresh air. That'd be nice. You going along GC? Nice. On your demo or real trade? You don't have to tell me, but I'm just curious how confident you feel about GC. I think everything's looking bullish right now, so. But I can't comment on your trade. I can say what I think about the charts, but I got to be careful on YouTube commenting about individual subscribers' trades. But if I look, you know, I've already laid the groundwork here. Let's look in. This is the NASDAQ, but if we look at gold, I'll tell you where I think it's very bullish. Remember what we said, 2075 when we scrolled back. Oh, this is the daily, but on the weekly, you know, 2075 is probably where we're headed because there's a lot of, you know, old high volume nodes there from the last couple of weeks. So that's probably a good target, 2075. I think gold's looking very bullish. On the weekly, 28, yeah. I think we're headed, I mean, If we clear this level here easily, I think we could go to 2085 today. Look at the 15-minute. So this is kind of pullback. If I start to watch gold, I'd be looking for 15-minute pullbacks like this, because then you can manage your risk better, right? You can get in here and just put your stop back below the 15-minute level. Just kind of changes the risk profile around. And if gold continues to grind higher, I might look at the 15-minute chart. But oftentimes you'll get like, if that's why I just like to wait, because this is, I mean, look at the hourly here. This is looking, I think we're setting up for this. Look at the volume profile. Clearing all this. So gold is looking bullish. Yeah, if you're a momentum trader, I mean, gold is certainly a good one to bet on. Just, you know, the way I trade is I wait for pullbacks, but that doesn't mean that that's the only way to make money. There are lots of ways to make money. I'm just not a momentum breakout trader. So you said, oh yeah, you can sleep in on Monday. Exactly. That must be nice, Steven, huh? Yeah, getting up. What time do you get up? It's probably what you get up at, what, 5:30 your time? Because I remember when I used to live in California, I would get up at, I guess, 4:35 maybe, something like that. Oh no, but we start at 7:30. So for you, that's, God, that's early. What time is that for you? You like 2070 for gold? Yeah, 5:30. Yeah, that's early, doable, not too bad. Earlier than 5:30, I don't like. I wake up at about 7 here, which is fine. Even though I don't start, you know, my trading, but I've been working on a lot of other admin, you know, stuff before lunch here. Normally, I just go to the gym and the spa, and then I can come to the charts feeling ready to go. I'm looking forward to getting back to that, but I've had too much other admin type stuff to do. But that's not your problem. All right, 2070 on gold. Yeah, I think 2075 for sure. That's where you got all that volume up there. And I think we'll probably go through that level. Right now, it's looking like it. Yeah, exactly. It's hard to do deep analysis at 5:30. That's why you got me. I can do it for you. Because here it's, you know, only 1:30 in the afternoon when we start. So that's great. Let's look at ES. Bullish. I think we're heading higher here on everything. I don't think cards have been telling us that now. So we've got a very clear, market has shown its hand to us. Now I feel I have a very good grasp on the higher probability side of the market for today. That's what I'm always searching for. Still doesn't mean that I don't take losing trades. Of course, you take losing trades even on the high probability side. It just shifts the edge. Anything we can do to shift the edge more and more in our favor. It's like, you know, when you're a professional, you hear about these professional athletes, like at that level, like even in tennis, you know, like the top 100 tennis players in the world, there's not that much that separates the number 1 guy from the number 20 guy. It's just the little things, like in golf, you know, it's the short game, the putting, just these little things that move their games just a little better, a little better. Trading is like that. Important. So here's ES. I got the 15 out because we might see a squeeze today to the upside. And I want to be ready for, you know, the indices, at least ES and Q for sure. Bonds, I'm not interested in from the long side. I don't have to go into why right now. Gold, I'm definitely interested in the long side. Silver looks like it's putting on a monster move. But I do like gold better, but we'll keep an eye on silver. Copper and platinum, they don't have as bullish structure. So really right now I'm interested ES and Q long side, GCSI long side, and crude oil long side. These are my top picks. today. You can see crude, there was the hourly close at 9 a.m. And look, it pulled right down into our support zone here. Daily point of control there, right to the weekly, you know, almost got to the weekly value area high that we're looking for. So key level of support there for crude. And we'll see where this could be a nice reversal pattern setting up on crude for the 11 o'clock hour. We'll see. Now we're going to get a little more active. Flip through these charts more. So I'm just waiting for pullbacks now, but I've turned my attention to the 15-minute chart. Yeah, I mean, right now it looks like a trend day. Yeah. It does. So how big of a pullback do I want to see on an asset? I mean, now I'm kind of just using a combination of factors, like what I'm seeing, levels I'm seeing on my charts. It's different for each asset, and then you know, I'm using the volume profile areas on the weekly, the daily. But just generally speaking, like if I really feel like something is going to be, you know, off to the races, then, you know, I'm like, let's say, I'll do an example for you. Let's just pick, you know, ES here, especially if we, you know, like let's say right now we're breaking through, you know, the volume profile, by the way, do you see how the volume point of control is shifted higher here on ES? So it's the same thing we saw on the 10-year, right? As that volume point of control shifted higher, you could see price was heading higher, so we're pushing higher, right? So on the 15-minute chart here, and you just got to keep an eye on, because I'm just looking for me, a move back. If I see evidence that we're pushing higher on the hourly, I'll just be looking for a move on the 15-minute back toward the middle of my moving average envelope here in green. So that's important for me. It's not really a moving average envelope, but I just call it that because it makes it simple for people to understand. Just think of these as different, you know. They're not like anything else that you use out there, but they're really, really important. So I look for a move back down here to this area. So on this one here, I'll be looking for down in here on the 15-minute chart. That's just one, you know, there's a lot of different things. You can see the NASDAQ did it there, right? But I have to watch the closes of the 15-minute chart because I don't have time to open and close different charts and guess where it's going to go and set an order and check it and take it off. That's why I've got to anchor myself. You know, I'm not an algo. So but I think we have evidence now that it's, you know, and this is the thing too. If you're just patient, right? Like, most days, let's say, even if this is the NASDAQ, so even if this is going to trend up, you still got to be careful buying pullbacks on the 15. And I am very careful because the odds are most days, if you're patient enough, you'll actually get the pullback on the hourly chart itself. And that's the one you want because that gives the best risk to reward. Whereas the 15 can get noisy. So it's like I keep saying, it's, you know, you've got to treat the 15-minute with a lot of respect because it's very easy to start seeing things and jump in and jump out. And I don't really like to go lower than the hourly. In fact, I'm not even going to have the 15 now because my time and experience tells me just wait. I've got my direction now. I've got my markets. I know now where I'm looking to get into these markets. And I know I want the long side from ES, so I'm just going to be patiently waiting for that. I know I want the long side from NQ, so I'm going to be patiently waiting for that. There's Dow. I mean, the Dow probably not going to trade, but it is the one that would be most likely to give us a potential pullback. I'll keep an eye on it. I know I said don't trade the Dow. I'm 99% probably not going to trade the Dow. The Russell certainly not, only from the short side. But the Dow is not terrible from the long side and could give us a pullback if it's lagging the NASDAQ and the S&P and we don't get a pullback in the NASDAQ and the S&P. Bonds, like I said, probably not going to trade from the long side because I think gold and silver look better and they'll be correlated. Gold and silver are, breaking out. So, I mean, gold is also, gold's a wild one. That, gold is, I'll just give you an example. Let's find an example here on the hourly chart. So this, like if gold will oftentimes do this, right? You see how you're trending down here, these are hourly bars, you're breaking these lows. And if you're just patient, you will get a pullback like that toward, the middle of the moving average envelope here. And these are the ones that I like to wait for. I mean, this is a monster day in gold here. So, here you can see this is a pretty monster day here. There's a little bit of a pullback right there. These pullbacks. So this is what I'd be looking for on the hourly chart. And then match that up. Sometimes you can look at this. This is like a big trend down day, right? And then just boom. That's where you want to short and take it back there. So that's the way I like to structure it. And these markets, we've got the picture now overall of how these markets are moving. So for me, I mean, if I get one really good trade today, win, lose, or draw, I know over time that's going to be great for me. So I'm okay with that. If I wait, probably get a pullback on one of these markets, maybe even multiple markets. That's gold. Let's look at silver. Here's silver. Copper, we're not doing anything. Platinum, off to the races. Probably not going to long platinum. So we get crude. I'm just waiting until the 10 o'clock hourly close here just to see if there's anything that's in about 3 minutes. Euro is above 110 now. Yeah, so definitely have some good correlations today. Dollar weak, bonds up, gold up, silver up, stocks up. Everything's looking good. And we got Kashkari speaking. Let's not forget about that. That can cause some volatility. So, when he starts speaking, I will keep an eye on everything very carefully because that might trigger the pullback that allows us to get long because the charts are up. So hopefully Kashkari will say something hawkish and the algos will drive the market down temporarily and that'll give us a chance to get long. On ES, you can see this low volume area here, I think should be pretty strong. Support anywhere down in here. That's just on the daily. You can look at the weekly in a second. Let's look at the NASDAQ. Yeah, so on the NAS, you can see here. So right at that, I'd be looking for a retest of the volume, the low volume area at these old highs. That would be a good spot to attempt a long. And I'll keep the 15 open, just you never know what we'll see. I know that it's dangerous, that's why I just like to close it, but we may not. Normally I just don't use the 15, but because there have just been no trades this week, I'm a little bit more open to it. I'll kind of just keep an eye on it here and there, but you can see it's doing the same thing. We're heading up on the 15. We'll keep our eye on the 15, but our focus is the hourly. Oh, you got the grains coming out at noon. Can't forget that. All right, so preparing for the 10 a.m. check here. It's 9:49. You can see the volume point of control is shifting higher here on ES. This is the hourly chart. And, you know, anything back down into these supports levels is where I'm interested in getting long. Here's the NASDAQ. Same overall situation for the NASDAQ. And for the Dow. Ultra bonds here. Breaking out. Gold. Gold's one I think gold I'm gonna have up on my depth of market. Because gold is just looking the most bullish. So stocks look good too. We're gonna keep an eye on everything, but I mean, so gold is one where I feel bullish enough that the 15-minute is quite smart to have open. And then what I do is the same as, you know, on the Russell yesterday, where when I was waiting for that Russell short, I pick my areas, you know. So here on gold, you know, I'm going to pick my area. So okay, well, where am I comfortable getting long? Where would I like to try and get long gold? Because I think we're going to close on the highs with this war today. There's a lot of shorts going to get squeezed in gold today. I think gold has room to run to 2080 today, maybe even higher, 2085, 2088. So that's a long way from where we are now, right? So I'm willing to risk a little bit of money on gold today, but I still want to try and get a good entry. So what I'm going to do? Well, I'm going to go over here to the volume profile on the weekly. And, you know, we haven't hit that 2075 area yet. So I think any, you know, that high there should be pretty good support. I think we're going to shift value area higher. I don't think we're coming back here to this value. I think we're really going now on gold. So, and if I look at the hourly, you know, got this nice middle of the moving average envelope. You got the extension down in here. That's coming in at 2056. Where was that old high coming in at? That was coming in at 2056. There you go. Okay, so I'm looking for a confluence of levels. So here, I gotta here now. Hang on a second. I'm looking 2056. Looks interesting to me, potentially, for a gold long. And if I look at the daily volume profile here, you see the volume point of control is shifting higher, but I just think that we're going to keep shifting it higher. Sometimes if you're in congestion, you think that you're going to stay in congestion. Then when the volume point of control shifts up to these highs, it can reinforce the value area high and make it resistance. But I think this point of control is ultimately going to keep shifting, so I'm not really worried about it being here for right now. In fact, you see this high volume area here. I think the point of control, as we drop into this area, if this jumps out, the point of control is going to shift from here to here, and probably at the back of this low volume area down in here. See this low volume node? There we go. So this is the low volume area here at 2056, right at that old swing high that's broken at 2056 from yesterday from CPI. And this is also matching up with very, very key OMA information. So now what I would do, instead of just setting an order here to get long at 2056 on the hourly, this is where I'll look for the 15-minute to give me a very specific pattern confirmation down into that area. Then I'll base my entry and the stop off the 15-minute, but I'll base my target off of the 60-minute and the daily. And therefore, if I lose $3 on gold or $4, say $3 on gold, one contract, you know, $300, okay, fine. But if it turns out to be a winner and we end up going all the way to 2085, 2090, you know, you can make $2,000 on that one contract for your 300 of risk. Those are the trades I like. Those are the ones I like to wait for. So Steven, you said 2056 because it's mid envelope and support level. Sorry, yeah, exactly. Yeah, there's a variety of reasons, but yeah, just all the stuff I just went over with the volume profiles and my OMA and all this kind of stuff. And the 15-minute will tell us, right? And then once we get into that trade, it's not like I'm, okay, we're in at 2056, going to the moon. It's like, no, now I need to watch it. Just like yesterday with the Russell, right? Because if 2056 is going to be a good area, it's, you know, that low volume area on the daily profile should reject price. Price shouldn't just hang out there and fill in a bunch of volume there, because that means that as the buying's coming in, they're selling, they're absorbing it. We don't want to see that. We want to see the low volume area reject, right? If we're in congestion and we want to see, you know, a high volume area at the value area high hold, then we want to see volume coming in, and we want to see, you know, price going, you know, let's say down, because we think we're going to the other side of the congestion area toward the value area low. So there's different ways, you know, to use the volume and the high volume nodes and the low volume nodes. So, but I think definitely gold is the one here I like. Let's see, we got 4 minutes, guys. I got to use the restroom real quick, so I'm just going to be right back. Can't believe I haven't gone yet. I've been too focused on these charts. I got to click this, and then I got to click that and that. I'll just be right back, you guys. All right, I'm back. Remember, we got Kashkari, the Fed, speaking in 2 minutes as well. Go ahead and pull up all this back to normal. All right. All right. Steven, we're coming across loud and clear. How's the picture? Is the camera clear? I think it's, I debated the webcam because, you know, it's, in some respects, it's, you know, you don't want to have a camera on you all day, but I think it does help the learning, you know, when you see what's going on. All right, so gold's pulling back here. 10 years still at 112.21. That's good. Euro's above 110. That's good. Silver's ripping. I mean, the further this thing pulls back, the better. I would love to just see this thing collapse down to 56. Watch it a little bit. Gonna keep an eye on it. 56 is my level. And guys, I don't have an order in. I'm watching the 15-minute chart. I'm looking for very specific things. I will let you know what I do, just like the Russell yesterday. So what we want to pay attention to is if we revisit this area down here, we're going to have to really start watching it at 58, 56. But you see, there's the volume there. We want price to get rejected, and we want this to stay low volume. Really important. Keep an eye on that. You can see here, this is what I was talking about there. On the, this is still the hourly chart, but that's the CPI spike from yesterday. So that's also lining up that critical 2056 level. We are into some temporary weekly resistance, and we do have the daily. The reason we stalled right there is because of that daily trend line coming across. But I mean, we have the picture now where if bonds continue to stay bid, the dollar's weak. I like this 2056 area, because I feel like 2056, if we get an entry, and if it cooperates, I mean, we could get a move back to, I think, at least a retest of those highs. And then if we, we'd have to see how it's reacting. Let's take one thing at a time. We know we've got our area down here. We'll keep an eye. And this might be all she wrote, right? We're pulling back right now here. That might be enough. But the way I work, I don't buy that, because I have to look at my hourly. Because I know the probabilities, right? The hourly is a much stronger chart, right? The levels are more defined. So I have to look at where do I want to get long the hourly. It's down in here, 58 or lower, really 56. But this is my zone, right? And that might mean that I miss. This might be all there is, but that's okay, because I can't get long here in no man's land on the hourly. I have to wait. And these, these types of decisions, it's a big, oh good, thanks for, I'm glad it's clear, Stephen. These decisions are important, because what we have here is, if I was to get long here right now, and I know my really kind of do or die level is down here at 56, I don't want to take, $5 of heat there on gold. That's $500 a contract. I prefer not to take that kind of heat if I don't have to. So does that mean sometimes missing trades? Yeah, but it means at least when I get in at a level I'm comfortable being in at. I'm comfortable taking heat at that level. Like yesterday, I took a little heat on that Russell trade, right? I was down $300 at one point, but I was, I don't like taking heat, but I was comfortable taking the heat because I have confidence in that level, right? So the level I have confidence in right now with gold is 2058 or lower. Really, 2056 is what I want to see. Does that make sense? All right. Let's take a look. So I like gold from the long side a lot better than stocks. Let's take a look at ES. A little bit of a pullback here on ES. So ES got really shut down. Do you guys see that there? Look where that hourly closed. You see, this is why I'm so patient. This is just such a great example. Like, right, we're going up, we're bullish, everybody buys here. Oops. One contract ES. Let's say you bought it at like 32, you're looking for the move, and 32 to 16. I mean, come on, guys, 15 points. Not fun to be down $750 on the ES on one contract. So this is why I like to wait for the, you know, what I deem to be, you know, high probability trades. This is why I'm so picky. Because you lose enough times over your career on, you know, crappy trades. And you just finally reach a point in your understanding, like just wait for good trades. That's what I try and do. So yes, we're just waiting, see if we cycle back down here to the lows. No rush right now, but interesting to see stocks selling off. Maybe Kashkari said something. Nasdaq's kind of the same. We'll see. I'm still interested in, but I want to wait for that hourly close. I can't follow them all in the 15 minutes. And gold definitely looks better. I mean, the 10-year is still pushing nicely to the upside. We're making new highs here on the 10-year. This is beautiful for gold. If we stay up here on the gold's pushing. But I got to wait for a little bit more of a pullback. Let's look at silver. Yeah, silver's just ripping. Crude. Here was the close for crude. I mean, there's a lot of support here. This is our area. But I don't really have, I need to see something a little bit more definitive on my hourly chart. So the one I like, bonds are heading higher. Dollar is getting weaker, of course, because I have a dollar wire coming in. So why wouldn't it get weaker? I wanted to get strong. Okay. So I like gold, silver, bonds. You know, this is looking like the trade right now. So let's see. That pullback. Just gotta wait. The ones that are clear, they're just so clear. Like, for example, if this bar was to close here and everybody gets long and they slam it down here, that's what I want. I want to get long there. It's an exhaust right into my area. I just know that that's the area. If it's tested, it should hold. And I wait. You wouldn't believe it. Some weeks you get, you know, 20, you get 3 or 4 of these opportunities every day. They're just bang. They're just all over the place. And then some weeks, very rare to see this view, but makes sense with what we're seeing on the charts. Bringing up the ES, we're rallying back a little bit here. Everything's clear. Okay, good. So just kind of keeping an eye on things. Go back to gold. We might just rip up, and that might be the only pullback we get. But it's okay because there's going to be new levels throughout the day, right? So right now my level is 2056 to 2058. Really anywhere right in here. This is my level right now. And I'm waiting. And if this just goes higher without us, then as the volume profile shifts and things are developing, then we'll have a new level. And if the new level is up here, that's fine. It's all about the context of what we're seeing in that moment. I think the weekly on gold, if I bring this over here, I think we do want to stretch our legs a little bit and challenge that trend line at that near high at 2080. I think we want to go there. And on the daily, I think we want to get up and challenge that 2085. So I think we want to get up there. We'll see. But if it's going to get up there, we need some juice. So I got to pull back and try and shake some people out. All right, so we're waiting. 10:08. How you feeling today, Steven? You going to work soon? Oh, by the way, Steven, did you watch what I said about the Russell? Did you ever, rewind back to that and check it out? Did that make sense to you about the Russell? Because you saw, right, later in the day how the Russell did go higher. So we ended up making the right decision. Give a good shot of going short at that level. That's the way I like to trade. Just kind of, I'm bobbing my head because I got some music going on in there. Just keeping myself wide awake. Oh, you're working from home today. That's nice. Awesome. Is that like a company policy, like work from home on Fridays? If so, that's a great company. I'm working from home today too. It's fantastic. That's the best. I love this. My most favorite part about all this is that I just get to be home. I love being home. Nobody gets to tell me what to do. So here's ES. So we're just waiting. Yeah, thanks. Yeah, that was good risk management. I feel that way too. So we got in, gave ourselves a shot. Looking at bonds here. Still a lot of resistance on bonds up in here. But the 10-year is really making fresh highs. So we're going higher. I can buy pullbacks on bonds, I think, as well. So we'll just wait. Somebody's going to give us a pullback, either on the hourly. You know, I can't follow too many charts on the 15. So really the gold is kind of what I'm interested in here. Just kind of hoping if we get a pullback. So I'll just leave gold up for now, but we'll keep an eye on everything. Steven, if you want, you can keep an Excel spreadsheet of the live calls in the channel, right? Because then, you know, we see. So the first video, you can go back and check that silver trade on last Friday. That was whatever that was about. Well, technically, there have been on this channel live streaming. Like now that I'm committed to live streaming, we're going to do it every single day for 2024, unless I get, you know, the flu or something. But 2 trades on silver last Friday. 1 win for 875, another win for 100 that I should have held on to. It would have been like another grand, but that's fine. That was 975 in silver. And then I actually made like $30 on a soybean oil trade that I entered, but then closed at break even, but it made 30, whatever. Those were the first 3 trades. And then the platinum one, since I missed it on Monday, that doesn't count. And then yesterday, the Russell lost $30. So that's, I'm keeping track. You can keep track too. You're my auditor, Steven. Because it's important. Like we're saying, you know, what's going to happen live before it happens. So that's, you know, that's where the rubber meets the road. And I think it's fun. I like the challenge. I was thinking to myself, like, you know, what would make me stop the channel? So, okay, well, I guess if I just choked under public pressure, which, you know, that's a possibility. You know, I've never taken a drawdown publicly. I've taken them privately. I'm going to take drawdowns. You know, that's trading. How am I going to feel when I take a drawdown publicly? Well, I'm going to just work on taking it publicly the same way I take it privately. So I'm up for the challenge. All right, so we're waiting. It's 10:13. Would you say, you said you're looking gold long? Yeah. What about crude? Crude's here 73. Yeah, see, so crude's, this is why you got to be patient, guys. I mean, you just, so many people when they back test or, you know, whatever, like, oh, I would have bought, it's like, yeah, but for all the winners you'd see, there's 10 times more losers that you're not seeing. When you trade the hard right edge, you see these things. But look at crude here, right? Imagine everybody, just like yesterday, going to the moon, going to the moon, going. I mean, this is not fun to sit through. I hate sitting through. I don't like to be underwater, which is why I day trade. People ask, why don't I? I'll sometimes put on a trade, like, you know, overnight. It's rare, but I'll do it. But that's, you know, when I see something amazing that I want to put on, I'll put it on. But the reason I day trade, you know, like, I would rather be out playing tennis or surfing. Well, not in Sweden, but we moved back to the Canaries. I'd rather be surfing during the day. I mean, I love this, right? Don't get me wrong, I do love it. But if I didn't have to be staring at a computer, I mean, I would love to be outside, like exercising and surfing and doing that kind of stuff. I do this. It helps that I love it. That's how I sustain it. But I do it because I don't like taking heat on trades. I like to get in the flow of the market for each day and try and find spots where I really like the trade and where it's like a line in the sand. Like, you know, the Russell yesterday, that 63.5 level was a line in the sand that had to hold. That's where I want to take that trade, because I know if I start to see it breaking, boom, I'm out. That's it. Where gold right now, my line in the sand for this current moment is 56 to 58. That's where I'm willing to take action. That's why I stand here and watch this, because I try to get in on trades that allow me to take as little heat as possible when the setups occur. Yeah, you're long bias CL. Yeah, I am too. But we're gonna just have to see. I mean, we'll see where I would love to get something down in here around 73.40, this low volume area on the daily profile. And if we got a OMA pattern down there, it'd be awesome. So we'll keep an eye on crude, but I'm more interested in the hourly. Gold is trying to push higher here, but I still have to wait for a shakeout lower. I'm just not buying here. Let's look at silver. Silver's leading the charge. Silver's having a monster day. Check back to ES. Oh, I'm going to check Zero Hedge, what they said about the PPI. I got to check that out. Yeah, ES has some support here for sure. I think I'm more interested in waiting for the hourly on ES, just like the hourly on crude. I think it's prudent to wait. Here's the Nasdaq. I think it wants to test lower first. Bonds are holding steady, so I think stocks are still a lot of support down here. But gold, again, just filtering the market. Gold's the one. I maybe I'll take a trade on one of the indices. I don't know, but gold is really what I'm watching. Silver too seems very strong right now, and crude. So those are the big ones I'm watching. This dollar's weakening, rates are dropping. Gold, silver, crude look like good markets right now. I think these are the ones we have to focus on, because there's a possibility that if we look back at ES and NQ, we're stuck in the range. So what you can see here, I mean, a lot of people are already trapped from 48.30. We could cycle back down here, but with, look, the euro's holding steady above 110. The 10-year is, ripping above 112.14. That was our key level. It's at 112.22 right now. I think gold's got a long way to go when we look at the weekly volume profile, the previous points of control from the previous weeks. So right now we're seeing weak dollar, strong bonds, dropping rates. Gold is rallying not only on the back of the weaker rates, the weaker dollar, but the war in Yemen. I think crude should hold on to its gains today. So crude, gold, and bonds maybe if we get a pullback, but crude, gold, silver, I like those the best right now. Crude, I want to see where this hourly ends up here at 11 a.m. Maybe Kashkari can spook the markets and give us a good long setup down here, because crude just loves to go take out stops, right? So that low right there, it's the value area low, 73.40. If you look at the crude weekly volume profile here, you got the value area high. That's broken. Resistance going to become support right now. So that's 73.40 area on crude I like right now. Look at the daily volume profile. Let's go ahead and expand this out. So look, this is our low volume rejection area at the value area low. So if I get an OMA pattern down there on crude at 11 a.m., I'm gonna have to take a shot. We'll wait for that to develop. So that's crude. We'll keep an eye on that. Let's go ahead. Look at gold. We're waiting for 2056 right here, 2058, based on the hourly support level here. Volume profile, we got a week. It's 2056 here. right? This is a zoom in of the daily gold volume profile right there. You see that low volume area here? 2056. That's what we want. And on the weekly volume profile, just reminding all of us here, boom, that old high, that's also at 2056. So it's a nice confluence of levels for 2056. Especially, guys, this would be a gift if gold, you know, heading into this 15-minute 10:30 close, if gold would spike down here like this and just give us an exhaust right into our hourly level, right into all the stuff we're talking about. This is where I'm willing, if that happens, that's a gift. I'll take it. I'm looking for a move like that. If it doesn't happen, I'll lose a few dollars on gold, a few $100, and then I'm out. But that's the area where I'm willing to take some risk on gold. And that would be an awesome place to get along. So we'll wait for that, especially if the 10-year continues to hold above 112.15, which is at 112.23. This is where we want to be, you guys. I'm excited about it. We get the lemon water. Any comments, questions? Go ahead and fire them in the chat. The ES wants to push up from here. I think, yeah, we covered that, Steven. But yeah, I think we're going lower. I think the longs are loading ES here. Hang on. Yeah. Because we're coming out of, you can see this is ES. That last hourly close right up there, value area high, low connector. I mean, we're in congestion. We're cycling back down here. I think, you know, given the weak dollar right now, rates falling, bonds, you know, skyrocketing, I think the ES is going to see a lot of support down in here. So I just think it wants to fish a little bit lower. I might long it. We'll see where we're at 11 a.m. I'm going to let it develop. But gold is what I'm most interested in right now. Seeing if we can get this drop, this flush. I mean, if you guys trade much gold, you know gold, it loves to piss you off. Like it just, you'll be in a trade nice and comfy in gold, and then it'll just flush. So I like to wait for the flush. If I'm getting in long, I want to wait for the flush down and get in at a key level like this. I mean, look at silver, 23.69, just ripping. Platinum's also ripping. You see platinum's, you know, just big push up here. We're pulling back down. Platinum, as we said at the beginning of the day, it's not going to be as strong as gold because look at this daily downtrend on platinum. But long side is where we want to be. Gold, crude, indices. And the key, again, is to keep our eye on the 10-year, the 30-year, the ultra bonds. Keep our eye on the euro dollar. We're holding firmly above. We're at 110.09 on the euro futures contract. Check the pound. We haven't looked at the pound in a little while. Yeah, guys, look at the pound pushing higher against the dollar. Probably even the odd and the CAD are as well. We'll just do a quick check on those. I'll go ahead and check the odd. Yeah, odd's pushing up, just kind of trying to pull back a little. This is, I think stocks are just going to stay in congestion the rest of the day, but good support, especially if this situation continues with, you know, rising bonds, lowering yields, stronger dollar. You know, we'll just let the ES work its way down here for the 11 o'clock close. Maybe get a situation down in here into support where we buy it, push back up in here, and then for the rest of the day, it just kind of cycles like this. Definitely can play that. Back to gold. Trying. It wants to flush. You can see the volume point of control here on gold. Right at this area. Again, we're just looking for that low volume area here. Push back up and then go. So that is where we're at. I'm going to get some chocolate and a cookie. Take a 5-minute break. Well, yeah, we got 5. Yeah, I don't want to miss this gold pullback, that's for sure. But I do need some chocolate and a cookie. I got 6 minutes until this 15-minute bar closes. I'm going to run up there. I'll be right back in, 3 minutes because I'm not going to miss this. So let me just bring this up here. All right, got the dark chocolate. Don't want to chew in your ear. Just want to let you know I'm back. I'll mute it, but I'm here. We've got about 3 minutes. Steven, it mutes it, right? When I go like this, watch, I'm going to go like this and mute it right now. Now it's not muted. Is that correct? That's my understanding. When I touch this button, my microphone lights go off, I'm muted. Whereas right now I'm not muted. I'm going to read. We got about 2 minutes. We could get a flush here on gold. Keep an eye out. Let's see what Zero Hedge has to say. The Houthis are undeterred after U.S. coalition pummels 60 targets. Crude's rallying. Gold too. This is why. I don't think this is going down anytime soon. No, still not in our area yet, but we'll see. We can flush hard and fast. You gotta be ready. So we've got about a minute left until gold closes here. Waiting for a flush. Mm. 30 seconds for gold. Gosh, it's funny. It's only 10:30 a.m. Eastern, but I'm here in Sweden. It's like pitch black. 4:30 p.m. Feels like I've been standing here for hours. Time's going by fast and slow at the same time. Strange. All right. Latency check. 5 seconds. 10:30. I'm still waiting, so not doing anything here. Go back to ES. Good, I get some dark chocolate. I think this is the way I love trading, because it's like, it's like you're waiting for your trades just patiently, and it almost becomes like a meditative experience, just waiting for these trades. I really like it. So check out ES here. You've got the weekly point of control at the weekly value area low, reinforcing the congestion zone on the hourly. So a lot of good support down there. If ES flushes down in here, I'm going to have to take a long at some point, but I'm keeping an eye on the hourly here. NQ similar. Just want to see where I am on. Yeah, I like the structure better on ES, but NQ is not bad. Let's ZN still at 112.21. Holding on to the highs, for now. Encouraging for gold. Silver's pushing higher, nice. But I gotta wait for my zones. Platinum. I mean, platinum's just, I can't long platinum. It's just too weak on the weekly and the daily, so I'm leaving platinum alone right now. But certainly if gold could just get a bit of a flush, it's trying. I know it wants to. And crude we're still waiting for. Yeah, see, this is beautiful. Isn't this great, Stephen? We're waiting for crude to come to us. Yeah, it's moving exactly to where I want to get long. It's awesome. So I would love, I'm not going to go into a whole lot of detail, but if we close down here around 72.80, I'm going to be looking to get long crude. But I'm waiting for the 11 a.m. hourly close, so I'm not in a hurry right now. But this is just a great example of why it's wonderful to just wait, you know, for very opportune zones. What do you think, Stephen? Are you these last few days you've been here? Are you? Is it really having a positive effect in terms of seeing? Because you've gotten to see plenty of examples now, right? Of how just planning the trades out, watching, waiting, not to mention the intermarket correlation, but just how we're waiting. Do you see how many, you know, traps we're avoiding? I mean, it's just, it's wonderful when you see, like, you know, yesterday and today, crude came back to the support levels. Like, no, better down here. Just waiting for those key spots. I love it. Gold, we are waiting for a little bit of a flush. Yeah, so the Zero Hedge is reporting that the yield curve disinverts. That's what I was talking about on that cooler than expected PPI, which apparently trumps hotter than expected CPI. Yeah, that's what we talked about. Odds of a March rate cut have jumped back up over 75%. Yeah, I think you see gold go higher with the war and the rates dropping. I think the market's still ahead of itself, but for now, looking good. Checking some emails here on my other page. Yeah, it has been a slow week for good trades. And yeah, good practice learning to sit on the hands for sure. It's probably the #1 skill to develop in trading is knowing when to sit on the hands. Just like poker, right? You got to know when to hold them and fold them. Got the Lint. Maybe we can get the stream to like 14 viewers at some point, and Lint will give me a sponsorship deal. Like you get unlimited 90% Lint. It'd be awesome. What do you think, Steven? Can you arrange a sponsorship deal with Lint? Be awesome. A Discord channel? Okay, I'll look at that. Yeah, give me some ideas how we can grow the stream, Steven. That'd be cool. Because, you know, I know that if people knew what we were talking about right now, they would love to be here and learn and hang out. But nobody sees the stream. They don't really know, you know, what they're missing. So it'd be good to at least make people aware of it. Discord, I'll write that down. Yeah, everybody has a Discord. I don't even know what that is. I know it's like some kind of a chat or something, but I'm not involved in any of those myself, so I never really looked into what that was. Yeah, that'd be cool, but I think we're gonna have to get like, you know, we'll probably have to get some streams with a couple hundred people at least before we can work up to podcasts. Probably as we start growing the live track record, and people can go back and see we're talking about the trade, we're planning the trade, and everything's working. They can see what we're doing. Then I think once we develop some traction with that, that's what would make people interested, I think, because they want to see results, and rightly so. So this is how we show them. But yeah, desire to trade. I like him at the end. He seems like a nice guy. And Humble Trader, she seems cool. Yeah, that'd be fun. But I think the podcast will, if we develop and things grow, and the podcast would probably like be the next step, right? I would guess. I've got some ideas too. We'll talk about. Just wait for gold to come to us. I'm liking 2056, 20 down in here. Let's look at ES, but I appreciate your idea, Stephen. It's nice to be able to bounce the ideas. And ES waiting for the 11 o'clock. Bond still holding pretty strong. Gold we're waiting. Crude we're waiting. The market whisper. Yeah. Well, you'll see as you're here day after day after day. Picking levels is definitely my thing. Famous last words, right? No, I'm pretty good at picking the levels because I'm just putting a lot of different pieces together, and my methodology works very well. So when I combine my methodology with the volume profiles and everything else, and the intermarket correlation, it just gives us a good idea. But let's see. The level I want is 2056. Yeah, white chocolate. I like that. Like M&M, right? I'll start rapping like white chocolate. Let's see if we get down to 2056. I like that level. But I'm not going to take any action before then. Yeah, I really, I try to pick my spots, try to pick my levels, and then I do my best to keep my losses manageable. So like if I see a trade that, there's a level, but I think it really goes into, you got to pick those levels correctly. And if you can do that, then, for the Russell, I know I had that level nailed. I know that's a key level for a lot of reasons. So if my short is correct from there, you'll immediately see evidence that it's correct, and we just weren't seeing that evidence. So then it, oftentimes I'll do that where it's a bit of a trade management strategy that I can share with you. Maybe I'll do a special video. See, I think these types of practical things would really help people. Like if I'm in on that Russell yesterday, right, and I took on those two contracts, I think at one point I was down about $300. So I was taking heat, right? But I knew I had an overall good level. So I'm more comfortable holding on to that heat a little bit. Sometimes it just blows through and then you got to take that $400 or $500 loss. But generally speaking, if I pick the level correctly, like take a few hundred in heat, usually it'll come back down close to where I got in, where by that time I can see, I don't like this, and just cut it right around break even. So, usually the trades that you pick correctly, especially for me and my levels, they kind of tend to work right out of the gates. And if they don't, that's an immediate red flag. So for me, that's a really important thing, that if you can manage the risk and keep the losses at a reasonably small level relative to the wins. That obviously helps things out. Yeah, exactly. I mean, you could clearly see this morning with the 10-year that, and you could also see that level that I called, it was a good level, right? Like, where did the 10-year stop? I mean, it stopped there for a good half hour. I just didn't want to be short there because I could see the volume coming in on the profile, and we didn't get rejected, so I knew I didn't want to be short. That was, good call. So this is a good lesson in why it's important to wait for pullbacks, because they happen. And now I'm not rushing into the gold right here, because I'll tell you what I'm seeing on the 15-minute and the hourly. So now I just wait. Key level down in here, 55 on the hourly. 15-minute right now, it's breaking some key support, so we should get a good look at how it reacts to that 55. Because you'll be able to see, watch it, like you'll be able to see if it, you can see. $10-year still nicely up at 112.18. Euros, back to 110. But I think as long as we hold that 110 level on the euro, should be good. We do have Kashkari speaking right now, so that is, it's not Bernanke, it's not Powell, but it's still, Kashkari could say something stupid and things get extra spooked. You always got to be on guard. So we're watching. Really curious to see that 55 level. Look at the 15 in a sec, but you can see here. Oh, yeah. Yep. Well, you'll learn. That's the whole point. So you see this low volume area here? This is what we're interested in now. Let's see. Does it get rejected? Does price hold? We don't want to see price hang out here for a long time. And I'm now at this point waiting for the hourly close. And you say, Andy, how do you know? Well, just little things like this 15-minute chart here. We're breaking a key level right there. It might hold and go up, but the odds are that we're fishing lower. Then I'm just going to, now our next 15-minute check is going to be the hourly check. We're coming up on 11 a.m. And it's probably, there's a lot to check at 11 a.m. I mean, look at, I want to keep an eye on gold here, but the ultra bond, the 10-year is still at 112.20. That's great. Euro is just stabilizing at 110. We'll see. And ES is at 48.13. We've got all that support down there at the weekly point of control. Like where was that? 48.05 or something. I don't want to switch over to that chart right now, but everything's looking stable. So I think this pullback in gold is, I mean, if it's correct, we're going to see it pull back here and then just, rock it. If it's not correct, hopefully we'll get some information down here. Here you can see, kind of zooming in. This is right at that low volume area, and the bottom of that low volume area is right there at 55. So that's what we're waiting for. Let's just check crude while we wait, because we got about 14 minutes. Oh yeah, beautiful. I think that might be a long spot. Whew. I'm gonna wait for the hourly close on crude, but this could be the spot right here. This could be the support. Value area low right there. I'm curious to see this. I'm waiting until that hourly close right there, but that could be your flush. Keep an eye on crude. No. Oh, a buy stop, for entry. No, I don't. I use limit orders. I never use buy and sell stop to get in on the break. Never. That's just my preference. Got the snowplow going by. They always seem to go by right when you need to focus. I like this support down here on crude. I mean, this is right in here. This is very interesting. We'll see. ES is at 48.10. So it's gonna be interesting to see how ES reacts to like 47. It's 47.95-ish is the weekly point. So the support is really down in here. But crude and gold are better than ES in my opinion. That's strange. Look, all of a sudden, see, Kashkari might be saying something right now. You see how this is the dollar now getting stronger against the euro. So far, we just got rejected at 110. See how things are interesting, how this develops. So now the dollar's getting a little stronger. $10 dropping off a little bit. Let's look at this is a good support level for crude in here. I think crude should be pretty strong here, I think. I mean, crude looks pretty good here, I think. Starting to move too. I think that was the buy there at crude. 73.50. So I'm keeping a close eye on this. Oh yeah. Crude looks strong here. And gold, where are we on gold? 2058.9. Yeah, we're stabilizing. Oh yeah. A lot of volume came in there. Yeah. And crude is looking nice and strong. We'll see where crude closes, but I want to buy it down here. I really wish I would have been watching this a little earlier, but I was so focused on gold. That's okay. Look at gold real quick. Yeah, I think, see, gold has responded to that 56 level. See where these close. We got a few minutes. I mean, this is the key level for crude. You've got, this is the level. I mean, if it doesn't rocket out of this level, something's wrong with crude. Gold is at 2058. Still waiting for gold. Crude I like down here. Yeah, this is the level for crude. I think 73.80 now. This is kind of the level for crude. I'm putting an order to long crude at 82 right here. Yeah, I just put an order to long crude at 82. I'm filled. Long crude at 82. It's a little nerve-wracking that crude just can't hang on to gains, but I can't not buy this. Just too many reasons to take a shot. Look at all that selling come in. I want to see a lot of support here. Gold is at 2057. 3 minutes to go. Hey Andreas, how you doing? I'm buying crude oil here, so I'd like this area to be strong. I'm not liking what I'm seeing right now on the 15-minute. Oh, you have a break. Cool. Welcome. We'll see where this closes. Like, you would think that they just made a truce with the Houthis. It's like incredible. We'll see how we close into the 11 o'clock hour. I'm still interested in gold too, but crude looks good here. If this level can hold, we'll see. I want to see some support here. I mean, it's volatile right now. We got to be aware of that too, with what's breaking out in Yemen. You on your break, Andreas, from driving? How late are you working today? All right, we've got a minute and a half until this closes. Gold is at 57. We've got 45 seconds here until this hourly close. I really want to see us close, above 70 would be nice. Whew. "30 seconds. "10 seconds. I mean, this needs to go up or I will bail. I want to see some buying come in. Volatile. And gold is at 2058, so I'm going to go take a look at that, but I've got to manage crude right now. It's always amazing how you get into a trade that's right when the kid starts going nuts. Right when you've got to concentrate. Oh man, I got to get a bigger house. Big enough, but not with a 4-year-old. Yeah, I'll see you, Andreas. Take care. I mean, this is my level. I'm going to hold this on crude. Right now, I'm down 290 on it. But, the support area is this whole area down here. So I've got to give it a little bit of a chance to work. Unfortunately, my entry wasn't fantastic. I thought I entered early prematurely because I thought that this 15-minute was going to go, and we didn't. That's crude. Yesterday and today, getting punished, not waiting for the entry. That could be a factor of being so patient. I mean, if crude can't hold on to this level, then something is not right. Gold is at 56. I'd like crude to get going to the upside so I can get back to gold. But I gotta watch crude here. I see some, I want to see one of those violent crude moves to the upside where sometimes when you catch crude right, like it'll just rip. Come on, baby. Where is an F-16 attack on the Houthis when you need one? I'm just kidding, guys. I hate war, but gotta make some jokes. All right. Can you please rip to the upside here, crude? That would be fantastic. Andres is cool. He's in Austria. I check gold here for a sec. Yeah, gold's got a lot of support. I think these are going to be pretty correlated, but gold's got a lot of support here as well. Gotta probably try and buy gold, I think. Here goes gold. Try it. I want to buy gold, but I gotta. Crude is just languishing here. Why are you languishing, crude? I like gold down into that level, but I gotta watch it a little more. I mean, gold and crude are going to be pretty correlated today, so I'd like for crude to start ripping. Yeah, crude's a tricky market. It's volatile. Yeah, we need to rip here. I think gold's going to go test that 2055, and it does. That means crude's probably going to test down here as well, but can't cut this crude and just have to. A lot of support here, but looks like it's going to want to test down here first. I mean, we've got The euro is kind of steady with a dollar at 110. We're at 109.98. Gold's at 57, 56.9. Bonds are hanging on up there. I mean, ES is hanging on. I mean, I don't really see a reason why crude should be in its own world and fall through the floor here. But then again, crude's been weak lately. You know, we know this about crude. Yesterday, when you had that sell off here, you see it took a while before it rounded the bend. It's not really behaving here very well. I'm holding it for now. I have a feeling it's going to flush down here. Oop, that's quite a little flush. What is going on with crude? This is where we've got to see support here. Daily value area low. This is where the support needs to be for crude. Got this soon, I think. Okay. Still in for now. It is weak. Just focusing. Gold's at 58. That was a poor entry on crude. Had I waited for the hourly close, I probably wouldn't be in this position right now. I'd be watching and waiting. So I gotta wait. I gotta wait for those 15-minute closes. That's why they're dangerous. I think there's probably just too many people long on the back of this war. I'm gonna have to cut this here in a sec. They're definitely going for the stops down here. Oh yeah. Ooh. All right, I'm out. That was 690. So that's a loss. I will have to accept that and move on. Well, crude didn't work there, you know. We're a lot of support. See, this is crude is, I'm okay with the loss. This is good, Steven, because you see, crude has been giving us signals all week. And I mean, this is, look at this on the daily. I mean, that's brutal right there. It's just getting smashed. So crude is, and I felt that way about crude, but I had to take that shot. That's fine. Let's go to gold. Go to gold. All right, I'm long gold at 2057.4. Yeah, that was brutal with Brood. I mean, that was a big support level. That's why I kind of held it. I was willing to take some heat, and then when it just got flushed there, I had to kill it at market and probably got it at a horrible price. Lost 690 on that trade, but that's all right. I mean, that was a good support level for crude. We've got a war erupting. The fact that it couldn't hold that level, I mean, that's pretty interesting. That trade is in the past. Let's turn our attention to gold. I mean, let's see if gold is worth its salt. You got a lot of support here on gold. We're long from 57.4. And the 10-year is hanging on to its gains. The dollar is, you know, the euro is kind of hanging on there at 110. Indices are hanging in there. I mean, gold has every reason to rally from here. So regardless of the outcome of this trade, it is a good spot to try and be long gold. We waited for this spot and we have our reason. Just like crude, we had our reasons, we took our shot. I'll check back in on crude later, but that's just a brutal drop. Let's see if gold can try and get something going. I mean, my area on gold was 55. We made a low of 56. So we still might even want to go down to 55. I don't know, but I can't. I got to be long from 57.4 here just in case it starts going up. I mean, there's a lot of support here. Indices, I mean, the ES is 48.13. 10 years, 112.17. Silver's 23.50. My kid is upstairs singing and just absolutely screaming. It's unbelievable. It might be, yeah. I mean, there's a lot of support here. A lot of support. All right, I'm long a second. I'm long 2 gold from an average of 57.3. I mean, are they going to flush gold now? This is unreal. Let's see. Still long. mean, so far it's getting picked up at 56. You can see that, right? You see how it snaps back up, but still doesn't mean much yet. I mean, we're not going yet. Buying to come in. It might just not be our day. Some days are not our days. Well, did you see that snap back up? That's a good sign. Now, if we can get something going to the long side, that's what we want to see. ES is 48.17. Euro's trying to get back above 110. See if silver can hold 23.50. We're 49.5. Definitely made a mistake on that crude trade by entering before the hourly close. So that's on me, but that happens. See if we can get something out of gold. We'll see. We're long 2 contracts from 57.3. Big selling coming in right there. Yeah. Yeah. Bonds are strong. You know, the dollar is not putting on major gains. The ES is holding up. Everything's holding up. It was just that crude. What happened on crude is, you know, I want crude and gold to both respond to this war trade and head higher. So I'm a little bit more on edge with the gold because of what happened in crude. But still, given where we are with gold right now and given the scoreboard, I've got to give gold a little bit of chance. But right now, we're just getting shut down between 58 and 56. I don't like to see, you know, right now you've got somebody sitting on it at 58. You can see. Yeah, the board overall is, you know, it's a good board. Well, regardless of what happens, if I end up losing a couple grand today, it is what it is, because I would look back at this and everything I'm seeing, I would say I would have to be long here. So I just have to be. Win, lose, or draw, I got to be long. Look at that, 58. We got to get through 50. Hey Ez, how's it going? I'm just managing a trade here. Hope all is well with you, my friend. I'm long gold here, and I just took a nice little loss on crude oil, so just kind of keeping an eye on this gold trade. Crude just smashed through key support. I thought it would rally on the back of that war news. The fact that crude couldn't hold its support has me... I like this gold trade a lot here. I'm long, 2 contracts, but the fact that crude couldn't hold its support just has me a little bit more edgy on the trade here. Yeah, that's our buddy Steven in Utah. He's in Utah, Ez. You can say hi. We had Andreas here earlier from Austria. This is this 58 level. If this could just try and get up and through there. It'd be great if we could get a little bit of a push. Well, let's see if we can get some follow through. Just keeping an eye on this, you guys. We're long 2 from 57.3. And we want this fucker to explode to the upside. I'll have to look at... I wouldn't be surprised to see crude hold. Maybe I just got taken out on a bad move there with crude. It's possible. We'll take a look at it in a sec. Right now, I just gotta stay focused on gold here. I'm gonna try and take one off at 61-ish. We'll see if we get up there. I'm still long both. Still holding both for now. I don't have any orders in or anything. I'll let you know. Yeah, crude might hold. I think I might have just been a little unlucky there, but you know, it happens. See if we can Get some follow through to the upside here with gold. Silver's 23.54, euros kind of hanging in there 110, crude 73.15. Yeah, bonds are, the 10-year is pushing back up toward highs of the day. ES is stable. We should, hopefully gold will just rip here. Ez loves crypto. Oh, he might have had to go. He's in Argentina. Different time zone there. But he loves Bitcoin. Point of control on the daily under us. So we want to see some follow through to the upside. $10 pushing, euros back above 110. I mean, come on, gold. Oh yeah. Yeah, it works great on crypto. Definitely. All right, I'm closing here. And I might re-enter. So I got 480 out of those two. And we'll see what happens here. But if I'm looking for, you know, the reason I closed those two gold contracts, I'll tell you two reasons. Number one, I just took a $690 whack on crude. That does impact how I make my decisions, absolutely. And number two, I did give this trade. I think we're still going higher on gold, but you see how we couldn't even get up to these extensions? So, you know, that just tells me I mean, the hourly is super bullish, and I do think we're going higher. But the fact that we couldn't even get up to that extension, I mean, it's pretty shocking to me. So I think there's a chance we could come back down here. And if we come back down here, you know, I'm going to try and buy it again. We'll see. This is just the intricacies. Sometimes, you know, you manage it very well and you look like a genius, and sometimes you fuck it up and you took off the trades and it keeps going and you would have made all kinds of money. But I'm just trying to trade, you know, what I'm seeing again. This is how I try to manage everything. So for here with gold, I was holding my two contracts, and had we gotten a close pushing up against this extension here, I was willing to, you know, hold to see if we can get some follow through, because that would have been a really strong push. But I had to make a decision. Thought, okay, you know, I still think we're bullish overall on the hourly, but the fact that we couldn't get up there, I decided to take those two off. This also helps to regroup the psychology, right? So this is important. This is how trading, this is like the reality of trading. You know, this is not like, you know, the crypto bro Miami way of trading. So let's see, we're flat. Just summary, we're up 480 on gold. We're down 690 on crude. I don't look at P&L when I'm trading, so I'll just look, you know, quickly. I'll look at the points, how many contracts, boom, then I go on to the next one because I generally know where I'm at, but I like to not focus too much on it. Thanks, Ez. Appreciate it, man. Yeah, that was, we'll see what happens, but you know, I got whacked for 690 on crude oil and then coming right in on 2 contracts of gold. You know, that took some huevos to hold that there because that might have fallen through the floor and I could have lost, you know, another 750 and then I would have been down 1400, which would have been that would have been fine. But, you know, I had to take that trade. And so far, I like the way that I managed it. So, you know, not an easy week at all. I mean, just the fact that crude just can't hang on to a gain. I mean, I think some crude longs are getting hammered. I want to keep an eye on gold here, but we'll look at crude again in a second. But yeah, it's been pretty slow as I had a good Friday last Friday, and then this Monday I missed a good platinum trade, and then this week has just been choppy. I'm being patient, watching, waiting. I took a break even on the Russell 2000 yesterday, basically. And now today I've been patiently waiting, picked a good level for crude, and crude was like, no, that's not a good level. But this, I think, still is a good level with gold. We got the daily point of control here at 2058. We got a lot of support here. So I'm looking, if we come back down into 2056, I'm going to try and get long at 2056.5 if we get down there. Close those 2 gold contracts, so I'll reopen one if we get down there. I'll put an order here in a second. I'm going to put an order at 2056.9, maybe 0.8. Put it at 0.8. I got an order at 2056.8 to go long. Only one. Currently sitting down about 210 on the day. For all intents and purposes is, you know, break even in my mind, so that's fine. That's nice. It's 11:30. I mean, just shocking that we didn't see any follow through on that crude, but I'll study that trade later. Still, we're hanging out at 72.95, but you see, I still have my order in. I like this order. If it gets down there, I got to get long one more contract. Silver's hanging out at 23.50. Euro dollar future still at 110. 10 years pushing towards highs of the day. I mean, you got to like the setup here on gold. A lot of support here. At the daily point of control here, right where we're at on gold. You guys see that there? Generally, I don't like taking trades around the point of control. It can just get messy. We just got whacked on crude. I think we were also around the daily point of control there. But I do think that this support level just looks too good that if we can get long again and then catch a pop, look at these volume nodes here, these high volume nodes, these could definitely shift to the point of control higher. So that's what I'm looking for. But let's see. The order's in at 2056.8. 1136. What is Kashkari? Is he done speaking? Is he trying to F us on gold? What are you doing, Neil? I think his name's Neil. So the order's there. I like that spot for the order. Famous last words. And crash straight through. I'm like, well, I liked that spot. Let's see. We're not filled yet. Not filled. At 2056.8. There's an old saying, don't be a dick for a tick, but I gotta leave the order there. I probably should have it even a little lower, to be honest. But it's where it is. Didn't get filled there. It touched. A bit. Okay, I'm filled. I'm in from 2056.8. I mean, I might be making a mistake here. This has got to be support here. I'm being kind of aggressive on this. I'm not waiting for the 15-minute close. So let's see if I'm going to pay the price again. Well, looking like it. I mean, this support has to hold here. I'm going to cut it and wait to get long lower. Still long at this exact moment. And I'm cutting it, so I like this trade, but I think we're going lower. I'll tally it up later, but I think I lost 50 bucks or something. Doesn't matter. We'll look at it later. I still like gold here, but I just think that these fuckers want to pound it through this floor and come down here. So let's see. Because really, that I bought that there because the reaction, if there was a reaction there, you should have seen it snap back up quickly. We didn't see that. So now I'm really interested down here. If it gets down below 54, I'm longing. We're flat, but I'm waiting to long down here at about 54, maybe 53.8. Got a nice low volume area there on the daily. Still have a lot of support here on the hourly. I think this is just Kashkari playing games with us with his little Fed talk. All right, so I'm looking to get long, guys. Gold down in here, 53.8. Silver's pulling off a little bit, 23.40. Dollar's getting a little stronger, but you still have the 10-year pushing toward the high of the day. So I think this is just a little bit of a stop flush down here. Now, if this closes back up here at 57 and I'm not able to get filled down here, then I'll just probably re-enter back up here. I don't care, but either way, I want to see how this reacts. If it comes down here, I'm going to get long right now. If it doesn't go down there, then I'm just going to re-enter up here, but I'm waiting for the close of the bar. All right, here's our support coming in. Still got about 5 minutes to go in this bar for this 15-minute close. I'd love to get long down there at 53.8, but this may be it. I think with the 10-year still pushing toward the highs, hanging on there. I mean, ES is still stable above 4,800. We got to like this long. I mean, to see gold just reverse all this and pound down here, anything's possible, but you know, this is where we got to take a shot. I'm glad I took profit on those two contracts from here up to here. That was at least a decent call. All right, so 11:41, we've got about 3.5 minutes until this closes. A lot of support here. This is kind of right in that general area where I just was comfortable getting in. It just kind of went, you know, gold moves $3-4 against you. Suddenly, you know, you're taking heat for $300-400 a contract. I mean, when you can try and avoid it, it's nice, but not always easy. I prefer to, you know, if I'm taking heat of $50-60, $100, and I feel like it could go lower, I'll cut that and try and get in a little bit lower. Sometimes it works, sometimes it doesn't. Right now, I'm trying to get long down here at about 2054-ish. Just hanging on here, guys. Stretching. I mean, because I got to ask myself on the hourly, really, are we going to reverse now and get into a trend run to the downside? I'm betting no. Of course, it could happen, but I'm going to take a shot. Depending where this closes, this is an important close for me. And we've still got about 15 minutes left until this hourly close. I'm going to make the decision here on this 15-minute close in about a minute and a half. Looking to long gold. Again, 10-year sitting near the high of the day. Dollar, you know, not getting too strong against the euro. Pretty stable there. Crude's rebounding a little, which is nice. I think we got to like the gold here. Yes, stable, 48.08. I mean, should be a lot of support down here. Famous last words. Should be a lot of support down here. Let's see. We got about 45 seconds left. All right, I'm long one from 56.9. And if we go lower, might add, we'll see. Got 30 seconds left in this bar. I'd like it to close up in here. Seconds. I want to see some buying coming in. I'm long one from 56.9, and if we test down here, I'm going to probably add another one, but I'll let you know. Right now, I'm just hanging on to the one. I mean, there's a lot of support here, so let's see what happens. Not making it easy for us today. I'm not adding. I'm going to just watch this for a sec. Dollar's getting a little stronger. Silver's getting a little weaker. 10 years getting a little weaker. I think we're probably going to head down here. 53. I'm holding for now. Not liking this at the moment. Want to see that support come in here. Just holding on to the one. We really want to see some buying come in here. If gold can be worth its salt. We'll see. Another pretty poor entry, but it's tough to get it exact, you know, especially it's a lot of volatility today. Crude's breaking down through 73. That's got me a little concerned. That's the war trade. See if gold can try and punch. $10-year still staying up near its high. Dollar's getting a little stronger against the euro, which is a little, it's weighing on gold here. I'm not liking the behavior so far right here. Still got here's our 2055 area. It's still a low volume node for now, but we want to see price reject to the upside here soon, or I'm not going to be digging it. Holding for now. We want this to reject back up. I mean, with that low volume area there on the daily profile. Just crude's got me a little concerned. Hanging in on the long for now, but I'm not feeling great about it. That's what we want to see. We want to see snaps back up. See the selling coming in there. Yeah, crude's leaking lower too. Dollar's getting a little stronger. This it's a tricky trade, you guys. I'm holding for now, but not crazy about what I'm seeing here. $20.55 is the key level. It's either got to hold or it's just gonna smash right down and through it. I'm glad I covered those two contracts, or got out of those two up there at least. You can just see they're pressing. I'm going to probably have to cut it because it's not responding. I'm cutting. I'm out. So I'm break even on gold overall. I gave back those profits. I'm up basically on this whole situation here. I basically took a break even on gold. So I'm just down that crude trade. That's fine. I'm up 20 bucks on gold. So down 670 on the day plus some commissions. Just going to continue to see what's going on here. Getting a little bit late, so we'll see what happens. But I think I've managed this trade well, because what I'm looking for in this gold trade is I'm looking for this to, if that support level is valid, we should be headed back to those highs. We're not, right? So essentially I took a break even on this trade, even though I managed it a little differently, but I'm okay with that. I think that's because of the way that I managed those first two contracts and got out there and then took that second one, put the first contract back on there, even though I took a loss on that. The overall trade itself, break even, not bad considering the support level that I thought should have held here is not holding. So we'll see. It'll probably reverse to the upside now, right? That's how it usually works. But let's regroup. Deep breath. Not the easiest day. We're having some pretty wicked reversals. Not the easiest week, but so far, no major damage. Doing all right. Be nice to get something, but some days everything works. Some days things don't work. So far today, not a horrible day yet. All right, so let's just check in here. So it's 11:53. The 10-year is holding up fine. The dollar here is why that gold trade is trying to break lower. It's King Dollar trying to what us in the rear. So this is why gold is dropping, because the dollar is getting stronger right here. So question is the dollar going to stabilize? Crude, I mean, this is also what was making me nervous about the the gold trade, is because just look at this move to the downside here on crude. I mean, this is just absolutely shocking. I think crude is setting up for a big move up next week. They're just ramming it lower. I can see it on the daily and the weekly charts. So just got to stay patient. Not very snappy on GC or CL. Yeah, exactly. It's, hey, that's the way it goes. If I take 20 of those trades, 10 of them will work, 10 of them won't. And the 10 that work will make a lot more than the 10 that don't. On those two trades, that was one loss and one break even, essentially. So yesterday break even, today one break even, one loss. So last three trades, two break even trades and one loss. That's all right. One decent win will pay for a lot of that. Gotta wait until it comes. Yeah, I think they're setting up for something next week, because this is just, it's kind of strange price action, It's like, I'm okay. I'm doing what I'm doing. I'm picking out levels, giving stuff a chance. But, I'm very happy with the gold management there, because if you look at gold, let's just say that I, just held on to those two contracts for dear life. I mean, I would have taken a decent little loss there, right? But instead, I think I managed it well based on what I was seeing. And, sometimes levels fail. This level is currently failing, and I'm happy to have escaped that with a break even, essentially, right? It's not fun. I was almost back to break even on the day, but can't really look at it that way. I had to, treat this trade individually the way it was. And overall, a break even on a broken support level is, fine by me. I mean, crude never gave us a chance. Crude could be setting up. I mean, I'm probably not going to try and get whacked on crude again, but I mean, it's just getting smoked. Probably filling the gap. We closed yesterday at $72 a barrel, so I think it's just headed back down there. And that's probably, I don't know if it's going to rally today, but on the weekly chart, it looks like next week is going to be a big up week for crude. I think we just got to stay patient for that. Take our little smacks on the cheek right now, and then next week, you know, be in a good position to do well. So let's check in on ES. Probably headed back down to the weekly point of control. It's Friday. I'm gonna hang around and wait and see if I see anything good. Even though we're coming into the lunch hour, I might take a little dinner break for me, but you know, something good set up. But just overall, some weeks are just like this, and you know, when you look back on the week, you say to yourself, "Hey, I got out relatively unscathed," and you feel good about that. So we'll see. I don't know how the week's going to end, because I might take another trade if we see something good. But there's just you can see there's just a lot. Markets are searching for balance right now. I mean, it's just incredible. Here's the Russell breaking lower. So, I mean, guys, the party could be getting started for the Russell to the downside. Here we go. You just never know what the universe is going to bring. Sorry, I'm just bringing up the Russ. All right, so here's the Russell 2000. See, because now we got to learn from this, right? We took a little pop on the chin with crude, gave ourselves a chance on gold. Gold was not holding that key level. Crude's not holding that key level. Sure, bonds are being bid, but you know, the dollar's getting stronger now again, so maybe bonds will come off the high, because the Russell, you know, the Russell looks very, very weak here. Very weak. Look at this daily chart for the Russell. You know, popping up. I mean, this is weak. Now we look like we might be breaking. I mean, certainly here on the hourly chart, breaking that right there. There's a lot of resistance now up into that 1970 area for the Russ. So if the dollar now stays strong, crude keeps dropping, gold keeps dropping, I would expect bonds to pull off, and stocks, I would expect the indices to shit the bed. So let's see. Hope you guys are having fun watching me lose money. But hey, life could be worse. I'm in Sweden. I have a beautiful fake sun lamp. What else could you ask for? All right, there's the 12 o'clock close. We got to do the quick check here, see what we got taken. Look at ES. There's some support here on ES, but given what we just talked about, I mean, I'm not buying that. Russell's looking super weak. So I mean, I'm not making any financial advice, but I think this is a very dangerous support level, as enticing as it is. So I would be very careful there for the ES longs. Let's look at the NASDAQ. Yeah, I think these things, right now, the ES and the NASDAQ, they could bounce. They might head lower. I think they're going to head lower. The Dow certainly looks weak. Let's look at the Russell. Yeah. I mean, if the Russell wants to give me a nice pop on the 15-minute up into resistance, I think we might have to shorter. Oh yeah. We've got the weekly volume point of control up around 1980, a little higher. So if we could get an hourly Russell like this, even a 15, but like if we could just get a friendly little pop like this and then just bang into the close, I don't think that that's unrealistic at all. Probably not gonna do that. Probably just gonna head lower. We're breaking back through weekly value on the low side. A lot of resistance now, guys. If you look at this here, 1970, a lot of resistance. So right now on the hourly, this zone up in here, 1970. I mean, another big reversal day. So if we get a pop on the 15, I'll consider it. Got to be careful with the 15-minute chart. Remember, it can be dangerous, as I just showed you on the crude oil trade. When crude shit the bed, take a look at crude. Yeah, I mean, looking back at this trade, everything we had on the scoreboard, the way things were looking in that moment, I don't regret it. It is what it is. I kind of regret going in a little earlier. I mean, I think had I not gone in early there, I wouldn't have gone in there, and then I would have, you know, it was a tricky trade. I probably mismanaged it a little bit, but hey, what are you going to do? Sometimes things happen. You got to take the punches and roll. So, dollar's getting strong. Look, I mean, this is interesting. You know, I wonder if Kashkari said something at his little get together there with the boys at the Brandy Club and the cigars. I got to have my cigar in a little while. Because all of a sudden we're getting this big reversal. Dollar's picking up strength. Crude's not finding support. Gold's not finding support. Silver's reversing. I mean, platinum, huge reversal. So these are interesting days. Yeah, I think silver is going to be setting up some potential shorts. It looks like everything's breaking down. I'm going to keep a close eye on this because I think we're in short city, you guys. What do you think, Steven? Are we in short city? What do your charts tell you? My charts tell me we're in short city. And I do prefer shorting. I don't know why. I just always have. So I'm going to just use the restroom. Steven, let me know if we're in short city. Let me know what your charts are looking like. And we're going to be getting some shorts going. We're a long way from this day being over. I have a feeling I'm either going to end this day down about $2,000 or up, you know, a couple grand. I don't think it's going to stay where it's at right now. We'll see. It's just kind of my feeling. I'm not going to force anything, but the market is just looking like it wants to go lower now, and I'm going to have to participate. I'm going to have to take some risk. All right, let me just pause this for a moment. All right, we're back. All right, so we've had some major reversals today. A little bit of a loss on crude, break even on gold, managed that well, happy about that. And I just have to look at the, look at the overall markets here and go, what's happening right now? The opposite is happening. Crude should be rallying on the back of this war, and bond yields are dropping. Gold should be rallying, and yeah, it's got to be short city, Stephen. These markets should be rallying. They're not. Stocks are now breaking lower. The dollar's getting stronger. Bonds are coming off their highs, so yields are picking back up. So we're seeing the opposite happening here. And the Russell, it's the one that I want to focus on from the short side. We're going to keep covering all the markets, but I think we could see a pretty serious drop here. So I'm looking to try and get short the Russell. We got the 15-minute chart and the hourly. We'll keep a look on both. We'll see what happens. But crude, I mean, guys, look at crude. This is the canary in the coal mine, and the canary is dying. It's taking in carbon monoxide. The coal miners got to get out because the canary is dead. Look at crude. I mean, just a wicked hourly trend run. I don't think we're done. I think we're filling the gap. We're going to yesterday's close, $72 a barrel. If crude's going to do that and gold's going to leak lower, I mean, we're going to be looking to short. Let's go ahead and take a look at gold. I think, any pop on gold now needs to be short. The fact that it couldn't hold on to those gains. So see, the opposite is happening. And, just take note, we gave it a chance here because you don't know, right? We're trading the hard right edge. But when I'm in this trade here and I start to see, do you guys see how, Steven, do you see how right when that started to break down, I'm like, I'm out. Unfortunately, I didn't have that chance on crude. I would have lost like $300 less, but it just fucking snapped. But gold here, you could see it. It just wasn't behaving. Snap out. I mean, that was fortunate, right? And now that happened, the opposite is happening. This thing is, it's not rallying when it should. It's not hanging on to these gains, which is, shocking. So we have to take advantage of this. So then we have to ask, who's going to fall the hardest? Well, silver's going to fall hard. Already is. Platinum's already getting hammered. Gold's going to fall. So people are going to be off sides now. This is what I'm trying to say, right? So short city, here we come. Let's look at crude. I mean, crude is still dangerous to short. I'm not going to short crude because, the Houthis could sink a carrier at any moment, which would send crude up about $100 a barrel. That's probably not going to happen, but I want to short crude in this environment, but want to use crude as the canary in the coal mine to get short these other markets. Silver heading down. Look at... kind of enjoying the 15-minute this week. We kind of need it. There's just too much volatility. The hourly chart's just not responding quick enough. Most weeks it does, but this is fine. We get some good reads. Take a look at the ultra bonds. Yeah. I mean, if bonds spike back up there, that'll be a good short, but better short is Russell. If it pops, about 4 minutes coming on to the 12:15 close. It's lunch hour, so we got to be aware of that. Liquidity is probably the lowest during the day at this time, but that also means that these longs can get hammered as they have to start ditching these positions on gold, silver. I mean, look at silver here, you guys. This is just nice. Oh yeah, sneaking back inside the value area. High right there for silver. I think we're headed back to the weekly point of control, 23.20 on silver. So I'm going to keep an eye definitely on this 15-minute trend run, because if silver popped and gave me an opportunity to get short, I do think there's a good chance we're going to head down to 23.20. So I will be looking to short silver. Gold to some extent, but that's still a bit more risky with the war. I think silver is a safer short. Definitely the Russell. Yeah, I like silver, Stephen. I'm glad you like it too. What is it about silver that you like, Stephen? I like the fact that all we did, I mean, this is going to be fuel here. We just went up and retested that high, and we're probably going to close. I think we're going to at least the weekly point of control here. And you can see on silver, we're sneaking back inside the value area high. I think we're getting back down here, 23.17. So you can see the daily point of control now is right up in here, 23.50. I don't think we're going to get back there. I think what's going to happen on silver is if we look here carefully, look at the volume profile, you know, I think we're just going to keep chewing through all this. And then once we get to this low volume area, below 35, that's where I think we're going to chew through that and come back down here. Probably end up shifting the point of control all the way back down here is my guess. So I think silver is a good short if we can stay patient and get a pullback on the 15-minute chart. So that's where I'm at. Ez, you still here? Or you gone? Well, guys, we got Martin Luther King Day on Monday. I keep forgetting, but this is an important holiday weekend close. Very, very important. You like that it's moving back to volume, and gold just pissed me off today? Exactly. Me too. Yeah, well, this is how, you know, it's a good lesson in trading that this is how we use the opposite scenario, right? Like we're seeing a big change of tide here. So, okay, we took a little bit of a loss. It is what it is. I think we're going to just, silver and gold are going to head down into the close with crude is what it looks like to me. So we could have some pretty good opportunities here. And the Russell, but I even think silver is going to be better. But the Russell, the area I'm looking at, you know, this is going to have to pop a little more. I think silver is going to drop even more than the Russell now. Because I think the Russell's really getting to drop next week. But if we get a good pop on the Russell, that's not enough of a pop for me. We're waiting for the cream. Want to see the cream? Here's ultra bonds. We're not getting a short there on gold. Nope. Flying. You see, but this is also just a good, you know, just important in terms of risk management. Look at gold just getting smoked, right? So this is how we manage risk, right? You don't just hold on to this long, and you know, some people keep adding and they keep no. You know, you take your shot on the chin and you move on. Just like crude, you just move on. I just think that that's really important. So now if silver could give a nice little pop back up here to 23.44, hourly true average up in there, you know, we're in a decent spot on the volume profile. I like, you know, oh, you got the weekly value area high. That'd be a great spot. I might even set an order to short up there. Because look here, sneaking back in. That's exactly what crude did. Watch. Look here at crude. See, crude is where I longed it here. It's like, nope, because I thought the value area high was going to be support, and nope. So this is happening right now on silver. If we look right here, guys, boom, right there. So I don't think we're going back above that 40 level. Let's try and get short at 40, because I think we're going to see a very similar situation here. Now crude just, you know, leak low. I think we're going to see that in silver. So I got to set an order, I think, to get short silver. Up here at 40, I think, is where silver is going to get shut down. We're going to go ahead and set an order to short silver at, you know, 39. Let me just get it open here. Sorry, not 49, 39. I'll let you know. 40 maybe. I'm going to go 40. I've got an order to short one silver at 40. This is going to be the one I'm watching right now. What do you think, Steven? You like shorting silver at 40? I like it. You know, when I trade too, I've got like a daily max, you know, loss. Like if I start to, it's not like in stone, but if I start to approach, you know, $3 grand, that's not a good place to be for me. Usually, I mean, it happens very rarely, but that's why if I go down 700, I'm okay. If I go down 1500, I'm okay. It's not, if I, even 2 grand, I'm okay. So if I start to go down more than that, that's where like my signal's like, okay, just markets aren't good. You're not trading well. Just go on to the next day. You know, that's how I like to play it. Yeah, I've got an order, well, 40. I've got an order to short SI at 40 right now. And the reason is, I think you see what we're seeing on SI. I mean, all the reasons I already gave, right? Crude's breaking down. It shouldn't. Gold's breaking down. It shouldn't. The dollar's getting stronger. Stocks are breaking down. Bonds are pulling off their high. We're seeing a big reversal today. And this shouldn't be happening with, you know, what's going on in the Middle East and everything else. So people are off sides right here, right? So we're seeing a big reversal. So look at what I already showed you what crude did, how when it snuck back in the weekly value area high, that was it. Just off we go to the downside. Silver is doing that now. I'm just hoping we can get a pop to short it, which is why I have the order at 40. But look at gold. You see the hourly here on silver? Hey, like, look at this very carefully. Now look at gold, where we bought. You see how we bought gold right in there? And then just now it's like, so right now on silver, we're seeing the same thing. And I think it's just going to keep heading lower. And I like what I'm seeing on the weekly volume profile. The only question with silver is where are we gonna, you know, will we be able to get short a little higher up? I don't know, because I think there's a lot of people off sides right here. But I'm gonna leave the order at 40 for now and just take this bar by bar, keeping an eye on the other markets as well. ES pullback, you know, what do you mean, Steven? ES pullback to go short ES? Is that what you're talking about? If so, I think there are better markets. Certainly wouldn't be buying ES, that's for sure, because we're seeing a big reversal here. But Russell, I'm waiting. You know, if we get a nice pop on the, like, here's the hourly, right? I'm just waiting on the Russell. If the Russell can punch up here on the hourly, I will definitely look to get short. So I'm keeping an eye on the Russell. I think if you have to choose one of the indices to short, the Russell's the one to play. And we may not shit the bed today on the indices, but I think rallies are, I don't like to use words like definitely, but it looks like rallies are going to be capped. And, you know, we could have an opportunity here. So Russell, I'm looking to short on, you know, bounces. Definitely bonds now. If we punch back up in here, I'm going to be interested in. This is the Ultra bond. Gold, I'm looking to pop. I'm looking to short if we pop. Silver, I've got the order in. I'm waiting to short if we pop. Those are the ones I'm interested in at the moment. Does that answer your question, Stephen? Chocolate. Should wait until I have some food. Okay, silver is moving a little now. We had the grain report at noon, so that's interesting. Let's just see, you know, I think with silver here, we're going to see, I think even 38. I'm going to try and get short at 38 on silver. Moving the order from 40 to 38. It doesn't look like it looks heavy. It's because people are trapped right now. So I'm trying to get short silver at 38. And if it worked out and we got filled and it had, you know, my target would be down around the weekly point of control, you know, or around 20. So, and if I saw it working, I would add. We'll see. Or it'll fill our short and we get blown out of the water. Okay. I don't think so. I think it's looking, I feel, these are the trades I like. I feel better about this than I did about the crude and the gold trade. This one I'm very eager to take. Yeah, exactly. That's what I think, Stephen. I think I wouldn't chase indices to the downside, but if they pop, I think they're going to be sold into. I think bonds are going to be sold into. I think gold and silver are going to be sold into. It's looking like that. I've got the order to short silver right now at 38. So here's bonds, but bonds I would, you know, they're not, I would wait for the hourly on bonds. If we got up here, you know, could be a good short. I'm waiting on bonds. Russell's kind of similar. I think we're going to be range bound, but definitely looking to get short up in here on the Russell if we get up there, which would be fantastic. Gold and silver are going to be heavier. In RDC, they are. So, I mean, look at silver. It's just getting smoked. Just because of the fact that, I mean, silver gapped open up and just took off and then just got slammed. I mean, with the dollar getting stronger and silver not, yeah, this is right now it's looking like a good short. So I'm just going to keep trailing my short order at little, you know, levels here that I like. So with silver, I've got the order now at 38, but I'm, you know, depending where this closes here in a few minutes, I may have to lower it to 36, 36 and a half. I mean, I don't want to chase too much, but the 36 to 40 levels, you know, it's a pretty good resistance now. As long, I mean, if my target's, you know, 20 on this, so I don't want to go too much lower here without, you know, I'd like it to pop a little bit, but unlikely. Just, we'll see. Port up in here. Silver can be wild. We can get a pop. I might have to have my chocolate again. Okay. 6:25 p.m. here in Sweden. Sponsored by Lindt. Beautiful. People go, oh, Sweden, is that where all the chocolate is? Like, no, that's Switzerland. Really funny. Oh, stand away from the mic so you guys don't have to hear me chew. Here's ES. Rally's being capped. Oh yeah, gold's going down now. That was a key level, Stephen, that we bought. That's why I bought it. It was a key level. The fact that it's not holding, I mean, gold is not looking good. It's weird. We got war in the Middle East, fresh airstrikes. We got Houthis targeting ships, and gold and crude can't hold a fucking rally. That tells us something. Sorry for my swearing, but kind of fun. I'll mute for you guys while I eat. All right. I'm probably going to lower my silver order to 36. Yeah, but you know, Stephen, looking back, everything is always clear, right? It's in the moment. It's right. That's the game. It's hard to see when things are happening. Because it could have rallied off that 56 level, and it tried to. But then we could see it breaking down. You know, that's why I dumped it at whatever I dumped it at 50. You know, right as I could see it was going to chew through 55, I bailed and I got out. I think that was a good exit. If you got out around that 55 level, I think that was good. All right, I'm trying to get short silver at 36. I'm being a little aggressive here on lowering my entry, but I think there's just so many longs off sides right now. Just see what kind of bounce we get. Okay, so you bailed at 52, which was I'm just looking at gold. Yeah, so you bailed down in here. Yeah, exactly. That's why I bailed there at 55, because that was the support level that was breaking. I thought, no, I'm not taking this. But you know, it's the way trading works. You live and you learn. I should have bailed on crude sooner. My instincts kind of told me to, but we were at a key support level. That crude was a little unfortunate. Those are the ones that happen sometimes. Like, I was kind of, you know, I thought I should take about a $350, $400 max loss on crude, and then it just, you know, smashed through that support, and I just got out very quickly. I was like, okay, I lost 690. So sometimes that happens. You know, I don't like stops, because overall I trade much better without them. I'll sometimes put them in. I thought with crude to the long side there, I thought we had a good bet. But that's in the past. That's neither here nor there. Now we got to focus on shorting silver. I got the order at 36. Coming up on 12:30. There's the Russ. Ultra bonds trying to push higher. I mean, I can't chase this down here on silver, but look how weak this is. Look at crude. The SI on the daily, Steven, I think, I don't know, it's anybody's guess, but there's quite a lot of support at 23.10. I wouldn't be surprised to see us finish the day around there. Kind of my, I don't know if it's going to fill the gap, but you know, today, you never know. But 23, it's going to have to chew through 23.10. That would be first stop 23.20, second stop 23.10. It'd be nice if we could get some kind of a bounce and get short and get some good action. Bring up ES. I don't know why ES is just, every time I click on it, it just takes forever to load, but change. So the indices, I'm just waiting for pop. And I'm not, I mean, these are my least favorite. The Russell would be the one I'd be interested in. But I'm waiting for the Russell to pop. Ultra bonds kind of similar. If we got a pop up here to 134, so 130 and then 430 seconds in there, we'll see. I mean, gold, any kind of a decent pop, which, I mean, look at gold. Silver too, just getting smoked. This is when it's just, this was the spot to get short silver here. But no, it's just been straight. I mean, silver's just, it's just straight down. That's hard. Like, even if you want to get short, what are you supposed to do? I guess, yeah, you could be super aggressive and you could just get in at market right now, and if it keeps falling, you'll make money. But if it pulls back, it's not fun to sit through those pullbacks. There are days where I'll just get in at market, you know, aggressively on a breakout, but it's rare. There are all kinds of different days. Still got a lot of resistance up there at 36. So I've got my order resting at 36, and I'll let you know if I do anything with it, but right now it's there. The darn, like there's this emoji thingy on the chat, so like covering some of the text, it's so annoying. How does, so what do you talk, I don't understand your message, Stephen, because it's, you said how does my usually move? So what do you mean by my? Just let me know and I'll try and clarify. An eye here. Oh, NG. Yeah, I don't trade NG that often. I mean, it's kind of an outlier. It's a bit wacky. Thanks for reminding me. I haven't even looked at it. You know, that weekly bar right there on NG is just not. There's been some good patterns on natural gas. I gotta maybe take a bit more of a closer look at natural gas. Look at copper. Copper's just getting smoked. Get platinum. Gonna stretch. Gold, I mean. Russell. Bonds. And silver's just the dropping. I've got the order in silver. You never know, you know, look, silver just jumped up right there. A couple of cents. Silver can get a little crazy. Even the order for now. What did the grains do? Oh, look at that. Wow. That's corn. Look at that. That's the grain report. I don't trade these enough to know. We have enough clarity on our other markets, but that's fun to see. Just smoked. Wow. I mean, I can keep an eye on these if corn pulls back. Everything is just, there's no support on corn anywhere. Interesting. Might as well take a quick peek at wheat. Yep. I mean, the ags could be some good shorting until they close. You know, they close a little bit earlier. Look at soybeans. Oh, wow. I mean, just look at this. I mean, this is like a total liquidation day, as we can see. Looks like what it's turning into. I still got my order on silver, by the way. Just clicking through stuff here. Bitcoin's at 43. Wow, look at Bitcoin, you guys. Look at that. I mean, look, a lot. The Bitcoin bros are not happy. Look at the weekly here. This is weekly Bitcoin. Look at that reversal. Getting smoked. I mean, guys, this is good. Everything's dropping. We just gotta find some good shorts. There's Bitcoin. So, you know, if Bitcoin gave us an hourly close up in here, I'd short it. I will take a Bitcoin trade if I have to. Maybe a mini Bitcoin. I forget what it, I think it's worth 1 Bitcoin, the mini Bitcoin. Here is, so would you, palladium and platinum? Is that what you're asking about, Steven? Platinum is here. Platinum's just tanking. So, yeah, I mean, if we got a pop on platinum, any of these, so we got to keep an eye on palladium. It's too thin. Platinum's fine. Here's copper. Look at this, just straight down. Silver, trying to any kind of a bounce. Even though my order's in, that's just if I get lucky and get filled. But I'll also, if we pop and I get a close, you know, like gold here. If gold was to go back to 2050, that could send silver up here to, you know, 23, 33, 34. I'd be interested there. So we'll see. Right now I'm going to leave it at 36, but I mean, crude. Very interesting day. I mean, look at crude on the week. Look at this. Last 2 weeks. That's tough. That is tough. So it's 1240. We're going to have to just check. Is everything flying to the downside? Oh, yeah. Yeah, everything's getting crushed. I think. Oh, this is, I don't want to really look at. I'm going to have to probably even take the livestock off because there's just too many other markets to look at and they don't have good hourly closes. Oh, here's soybean oil. I mean, wow. Yeah, everything is just, nobody wants to hold anything heading into MLK. So I think the indices, they're the only ones kind of hanging up at the moment. Everything else is collapsing. So you got to think they're going to catch down. So if I get a pop on the Russell, I will short. But it's got to pop a little bit. I mean, oh, yeah. All right, so gold, we're trying to get back down inside. Key area for gold, 2044. So if we got a pop to 2050, I don't know if I'm more interested in silver, but we're not, look at this, it's just straight down. That's all right. That's what happens. The day is young. We'll have several hours to the close. $12.42. So we've got the close of these 15-minute bars coming up soon. My silver order is still in, but not looking like it's going to get filled now. There's copper, platinum, crude. I mean, look, crude just, I think crude's going back down. I mean, people are so off sides right now on crude. I think crude's going, I said 72. That's yesterday's close. I mean, we'll see, but looks like go all the way back down to 71. I think things are just going to keep dropping into the close and just, I think we can see that, which is nice. So hopefully we can, you know, get some opportunities to take advantage of that. I think everybody else is going to like, you know, this trading is not easy if you haven't done it for a long time. There's probably a lot of people now that are just like, keep buying crude as it keeps heading lower. It's like, no, we can see this is not a good place. And as they keep buying, it's going to keep dropping, because then they're going to have to keep liquidating as they realize they're wrong. I think the big money has this market right where it wants it right now. Any kind of a pop on Russell. I know I keep repeating myself, but the reason is because I'm cycling through, you know, so many markets. I have to keep myself up to speed on what's going on. Russell, we're not getting a pop yet. Ultra bonds, still waiting for a pop up there. Gold, if we got something up into 2050 up in here, I would consider it. But I want to see a good 15-minute close. I think gold still, silver's the better short. Silver's leading us to the downside, so probably wouldn't short gold, because if gold pops, silver should pop too, and I would much rather take silver because it's a lot weaker. So we've got the 15-minute close here in 30 seconds, waiting to short silver. Got the order at 23.36. Probably not going to get back up there. So really at this point, anything on silver up into 23.30, 23.32, got to look to get short. I'm just going to cancel that order so I can get ready to fire at market if I have to. I mean, I don't think there's going to be any let up for this market today. Crude's going to keep going lower, it looks like. Gold and silver are going lower. Everybody's offsides. Everybody's, you know what, right? They're taking it right where they don't want to take it. We took it on the chin a little bit with crude, but we're doing all right. Got out at a good spot. Now we just have to stay patient and try and short one of these markets. Oh, not yet. There's the 15-minute close right there. See if anything popped. I mean, grains are getting smoked. See if anything on the grains. Let's look at corn. Big crop report. Look at this, you guys. Ooh. So everything's liquidating. The dollar's getting stronger. Huge reversal days. I mean, that's the thing too. When you look at the scoreboard every day, right? Earlier, the way that after PPI, the way that bonds popped, the dollar got weak against the euro, right? Crude was popping, gold was popping. So everything was like, we are off and running, and it looked good. And the fact that that's all reversing right now, the way it is, the opposite is happening, which means there is some opportunity here to play the short side. So we want to wait for a nice short on the Russell. If we can just get a pop up into 1980, we'll see what happens there. Ultra bonds, anything up into 134 right here, 130 or 30 seconds or higher. Gold, I mean, 2050 is probably going to be super strong, but I mean, silver is what I want, but it's just not. No. Silver is one of these markets, you don't pin it right, you get in and it goes against you 10 cents real quick. It's not fun. You got to be careful with silver. That's why I'm just waiting to get a pullback. I mean, copper, I'll short anything at this point. I just need a little bit of a pop on something. I'm not chasing it right now. Here's platinum. Believe me, guys, I'm tempted just to chase it, but I can't. In the long run, chasing is just not a good idea. But it'd be great. I mean, even crude at this point. I don't want to short crude because, like I said, you get one missile, you know, fired at a carrier and you're short crude, and you know, you're immediately down $50,000 because it just went $50 a barrel. That's not a good position to be in. So I'm not going to short crude, but I'm hoping crude can bounce and give the market a little bit of hope and drag silver up with it, maybe gold, and then we can just get short and get this short party started. And it does look like crude's going to rally next week. I mean, I think they're just driving it down. And wherever the pain is, that's where the market is going. Right now, the pain trade is down in crude, down in gold, down in silver, because everybody, you know, who got long and held long, they now have to liquidate. And that's why we're seeing this drop, and that's why we want to get short on a pop. Look at the Russell. I mean, it just can't even manifest any kind of a bounce. I mean, ultra bonds. Guys, everything is shitting the bed. Why don't I get short? I'm trying. In hindsight, it's easy, right? We're trading the hard right edge. And when you short silver on any, sure, in hindsight, it looks very easy, but you know, you could get a pop at any moment. And it's just better to wait. Because imagine, you know, here on gold, right? Yeah, exactly. The CME is closed on Monday. So Martin Luther King Day. I think, you know, we got a holiday weekend. Everybody's looking at this. As this thing keeps dropping into the close this afternoon, I think more and more people are going to be like, I don't want to hold this into the holiday weekend. They're going to dump. It's going to accelerate. You know, this is going to be sweet. So, yeah, the holiday weekend's a big deal. I think we're patient. We can get a good trade here. Man, been at this for over 5 hours now. And this is, you just never know when these opportunities are going to come. You know, some days, like Monday, Tuesday this week, just stopped early. But this is the day where there's some opportunities present. Got to keep at it. So gold getting a little bit of a bounce. Silver getting a little bit. Nope. Come on. Coming up upon 1 o'clock. Just going to recheck the calendar here, make sure. Let's see what Zero Hedge has to say. Feels like Kashkari must have said something at his meeting, you know. Checking the news, you guys. Look, crude is not able to rally. Fresh on the news right now. It says attack on U.S. base at Syrian oil field after coalition bombs Yemen. So oil fields are getting bombed and crude can't rally. That's how weak this market is. It's incredible. I might short a bounce on crude. Just take the risk. Because this is just insane. Let's make sure we don't have any more news coming out. We have the quarterly grain stocks at 12. We know that. Oh, we've got the oil rig count at 1. See, this is why I always check the news, you guys, constantly, because there's just all these little announcements for each one of these markets that can catch you off guard. So there's an oil rig, Baker Hughes oil rig count. You know, that can move crude. That's coming out at 1. So good that we checked. I kind of have a habit of checking, you know, when just before, obviously the 8:30 announcements, you know, CPI, non-farm payrolls, those you always remember. The Fed meetings, those are easy, but it's these sneaky little ones like grain reports and oil rig count. But you know, they always come out at like 10 a.m., you know, 9:45, 1 p.m. So I kind of have a habit of just checking, you know, just in case. So we do have a crude oil announcement coming out. There's no, I mean, if crude rallies, it's just going to get hammered and sold into, because it can't even rally as oil fields are getting blown up and the US and the UK are bombing Yemen. It's just getting sold into always. We'd have to have, if we got a little, you know, like a decent pop on the oil rig count. We're right back at the weekly point of control for crude. So the value area high up around 73.60 is game. Let's look at the Russell. Look at this, just sitting here. It's getting ready to drop. Ultra bonds dropping, rates heading higher. It's painting a beautiful picture for the afternoon here. Beautiful. I think we're gonna make some money, you guys. Don't quote me. Famous last words, but it's looking good. I gotta stretch and get ready. They say trading is not physical labor, but when you have a standing desk and you stand here sometimes for 8 hours straight, kind of it. Gotta stretch, guys. Stretching. Ready for the 1 o'clock close. You guys want to play some tennis? Kind of entertaining myself, you guys, because I'm getting excited about shorting this market. All right. Back to, so gold's punching up in it. There we go. What I want to see is, you know, gold's above the value area high. I mean, I just can't. It's gonna head down back into the value area. There's just no way it's not. Again, who knows? But just so weak. So is silver able to rally? Oh, good. Silver is rallying a little bit. Okay, so come on, silver. You can push a little higher. That might be all she wrote right there. Yeah, but I said gold I got to be a little bit careful on just because silver is definitely the weaker. Look at copper not able to rally. Platinum. That oil report's coming out. See, you know, dollar strong, bonds dropping, yields rising. Come on, silver, push higher. I've got my silver DOM open. That's the one I'm still most interested in. And, you know, I got to watch my emotions because I'm getting a little excited here. Excitement can flood the brain with dopamine and start making stupid decisions. So I got to calm down. Look. I mean, 40 is a great area for silver. That's the top of the weekly value area. That would be a gift. Come on, keep going, silver. Check out the daily volume profile here. Not giving us too much information, but I don't, you know, we kind of got down to 20. That was my first stop. So we could rally anywhere back up in here would be great. If the Russell's doing anything. We're heading into 1 p.m., you guys. We got 4 minutes to go. Yeah, at least stuff is happening, Steven. Exactly. This is the kind of day we want. This is, you know, when it develops, this is when you got to get the cannons out and start, you know, getting ready to put on some risk. Here's the Russell. We're waiting. Ultra bonds. And we're not trading Monday either, so I mean, you never know what's going to happen. But it would be nice to have a good Friday. Here's crude. I mean, look at crude, you guys. Just incredible. I bet you so many people right now are like, we just bombed an oil field. Like, how can crude not hold a rally? It's fantastic. All right. On. Yeah, I need to wait for silver. It's, you know, I gotta wait for something, you know. 36 was really nice up in here. And we might drop from here, but I gotta, because now we, you know, my target area is down around 20. I think we're gonna go to 20 here, but let's see. I might short this. Not getting any pullback. I just don't think we're gonna get it. I'll let you know. I'm kind of interested in this area up here. All right, we've got a minute and 15 seconds until the hourly close. You know, Russell's just doing nothing. We're still waiting to short that. Ultra bonds lower. I mean, gold's trying to rally. Silver's trying, I think. Copper. They look so weak. 45 seconds. See what happens here. We've got 30 seconds till 1 p.m. $15 seconds. Dollar at 109.78. I mean, we got that oil count coming out, so that can filter on into other markets as well. And there's 1 p.m. We got a little bit of support here. I think we're headed lower for sure. This is silver. But, you know, I think 32 is a pretty, you know, if we... I might be interested. Let's just see. I don't have an order because I want to see, because, you know, this is where, you know, it may want to punch back up here now because the hourly had a little drop now. So let's just see. Here's gold. Just gotta wait. When it looks right, it's right. So let's look at crude there with that oil rig count. I mean, you would expect it to bounce a little bit. Platinum, copper. Could be some support down here for copper. Could cause a bounce. I'm gonna wait for good opportunities to get short. This is tempting, I must admit, on silver right here. Very tempting. But I just can't let the tail wag the dog. I can't, you know, the 15-minute chart, sure, it looks kind of like a nice little pullback, but look at the hourly here. It's just, are we going to go up here first or down here? I don't know. This is, you know, tricky because we do have here. I think support's going to break. It looks weak, but you have some support here and here. So I would prefer to just try and get short. You also got to look at the risk reward profile. You know, I would prefer to get short up in here somewhere. So I'm just going to keep an eye on silver. I would love to get short around, I mean, 23.40. I don't know if we're going to get that gift, but 23.40 is my level to watch. Got the hourly near high here. You got the weekly right here. You got the value area high. That's a good spot to try and wait to get short. And on the volume profile here for the daily, if we look at where's 23.40. I mean, here's a little low volume area here. If we could just punch up and through that to this side and then get shut back down. Let's see. Very exciting. I mean, I have to, I'm sitting on my hands right now. I'm so tempted to just short silver here. So tempted. But it's just, if I'm going to short any market, I have to, especially when I use the 15-minute, I'm aware of the danger. I have to look at the hourly and go, okay, am I in hourly resistance? Any kind of hourly resistance? I'm not. So I'm actually in hourly support. Now, I think the support's going to break, but I just, I like to wait until I'm in. If I want to buy hourly support, then if I'm in support, that's what I'll take it. If I want to sell, I want to get short, I got to see if I'm in hourly resistance. And right now, I'm not in hourly resistance. That, you know, sometimes you miss trades, but you also stay out of a lot of bad trades. And just like when we took, you know, that break even on gold here, you know, look, even though gold shit the bed, you know, I bought 2 contracts here and had a nice piece of that, and then bought that other contract there because that was before I knew it was going to shit the bed. And then, you know, took a little bit of loss, broke even overall here, right? But this is why, because we were in this critical hourly support level. This is what has the chance, when you catch these, to fire it back up here. You know, these can give you the winners that will pay for all these losses. That's why I'm very careful. And my 4-year-old's having a meltdown, which is very exciting. But it is getting late here. It's 7 p.m., so she's getting tired. It's only 1 p.m. We got, you know, a few hours of some good action here, and I think patience will win the day. Russell here, we're waiting for a pop. Ultra bonds. Ultra bonds are going to close down near the lows, I think. Looking at this daily pattern, I think ultra bonds are closing down here, which means rates are going higher. It means the market, gold, silver, crude, they're just not going to like this. This thing is just a very, very clear picture. There's gold. There's silver. Yeah, a little bit of a counter rally on silver up in here. You suck in some eager longs and then just bam, short. That's what I want. And I love that weekly value area there. Even it's been a fun first week. I feel like I'm kind of getting into the flow of it as well. I'm familiarizing myself with the streaming software, so I'm thinking less about the technical aspect, and I'm able to focus more of my brain power on the trading. So I'm happy about that. And it seems like our the video feed is coming through, right? More or less, it's pretty clear all the time. Yeah, rates higher, stocks should drop. Yeah, I mean, stocks could fight it into the close. I mean, we'll see, but the Russell certainly looks very weak. I mean, I don't care what drops. I'm just going to short whatever. I think the metals are going to, you got to look the way I like to do this, Stephen, is in this particular situation, who's the most offsides right now? Who is getting, you know what, right up the you know what? Who's that happening to? I'm not even going to, what do you think? Who's really, where's the pain trade right now? Yeah, when I'm on a rant, yeah. No, that's fine. You can type questions anytime. I mean, if I see them and you know, I'll just keep ranting if I'm ranting. But yeah, you know, the pain trade is gold, silver, bonds. I think the higher rates are going to really continue to weigh on gold, silver, copper, platinum the rest of the day, crude. And I do think the indices will follow lower. I don't see these rallying into the close. So we have a pretty good tactical advantage here waiting for, for example, the Russell. If we can just get a nice little bounce, I would love to get short the Russell, especially if the bonds keep dropping. I mean, look at ultra bonds here. This is beautiful. I think bonds are going to trend into the close. So even bonds, like, look to short bonds here at some point. Silver, we're just waiting for a little bit of a pop here. Look, crude just cannot rally. And I think that the reason crude can't rally is because the real economy is slowing down. We're heading into recession. The yield curve is uninverting. And, the Fed has never, they raised rates hard and fast. It takes, 6 months to a year of lag time for that tightening to get into the economy. We're there now. So crude is telling us that can't even rally when oil fields are getting bombed. Recessionary. I think we're going to rally next week, but let's see. That'll be interesting, right? But certainly today, the fact that it can't rally, got higher rates. Incredible. We should see a little bit of a pop here to like at least up in here. I mean, platinum getting smoked. Copper. So silver, it'd be nice. We just be patient and wait for a little bounce. It's like the yesterday with the one I waited for, with the Russell. That was a really good, we waited, good level, shorted. Yeah, it didn't work out and I basically broke even because I managed to risk well. But those are the trades that I know if I take 20 of those, I'm going to have 10 nice winners. I'm going to have 10 losses of varying sizes, but I'll manage the risk as good as I can. And that's a great edge. And it comes again and again and again if you wait for the right spots. That's really a key, is just waiting for the right spot. And right now for me, silver, the right spot is up here around 40 for a lot of reasons. Yesterday when I shorted the Russell, just so happened on that day, stocks were going to keep melting up into the close. Today, I'm going to try and short silver or, whatever else bounces. I don't think it's going to, follow through to the upside today like it did yesterday with the Russell. Right, so this is just where all these little details come in. I think, I'm reading your comment here, Stephen. I think indices seems like we keep going high and all-time highs. I don't think the economy doesn't look strong. I mean, all the numbers under the hood show not a weak economy. Yeah, people can't afford their living expenses because of the inflation. There's a lot of signs. The high-paying jobs are fewer than a year ago for sure. Yeah, the jobs report is just, they're really fudging that data. So I think we are heading into recession hard and fast. So that's why I think, even though the market's, the Fed's going to, lower rates. Yeah, they probably will, but they usually wait until something breaks and nothing is broken yet. So I think we're going to have to see a pretty serious correction in this market, which I think it's setting up for the indices. And then, after the markets drop 30 or 40%, the Fed can start lowering again. They'll wait for it to break. I think we're much closer to the top. I think we're at the top right now. We'll see what happens. I think there's going to be some amazing trading in the next couple of months, and I'm like chomping at the bit. This has been just a boring week waiting for stuff to develop, and now we're starting to get a little bit of action heading into the Friday close, which is so nice. So yeah, it's going to be great. Russell, I'm kind of interested up in here. 72. Definitely keep an eye on that. We got 3 minutes until the 15-minute close here. Let me look at the ultra bonds. Gold putting in a little bit of a relief rally. That's good. That's what we want to see. Gold is still stronger than silver and oil, just because, you know, safety metal. But if gold, I'm gonna short more silver. But if gold gets anywhere near these highs, then then I'll short gold. Yeah, the market shows a lot of confusion right now, a lot. And soon, I mean, the picture is going to get very clear. It's coming together. Here's silver. I mean, for me, slow week, just 3 trades this week, 2 break evens essentially, and 1 loss on crude. That's just, I mean, 3 trades. That's very slow. And I asked myself, could it be attributed to the fact that I'm live streaming? I don't think so. I'm taking what I'm seeing. And there's just not a lot, you know. There's been a lot of confusion this week, but now it's kind of setting up for some clarity. Copper. The Bitcoin over here. Checking on corn just for fun. Look at corn. That's good. Everything's bouncing a little, so. Crude's trying to get back to 73. Platinum weak. Copper weak. Silver just still waiting for up there. Just gonna stay patient. I'm gonna use the restroom real quick. I'm just waiting. I'm gonna make a quick bite. So you guys want to take a break? Sorry, I'm muted. I'll be back. I don't know. It's 1:15 right now. So just do a quick check. Looking at the Russell, I'm still waiting for a little bit of a pop. That's not enough of one for me. I'm either waiting to start accelerating to the downside, and then I'll be aggressive jumping in, or I've just got to wait for a pop and get short on any one of these markets, or multiple markets if the opportunity presents itself. So ultra bonds waiting for a pop. Gold's starting to rally a little, but you got to look at gold. I'm more interested up in here somewhere. Silver 23.40. Like if we could get a big punch up here, would be awesome. 44 would be even better. So keep an eye on silver. There is some resistance here on silver, but still in this hourly support area. Crude I think is it's probably, it's due to bounce a little, right? It's just getting smoked, but it's definitely weak. So I'm just waiting, you guys. So I'm gonna leave. You want me to leave a particular market up for you, Steven? If you're gonna watch, do you want me to leave one up here? I can move my little be right back sign out of the way so you can see the charts if you want, or if you don't care, I'll just put it up and go. Let me know. I'll wait a minute or two. Or you can watch ES if you like to watch ES. Yeah, it's going to definitely change the markets around. For sure. It's it's all about how do you do over a year. That's when you really get to see day in and day out. Okay, you want to watch CL? Okay, let's go to CL, which we're on. Okay, cool. All right, then what I'm going to do, that I'm leaving, so I don't need to put my be right back thing. So what I will do is just mute the mic and kill the webcam, because I'm going to eat when I come back too. So, but I'll talk to you guys while I'm eating. So I'm going to kill the webcam, and the be right back thing I'm not going to put up, so you can watch the charts. All right, be back. All right, how we doing, guys? Crude, I see, continues to be unable to hold a rally. I'm cooking some food upstairs, so I'm just checking in here for the 1:30 p.m. 15-minute closes just to see if anything's setting up. Steven, you seen anything? We bouncing on anything? I'm waiting to short. It's good that I get away from the computer too and just cook some food, and because I've been staring at these charts here for going on, gosh, 6 hours. So, and I want to get short, but I want this market to come and give me a good spot. The Russell's going to be weak into the close for sure. I say for sure, but that just means I have a lot of confidence. Obviously, anything can happen. I'm still waiting for the Russell to bounce up. I'm not going to do anything on this close here in a couple minutes at 1:30. And guys, I'm just leaving the webcam off right now because I'm going to eat here soon. Getting close on SI. Okay, cool. Yeah, 34. That's nice. Good. We'll check that in a moment. Let's check Ultra Bonds. Nice. Ultra's putting in a bit of a pop. That's good. Gold. Oh, yeah. Silver. Gosh, I'd like silver to get a little high. Yeah, I mean, I really want silver to get up here to 40. We were trying, but let's see. Copper not joining the party. Look at platinum. Look at crude. Just can't hang on to anything. I mean, gold. I'm not going to short gold here, like I said, but this is, just the higher we go now. I like these, especially silver. Silver is the one that looks really good when you look at all the levels combined. I feel good about silver here if we can just get a good little pop and get a good read. Especially, I mean, bonds are rallying now, but they look bearish the rest of the day. So I think higher rates. I think our picture is intact. I'm feeling good about it. Waiting to short. So here comes 1:30, 20 seconds. There's the Russell. Got to pop more than that. I think maybe the next bar might give us a good potential to short. I'm liking the 15-minute now, Steven. I'm going to think a lot about this over the weekend because it does. We're going to miss fewer trades if we just go through the charts every 15 minutes because oftentimes waiting for the hourly close, I like to really keep cycling through. We're having good discipline on the 15-minute. Like, you can get some good trades. Gotta be careful. I mean, next week I think it's going to return back to normal where you get lots of good trades on the hourly setups. But the 15, when you use it correctly, it's helpful. Like, for example, watching. Yeah, I'll see ya. Watching the 15-minute here on gold was very helpful to manage that trade. So I'm kind of digging it. So yeah, this looks like a nice little short pattern on gold. We're just not high enough to where I want to short it yet. And silver, yeah, it's a nice little, but we're just kind of in no man's land here. You're coming out of support. We don't get resistance till up here. So I'm going to hang tight, you guys. I'm going to cook my food. I will be back shortly. I'm checking in here every 15 minutes or so. I'm waiting to short these markets up in here. You can replay the video, see what I'm looking at, but we're waiting to short. We've got a good read on the market heading into the close, and hopefully we can make some money. All right, I'll be back. I'll leave the charts running for you guys. All right, let's go ahead and see what we've got shaking here. Waiting to get short up here somewhere. We're looking at silver. Might be getting the pop here into the 2 p.m. close. That'll give us the opportunity potentially to get short. You can see the hourly resistance zone up in here. So if the 15-minute could exhaust up into that level, then I would most likely take the short. You know, all other things being equal. We can see here we've got pretty low volume area overall in this general area here that we're getting up into. So I think this should be a good spot to try and get short. Approaching the weekly value area high, which I think should have a lot of resistance. Let's just quickly look at the dollar, euro dollar, 0.986. That's nice. Crude still under a lot of pressure. Gold still struggling at 2050. Ultra bonds, you know, still holding down here. So I think as long as bonds stay subdued and we don't see any major rally in the dollar, that silver will be a good short up here. And if we look at the 30-year, yeah, also looking pretty subdued. I think ES is trying to rally here. We'll see. I think it's going to be futile. I don't think it's going to hold on to this rally. If the Russell gives us a little rally up here, I'm going to have to get short on the Russell. We'll see where we're at. Kind of up in this area somewhere, maybe 1985. Give the Russell a chance to push a little higher. Just looking at the NASDAQ. I mean, what a terrible, just look at this day, you guys. I mean, look at the daily here. The NASDAQ just choppy, terrible week. Here you can see the NASDAQ. I think the ES, you've got quite a lot of resistance up here at 48.30. I'm not going to short the ES because they're all popping. Then I made my choice. It's going to be silver. And I would love silver to try and pop up into, the higher the better. Hopefully we'll get a good opportunity to get short up into 23.38 on silver. I had a nice dinner. Had some potatoes, Swedish style in the oven. Some good meat, and some cheese and some cream. I'm much more relaxed. Got a belly full of food. Blood sugar stable. Ready to go short if we get a good opportunity. And yeah, really excited about the next couple of weeks because I think these markets are going to get volatile in a good way. Whereas this week has just been kind of a tough, boring transition week for the market. So I'm happy being down on that crude oil trade from earlier. And, you know, we'll see what happens. Heading into the close, I'm willing to push it a little bit on silver here if everything else continues to look good for the short. As long as the bonds continue to stay down here, which now it kind of looks like they are. As long as the dollar stays under, you know, 109.90 on the euro futures. Crude is not really able to rally. That's a good thing. Getting a little bit of a rally now, but expected that after that huge drop. So I'm liking the short. So let's see what happens. Oh, here comes the close. We've got the hourly close here in about 25 seconds. So I got to be prepared. I've got the DOM open on silver. I mean, if it punches up into that 38 area, that'd be great. Still not really up into resistance, so I can't short it here because the hourly resistance area is up in this level here. I'm so relaxed after my food that my tongue doesn't work to talk. Well, I've been talking for 7 hours today, so that's understandable. So there is the silver close. A lot of resistance up in here. I'm tempted, I must admit. Just want to see it go a little higher. This is just not an ideal. It's better had it, you know, punched up to 44. Just got to wait for the good ones. Don't want to gamble. It's important. We can get ES here. I continue to probably see a lot of resistance up in this area. The Russell, if it can push a little higher, you know, we've seen these afternoon ramps, so maybe we'll get a push higher here into the last hour of the day, 2 hours of the day. Getting pretty tired, so we'll see how long I can last. Might just have to wait till Monday. Here are the 30-year bonds. I think up in here is the area to look for a short on the 30-year. And I think that's the same with the Ultra. Here's the Ultra bond. Gold, silver. I want to short them, but this is just not a good level right here yet. Silver is very tempting to short here, but it's not ideal. I think we're going to be setting up for some nice trading on Monday. I'm super excited about it. I just have to chalk this week up to a pretty boring week, you know? Sometimes that's the way it goes. And I'm going to be getting ready for one of my cigars soon. I got a nice pack delivered today. Let's look at platinum. Platinum, heading lower, but you could bounce here. Copper, very weak. Crude, oh, crude dropping again. That's just beautiful. All right, I'm short silver. One contract. I hit the bid at 34.5. Let's just, if it starts to go against me really at all, I'll probably bail. I'm looking for this 15-minute chart to push down here. And if it doesn't, then we'll go ahead and call it a day. See, it's getting pretty thin. The spread is pretty wide here on silver as well. I might have to. We'll see. I'll give it a little bit of a chance, but I'm not going to risk too much on this. Maybe a couple $100. There's Ultra bonds. Gold kind of hanging in here. Crude trying to drop. So if crude's dropping, I mean, gold and silver could follow. Platinum and copper still look pretty weak. I think this is just going to be my shot here. One contract, we'll see what happens. If we can catch a little bit of move to the downside, that'd be nice. If it starts to really go against me at all, I'm probably just going to cut it. Let's just see what happens. It's getting late. I don't like afternoon trading, generally speaking. Dollars at 0988. It's very quiet. It's just kind of sitting here. I don't like these markets when it's super quiet like this. Let's go ahead and just cut that. I lost $25 or something. I'm just gonna take a one tick loss there on silver. I can feel that the market is slowing down here heading into this holiday weekend. We're not seeing follow through now like we want to, so I'm probably just gonna have to leave it for today. I can feel that I'm kind of anxious to get short, and I think overall it's been a good day. We lost about $700. I'll tally it up, but 690 on crude, and then broke even on gold, but made 20, and then just gave back 25 on silver. So basically 695 in the red, which is fine. That's the way it goes. And I think overall, just looking back at this week, I'm gonna say that for me to lose 695 throughout this whole week, that's I'm okay with my style of trading, because with my trading, I'm waiting for really good setups that are just clear, and I know that when I get those setups in a good market that I'm clear on, then it's a lot easier to hold the trades and add. So that's what I'm looking for. When we have good days, we can have some good days. So just like to keep the risk managed and chalk it up to a losing week of 695 last week. Well, when I started, I'm only talking about what I'm doing now in terms of streaming. Hey, Steven, I was going to short silver. I actually put it on and then took it right off just with a tick, because I can see the market's kind of slowing down. I can see the spread on silver was jumping, getting pretty wide. So I'm getting ready to wrap it up. So I was just kind of doing a little bit of a summary on the week. It looks like we are slowing down dramatically here heading in. I think the action is going to come next week. So it just feels better to wait and chalk it up to a very slow grinding week. And I was just talking about the fact that as a summary, a little bit of reflection here before I go. I think it was a good week. I'm going to go over some things this weekend. I'm enjoying adjusting to the live streaming. And in terms of a losing week, they do come from time to time. And when they do come, I always, try and keep them small. So to be down 695 on the week is, good for me this week. And we'll just see, how it goes. Really, it's just how do we do the next couple of months. We're going to stream together every day as I trade my accounts. And I'm excited to see where this goes. So this week, just quickly in summary, we'll go ahead and look at the monthly, the weekly. I mean, what you got to look at this week, this is what I want to leave you guys with, because this is so important. And I think it's just something that's just so overlooked. I mean, here's Bitcoin, right? So, I mean, people are bleeding right now on Bitcoin. I mean, this was everybody was getting so excited about that ETF approval. It was going up, going to the moon. Everyone was loading up because the ETF did get approved. And look, I mean, this is violent. This is not fun. So it's important to, from my perspective of trading and, keeping results over the long term is about managing risk. To me, that's what a real trader does. That's why I said, hey, come and learn how to trade the real way, because the real way to me is, being in this for the long haul and managing your risk. And the realities of trading are a lot different than what I see on YouTube, which is what motivated me to come out and start trading. I see, there are probably going to be some more real traders coming out, which would be great. I welcome more of us, because I think that the people, everybody out there on YouTube, it's different than what's being shown. And I think it's good to show a realistic aspect. So I'm excited to do that over the next few months is what I'm saying. And one of the key things I'm going to keep, hammering home is that it's about managing risk first and foremost. So you look at Bitcoin here, big reversal week, not an easy week to trade. A lot of people getting stuck here. Let's go ahead and look at ES. I mean, again, I'm just going to end this with, when we look at ES here, this is the kind of trading where you can make a lot of money. It's just up, up, up. There's no question. The monthly chart, the weekly chart, the daily, they're all in agreement. These are the markets you wait for, whether up or down. And even when you get into a reliable congestion range, right? But this particular week, when you have these change of tides like this, you're heading up for, I mean, look how many weeks this was, guys, on ES. 1, 2, 3, 4, 5, 6. I mean, this is just a lot of weeks up. And then this is last week down. And I was counting on follow through coming into this week. We didn't get it. So these are the difficult weeks when you're looking for follow through and then you punch back up. Now I think we're setting up for, we'll see what happens this weekend with the war and everything else. But as this sits here, this is a lot of resistance, a lot. Depending on where we close today, I think this market, could be getting ready to take a big dive next week. And I'm excited to, you know, once we get some volatility to the downside, there's going to be a lot of money made. So I'm content to just wait for that. In fact, I kind of hope stocks manage to rally into the close a little bit, close near their highs, so that they got the fresh meat. We think we're going long for next week and set up the shorts, you know, to short this market next week. So I'm really looking for shorting this market next week. That's the S&P. We'll quickly just look at the NASDAQ. Same thing, you know, depending where this closes, but I think you're setting up for a pretty big push to the downside next week. I'm really excited about it. The good news is it's going to be one way or the other. I mean, let's just say somehow this market just blasts through all this. I really don't think this is going to happen. But if it does, it tells us something. It says that resistance here should not be breaking. And if it starts to break, we're going to squeeze a lot higher, and we'll take advantage of that too. But I've got to come into the week with a bias, and my bias is here to the downside. And you guys will get used to my trading as we do this every day, but I like to wait until I'm very sure and everything that I'm seeing is matching up, it's happening. And, you know, that's when I'll pull some contracts out of the woodshed. And I try and make the bulk of my money on the trades where it really makes sense to push the pedal down. This week, I didn't see any of that. So this was kind of just grinding and waiting and hoping something would happen. And in the end, not much happened. Even this little drop that we got here this afternoon didn't accelerate. We're pulling back, and now volatility is dying. The liquidity is being pulled out of the market as we head into the holiday weekend for Martin Luther King Day. Look at bonds here. I mean, I'll just look at the Ultra bond. This is looking incredibly weak. We may end up leaking lower, but it's looking pretty quiet right now. But bonds, I mean, this is what you wonder what gives me so much confidence that we're going to be able to probably have some good shorts next week in the market. It's the bond market here. Look at the Ultra bond. This is a beauty. 2-bar push on the monthly. I mean, you've got a lot of resistance here, a lot. And if you look at the quarterly and the yearly, it's really confirming this monthly resistance, right? So what that tells us is that this big reversal down on the weekly on bonds, you notice bonds weren't able to rally this week. So bonds not rallying up means rates not coming down, means stocks are getting out into la-la land without the confirmation of bonds. Bonds are not confirming the move that we're seeing in stocks. And that's why this has been a challenging week, because there's such divergence between bonds and stocks. But ultimately, the question is, who's going to win this battle? Are bonds going to catch up to stocks, or are stocks going to catch down to bonds? I think bonds are going to continue to go lower, rates are going higher, and stocks are going to catch down to bonds. That's my forecast for next week, and I'm really excited to come into next week with, you know, seeing where we open, where we close tonight, where we open Sunday night. It's going to give us a lot of information, but we've got a ton of reason to be bearish bonds here. And I do think that that's going to weigh on stocks. So I'm really excited about that. Steven, you said Tuesday morning could be exciting. Yeah, I can't wait. To be honest, holiday weekends are always the hardest for me because, you know, they're 3 days and I want to get back to the markets. But with that said, this, you know, for me, I'm not used to streaming. So this first week of full-time streaming was a new, you know, I don't usually expend this much energy with my own trading. So I'm looking forward to 3 days of rest, and I'll be ready to go on Tuesday morning. Yeah, cool. I'm really happy that you're here, Steven, and thank you for your kind words. That means a lot. And I'm happy, you know, I think, you know, in the end, it's going to bring a lot of value to you guys, and I'm having a lot of fun learning how to explain my concepts better. And, yeah, I'm super excited about the rest of 2024, starting with next Tuesday. So I'm going to leave you guys. We don't need to go through gold, silver, all that stuff, but needless to say, stocks and bonds, you know, the most important markets, really the bond market is the most important market. And it is telling us, you know, be careful about being long up here on stocks. And I think I know we're going to be on the right side of this, you know, when this thing really starts to accelerate to the downside. So I'm excited about that. And yeah, in the meantime, you know, if you guys are going over any of your charts this weekend, Steven, if you're looking at anything, you want to shoot me an email, you know, if you have any questions, feel free. You know, sometimes I check my email on the weekend. So if I have time, I'll get back to you. Otherwise, I'll just be here on Tuesday morning, you guys. So take care. Have a good day. And thanks for being here with me. I appreciate it. See you guys. Bye.